Black, you never go back. Oh, we're back. Never mind, I was wrong.
I think it was just you going black, mate. So I am nice
Oh, was
and
it? Okay.
limber. Nice and limber, as they say. All right, how's everybody in chat today? It is Thursday. It is the last
It is.
stream for this week.
It's the last
We
stream of
had
the month, mate.
Oh shit, yeah. Today is the last day of the
It
month
is
as
the
well.
last, yeah. Tomorrow is the 1st, I believe. There's no 31st of April, is there?
Indeed,
Yeah.
indeed. The month of Star Wars.
Tis indeed, yeah. May
Yeah.
the 4th coming up this weekend, I
Yeah.
think.
May the 4th be with you.
Yeah, it is. It's Sunday, isn't it? May the 4th? Or is it Monday?
I think it's Monday.
I
It's
think,
Monday.
the more I thought about it, I'm pretty sure it's Monday.
Yeah, it's Monday. I can do my Yoda voice on Monday.
Yeah.
So yesterday we had FOMC. We had the federal fund rate decision, basically. The decided not to cut any basis points. So there you have it. The market itself yesterday initially didn't have much of a response, and then gold started like pushing a little bit lower, didn't sweep any lows. NASDAQ eventually started picking up very nicely. The DXY as well just started picking up nicely as well after FOMC information. DXY currently is taking a bit of a dip. NASDAQ is going up. I am in a NASDAQ long currently.
Nice.
I want to show you. Okay. There we go. I'll show you my long currently. Already taken TP1, hoping for TP2 to get hit, and then I can take my stop loss to break even. If this ends up going down and taking me out, then it is only a 0.25% loss because I've already banked on the TP1 and basically TP1's profit will cancel out basically TP2's stop loss. So only have TP3 and TP4 stop loss that is currently in play. Let's see who's in chat today. First out is Russell Schaefer or Schaeffler. JPY just had strong move down on the 4 hour. JPY. It is on the majors. JPY.
Dude,
yes.
The pound is hella bullish at the moment.
What a sell-off. Jeez. Louise, what a sell-off. Why is that? Well, it is probably because of the Bank of Japan's... No, sorry. I'm on the wrong day. I am on the wrong day. Okay, so there wasn't any news that caused that, unless... Yes, we are nearing the time to take bold action on FX. This is pretty much why. So, is this potentially where quantitative easing is going to come in?
Look at that absolute stunner. Just dropping some news. What a beauty.
Oh. So that's probably why. So they're nearing the point. I mean, we are at that 160 point. We were going to... I think they said that they were going to intervene at 162-ish. I don't know. So maybe it's close. Maybe it's very close to getting intervention there. Euro at this point in time is picking up. Pound as well is picking up. Gold itself has picked up. Volatility in the VIX hasn't really changed much. US 30 should be picking up as well. S&P should be picking up as well. DXY is dropping. Makes sense. And then the NASDAQ was picking up nicely. So let's see whether or not this NASDAQ trade of mine can eventually just take TP2. If it takes TP2, this becomes a risk-free trade, and I can carry on with my life. So, the reason for me entering into this trade is quite simple. If you just look at this, was that rollover candle. So initially, the news event was around about... Where's 8? There we go, 8. So 8 o'clock my time was the FOMC meeting. We had a bit of an attempt to push lower, a reattempt, and we started picking up. And then at the end, while we were having the press conference afterwards, just tried to sank off again, tried again to push lower, but at no point really showed any sort of conviction to try and push price lower. With rollover, we had this push higher, an attempt to push price higher after the open. So we basically had this consolidative section right here, where price consolidated after rollover. Tokyo opened up. Tokyo just, I don't know, didn't really have much in it to push it up. All the way down to down here, which is right about rollover's opening candle. So if we just take that last section there, that's basically where we came into. From there, reacted. We basically had a little bit of consolidation here on the left-hand side just prior to the low of the day. So if you just take that whole section like this, that bit of consolidation. Price tried to go lower, failed, rounded out, nice and slowed momentum here. If you look at the candles compared to the previous candles, very slow. That's fine. Price started pushing up volumetrically from here, attempted to push down again, failed, and then made a fair few bullish candles yet again, breaking the high of this whole section here. You can almost consider it a break and retest continuation. So on the close of this candle entered, TP1 already hit. It does look like it's going to go back to either break even and then potentially stop loss, but them's the way it goes. TP2 is in this cluster here on the left-hand side. So if TP2 does get taken, I hope that it can at least try and go up to TP3's point if it doesn't already go down to stop loss now, and then potentially push higher into that cluster that we had at rollover. So a few clusters where price can potentially go to if we start getting some bullish movements to push price higher. If we don't, it's not the end of the world. It is what it is. I will take the 0.5%, well, in this case, 0.25% loss gladly. Following my plan at this point in time, everything is according to how I would like to enter. So yeah, that's what I'm hoping for. I'm hoping for a potential continuation pushing up higher. Maybe coming and testing this cluster here on the left with rollover. Maybe come and testing this cluster up over there. That's what I would like to see. If it doesn't, it is what it is.
Yeah. Yeah, no, dude, I rate that. I like your long, I'll be honest with you. If it was, had it been New York session, I think you're a bit early. I will admit, I'll put it out there. I think you could be a little bit early, but I
I can
rate
take
that.
New York. I can still trade New York if I have to.
Yeah, no, exactly. Yeah.
I mean, this will be a 0.25% loss if it goes to loss now. I still have another 0.5% plus 0.25% that I can lose.
Exactly. Yeah, exactly.
Before I get to my basically 2 losses, for the day. So, not a problem.
But like I was about to say, had it been New York, I probably would have been considering trading this with you because it does look really nice. However, it's London. I don't have much testing of of NAS or S&P or US 30 in London. US 30 is mostly my swing strategy, though. I don't really intraday US 30. But S&P and NAS, I don't really London trade it. But it does look really nice, and it does look like it does want the setup for some potential longs. I just think it could dip a little bit lower first.
Yeah, whatever it does, it's going to do.
Yeah, the only issue with it dipping a little bit lower, though, is I don't want it to move too high. I don't want it to come up to, and this is on the 5-minute as well, I don't want it coming up to the 27 293 mark. If we come up to the 27 293 mark, then start dipping, I think potentially we could, it could be a pullback continuation to the lows.
So you're saying back into this cluster here.
Yeah, exactly. However, if we pull back first to 27,204, which is just around your stop, maybe a little bit lower than your stop.
204.
Yeah, 27,204.
It's roundabout entry.
Oh, is it around? Okay, fair. Yeah, so if
my entry was at 198.
What are you using for your markets?
IC markets.
Okay. You're right. I was gonna. Yeah. Okay. Fair. Because
I mean, NASDAQ. Okay, you're gonna struggle to see it right now, but okay. So let's do this.
yeah. So yeah. Okay. I can see. I can see why you've entered now. Because I'm looking at my charts, and it needs to come down to 27,204 ish, which is the retest of the consolidation to the left. You know, it
Oh,
doesn't
yeah.
quite. So if I just bring my chart up real quick, you'll be able to see what I'm talking about.
Yeah.
You
So
know, yeah.
the reason why I use the IC markets one is because it's very close to the fivers price
Yeah.
action.
That makes
So
sense.
it's it hops around, but it's close.
Yeah. I'd like to see something in this zone here. If I get my equilibrium out, if I get my center line out, and a fib, let's get a fib on here. Oh, the fib's not quite okay. That's frustrating. However, I suppose we could get the fib. Oh, if we go from this leg only, the fib's perfect instead of the overall move.
I
Okay.
think in terms of overall move, I think it should be from the top, the previous bearish leg, if you want to consider.
Yeah, the overall move, I've gone from here to here. Yeah, that's this fib. Whereas, you know, I suppose I could take into consideration this then as well, if that's the case. Yeah, I'd like something along the lines of this, which I suppose is a little lower than 204. It's 27,180. Stop on the low.
27,180.
1-to-1 would be that point that I mentioned about potential reversal point. Or we could look at the highs, which is, I believe, high of day. Yeah, Asia high. So just about Asia high. So Asia high up here. So technically, I suppose higher day. So yeah, higher day, which is Asia high, 3R. Or we can have TP1 at the low of the consolidation, which could be the potential for pullback reversal to the downside. That I can see happening on. Although I don't want it to come down this low. I don't like that. I prefer this. Yeah, I'd prefer this. I'm gonna stick with 209. There you go. But I like 204. I'm gonna go with like the sort of 204, 209 area. For the NAS.
Yeah, I see
But
you're using Pepperstone.
yeah, this is Pepso Markets. But this is what I would have liked to have seen if I was trading NAS throughout London.
So you'll see now the difference. If you look at the current price on your trading view, it's showing 27 to 40-ish, to 41. And if you have a look at the price on the 5ers feed, it's you obviously have to take into account spread, but it is roughly 27 to 11. So it's about 20 points lower on your than your Pepperstone one. Whereas the IC market one is currently, so it's showing 27 to 11 versus 27.10. It's a lot closer.
It is, isn't it? Okay, so you know what then? I'm going to do this live on stream. Oh, come back. There you go.
What are you doing?
Right. I'm going to do this live on stream.
I just hit ring.
Yeah, so I loaded my chart up.
IC markets.
Where's IC markets? Where the hell's IC?
You can probably just type IC markets. There's a wonder, so it should be below a wonder. A wonder's way at the bottom. There's Vantage, Black Bull, Pepperstone. Oh, dude, you don't have IC markets.
I don't have IC. Where the hell's I? No, I actually don't have it. I'll tell you what. Let me put US Tech in instead of.
US Tech. Yeah, US Tech 100. There we go. IC markets.
That's what it is. I was gonna say, maybe it's okay.
214. So 214 on that one right now, and it's 2 113.14 currently on 5ers.
Wow.
So
Yeah. Okay. Yeah. This is a lot closer then.
quite a bit closer.
Yeah. So what? Yeah. Fair. That's quite phenomenal, that isn't it? So I'm going to be looking at one. Yeah, still 178. I still like this.
While you're having a look at that, I'm going to say hello to everybody that is in
Yeah.
the chat. Doc CSG, hi, good morning to you. Raphael Betancourt, good morning to you, saying on an EU and GU long.
Beauty. Absolute
Nice,
beauty. Let us know
nice.
where you got in, Raphael, because it is hella bullish at the moment. You got some beautiful price action displaying your way.
Yes. We've got Azrael Trades. Good morning, mates. Good morning to you. Welcome to the stream. It's the final day of April, and we're hunting for those end-of-month setups. Yes, we are. We've got Petrus Maris in. Good morning to you. We've got Martin I. Good morning to you. Martin, how are you? We've got Sharp. Hi, good morning, guys. Good morning to you. Martin I. My TP on NAS is 27252.
27252.
Oh, you either just missed it or you just hit it. Like it was like
Yeah, these highs here then.
yeah.
Nice. Why there?
Very good.
Out of curiosity, this isn't that just in a bit of the middle of the nowhere, or is it like a fib zone? That feels like just a bit random. Yeah, okay, it's in a nice little fib zone, but it still feels like a bit
Yeah.
of like a middle of nowhere.
Yeah, it's like a little fib thing.
Yeah, it's a beautiful. It's actually bang on in a nice fib zone as well. To be fair.
Yeah. Henry, good evening, good morning to good morning from us to you, good evening from your side to us. Martin and I in the meantime, it's got its 0.5% in pocket. Nice.
Beauty.
Nice.
Happy days, man. Well done.
We've got Greg Jenkins saying, howdy all. Whenever I see Jenkins, I immediately think of Leroy Jenkins. And then I am reminded of the World of Warcraft meme where the guy runs into a raid screaming Leroy Jenkins and then gets his whole party killed. Whenever I see Jenkins, it doesn't matter if your name is Peter Jenkins, Greg Jenkins, Howard Jenkins. It doesn't matter. It will always be Leroy Jenkins.
See, whenever I hear the name Leroy, I always think of that song. Leroy, it's your mama. She's calling you, man. It's like Wolf of Wall Street. Have you not heard that song? Hey, Leroy, calling
I'm
you,
gonna
man.
have to go and refresh my memory. Like
Dude,
I say, like when it comes to Jenkins,
I
that's
don't
it.
actually know who sang that song, but I first heard it on Wolf of Wall Street. It's so funny. Every time I hear the name Leroy now.
I'm gonna have to go and check it. Zora trade saying GBP USD rockets. Yeah, definitely going up.
Yeah.
Russell saying, would Bank of Japan's intervention create a risk-off environment? I mean, the idea is that it's going to definitely cause the JPY to drop.
Mm-hmm.
That's the intervention.
It depends what asset you're trading as well, I suppose.
Yeah, so it's definitely going to be dropping. So you can still consider it maybe as a little bit risk-off. But everything that goes up must at some point come down. So, yeah. We've got Veronica Ruiz saying, good morning to you. Abradov Linkler. Hello, everyone. Good morning, Abradov Linkler. How are you? Marvin Chetty, how's it? Richard, how's it, Marvin? What's up, mate? Or who's it? Who's it, brew?
Away, brew.
Away, brew. We've got Donald. Yo, morning, Rich. Morning, William. Morning, Donald.
Yo, it was good, Donald.
Nobody wants to talk to Will. Everybody just cares about Rich. Don't worry, Ty Keith cares about you, mate. Good morning, Rich and Will.
Yes, Ty Keith.
Nice. What happened to EU? Well,
someone hurt its feelings. That's what's happened to EU. Like, damn.
I think EU started pushing up roughly around the same time that, or slightly just before that Bank of Japan news came out. So it is potentially that it is a little bit of a risk-off sentiment at this point in time. MG and probably the orange folder news reaction. I mean, what? Or you're saying orange folder, but like, what orange folder?
To be fair, I was.
German prelims.
That was yesterday.
No, today. German prelim GDP, quarter on quarter.
Oh, fair. Okay. I know we have CPI out today for the euro at 10. Yeah, 10 a.m. How
Yeah,
is
CPI flash
core
estimate
Yeah, yeah,
and core flash estimate year on year.
yeah.
But the big baby, the big boy today is the pound
Well,
monetary policy report, the monetary policy summary, the MPC official bank rate votes, as well as the official bank rate.
yeah, that's gonna be a big one.
Then
Oh,
after that, it is Bank of England Governor Bailey is going to be speaking, and then it is the Euro's main refinancing rate. So pound interest rate, euro interest rate.
yeah, yeah. We got a lot going on today with the interest rate decisions. We've got a lot going on pound, euro, and we got dollar later on after 1:30 as well. CAD and dollar.
Yeah, definitely. I mean, the dollar is the advanced GDP, quarter on quarter, core PCE price index, and the employee cost index, as well as the advanced GDP price index and unemployment claims. And then also we've got ECB Press Conference as well, a little bit later in the day as well. But still, these last 2 days, yesterday and today, do be careful. To me, the yesterday's FOMC did very much little. It was pretty much a nothing burger. And I expected it to have much more of a reaction than it did. It is, unfortunately, one of those things. But yes, we will see. We'll see. My trade is currently sitting at break even. Definitely slowed down on its way up. So I think Will might be correct. We might have a little bit of a pull down lower before we pick up. Wahid is saying, good morning to you, Wahid. Infinite velocity 2.0 is saying, what caused the yen spike? A fat finger? No. It was indeed the news from Katayama saying, the financial minister saying, we are nearing timing to take bold action on FX, have long mentioned possible bold action on FX. So this basically means that the Bank of Japan is probably considering, they are considering in this case, bold action. So the considering bold action is them adjusting their rate. They're doing rate spikes, I think, in this case. So they'll probably pick up the interest rate rather than reducing it. I mean, they were sitting at 0 for the longest time. They're at less than 0.75, so they're probably going to consider a rate hike.
Yeah. I got completely spun out then. I went on to NASDAQ and I was like, why am I not seeing anything? But then I realized I went onto my old NASDAQ.
Raphael Betancourt, I entered an EU long at 116.768. 116.768. So EU long 16.768. Delete. There we go.
116.768. Okay. Nice. Okay.
Very good entry.
Yeah, I like that.
TP 117.206. 17.206. Okay. Quite a bit higher, and then stop loss 116.655.
116.655.
655.
Okay.
Wow.
Okay.
This is what, like a 1 to 3, 1 to 4.
Let me jump up onto the higher time. Okay, Raphael, let me know why the stop loss. I love the entry. Really nice entry. Let me know why the stop loss. The stop loss is there. Stop loss is almost above a consolidation. Yeah, nearly, dude, this is probably, okay, this is just me rough drawing it. This is probably a 4R trade.
Yeah, it's a 3.88 R trade.
Yeah, there you go then. Yeah, I got 3.98 here. So yeah, 3.88 trade. Dude, really, really nice trade. I really like that. I will be trying to enter into a EU short. but it'll be around here somewhere.
So aiming for yesterday's highs and
Yeah.
the stop loss being slightly lower than the what would this be? Just coming out of
Okay, I suppose the
Tokyo
stops.
session.
Yeah, I suppose the stops just below this little base that you'd mark out. I
Yeah,
suppose.
yeah. So the cool thing is, Raphael, if you so wanted, you could still have taken your stop loss from same entry point and you can drag it all the way down to the Tokyo lows and you would still have a 1 to 2 R trade.
Yeah.
Yeah, I think that's pretty groovy.
It is a really nice trade. Yeah, really nice trade.
Ciano saying, good morning on this fake Friday, long weekend incoming. Yes, indeed.
True that.
Tomorrow is going to be Labor Day. And, well, here by us it's called Workers' Day. But, yeah. We've got a music festival here this weekend. So that's what I will be doing tomorrow and Saturday and Sunday.
Nice. Yeah, I got a lot going on my side. So today being the last, I won't be trading today, but today being the last stream day works perfectly for me. There's a lot going on at home here with family. I've actually had to. I was supposed to be at a friend's wedding tomorrow, but unfortunately, I've had to cancel that, which I'm gutted about. So big shout out to you, man. I don't know if you're watching right now, but best luck tomorrow, and enjoy the ball and chain. Enjoy your new life as a prisoner. I mean, as a husband.
Dude, everybody makes that joke, but personally, I love being married.
Yeah,
like,
fair.
seriously, I love being married.
Yeah, 100%, man. Yeah, 100%. Look, I suppose providing you marry the right woman, marry. They joke about marriage. I wind him up, but 100%. Super proud of him. As long as you're marrying the right person, the person that you want to be with, then yeah, 100%. Marriage is a blessing.
Yes, it is. Amresh saying, good evening, guys from Malaysia. Welcome.
Welcome from Malaysia.
Elena Andrika. Hello. I hope that is correct.
Hello, Elena.
Abdurrahman Linkler 88. Martin saying it was not a fib zone on your chart, just a bit below on the left is a 1 wick. I put TP just a bit below on NAS. All right. Okay.
Okay.
Yeah. So the that long candle wick just slightly below it. Makes sense. Kaizu saying gold is rising. It was rising. It has a little, or had at least a little bit of a pullback, and it seems as though it's slowed down ever so slightly off of that volumetric news reaction. Lol. Spio saying, good morning, fellas. Good morning to you, Spio.
Oh, Spio, what's up?
Martin saying, I'm still short bias on it. Just consider the push up as a liquidity sweep. Okay,
Beauty.
fair enough.
Yeah, beauty.
German unemployment miss. Yep. SM Trader, good morning. Euro USD bone up from...
I think it's supposed to be gone up.
Probably, yeah. Gone up from significant demand zone on the TF day. So how do you think that we can... How do you think that we... Or that can we buy? Hold on a second. How do you think that can we buy? Okay. I'm really struggling with that sentence structure. You want to know where we can buy from. So if we're looking at Euro USD already.
Okay, yeah, I think what he's basically saying is
we reacted off of a significant demand zone, and he wants to know where we can buy from.
Or could it be the opposite? Could he be saying, how can you be buying? Shouldn't we be selling if it's come up to a significant demand? No, that wouldn't make sense. It would have to be, how can we buy? Because the demand's, demand down, supply is up. Yeah, okay. Yeah, I'm going to go with your translation on this one.
I'm just checking now to see if we are at a significant demand zone.
On what time frame though? Oh, on the daily time frame. I'm assuming. I believe that is time frame daily.
Time frame day, yeah. I was
Yeah.
also like TF day, time frame day, so daily time frame. So if you go to the daily,
Demand zone, demand zone, demand. Have we? No, we haven't. We haven't come to a daily demand zone. I suppose the daily demand zone would be down here. We're creating a demand zone, I suppose. Here.
I'm going to go ahead and say that if I bring up my screen, it is
Yeah.
probably this. So if we're looking at this area here, like that, that is probably what he's referring to in terms of a demand zone. I don't really see much.
I wouldn't. Yeah, I don't know. I wouldn't be calling that a demand zone. Yeah, no, no. I'm sorry. I'm not seeing that. I'm seeing it as It's a nice zone, lovely zone, but I'm not seeing it as the demand zone or a
Yeah,
high value zone at that. You know, it's.
I mean, down
Actually
here
kind
makes
of,
makes a lot more sense to me.
yeah, it's actually kind of shafted the whole idea as well, because now that you've gone up onto the daily and I've taken a look on your chart, the daily, I'm actually kind of thinking EU needs to push lower, quite a bit lower as well. It needs to come down. If you
Yeah,
go to the top of that high, yeah, that zone there, maybe a little bit higher. Maybe if we can go to the yeah.
I mean, that would probably be what I would be looking at as of right now.
Mm-hmm.
So we struggled here. Okay, wait, let me just remove all of this quickly because we had this here on the left-hand side, which, pardon me,
Got
we had a
reacted.
volumetric push down from there. We did break lower than this point here. We came back up into it.
And we
We
respect
wicked
it.
above one day, effectively respecting it. Reattempted the next day to try and push back into it, failed, and then started pushing lower. Have yet to break. We've wicked though. We have yet to break this low over here. We've wicked it. We haven't broken through yet. So if this area here is respected, like you're saying, we can potentially then start looking at a previous area, which is all the way down here, for a potential test. Or you can take this whole zone here. Maybe that's what he's referring to in terms of the demand zone. Because we did wick into this area here. Barely, but...
Yeah, I mean, okay.
I
I'll
can
be honest.
see why he would think it's a demand zone. I won't personally classify it as a demand zone yet. It did have nice reactions, one here, but this reaction here did not break any significant lows. This reaction here also did not break significant lows. Whereas a movement from this area over here did indeed sweep and break new lows. And then you had follow-up as well. So in my mind, a demand zone, a supply zone is an area where a significant reaction is taking place that breaks structures. In this case, this area here did not really break any structure to me. But I can see what he's thinking. Personally, I would probably want to look at trying to push a little bit lower into this area here. But that's just me.
Yeah, I think we need to come. I think that area would be if we. Oh, excuse me, getting indigestion today. If we were to come down into that zone, hold, respect that zone, start moving higher, then yeah, totally agree. I think that's at the point where we're going to start, moving. in a demand zone. But other than that, on the daily, no, I don't like it. Maybe on the lower time frame, I suppose. Maybe like you're marking out there now. Maybe on the lower time frame, it's a respectable zone.
In this case, it makes a little bit more sense on the hourly, but I don't really see it on the daily. I see it on the hourly though, because you have these attempts here, and then this one is reacting now, and it did sweep the Tokyo low, Tokyo high. Sorry, my apologies. We did have a volumetric breakthrough here, a retest, a wick, a wick, a wick. Failure to break through, volumetric shift down, retest. Yeah, so on the hourly, it makes a lot more sense, the area. On the daily, not so much. My only worry with this is that this here is a lower low on the day from yesterday. Generally, when I have a test of an area, I want to have the follow-up test be a higher low in relation to the previous one before you start breaking new highs. So here you can see there's the test, there's the higher low, there's the push-up higher. There's the test, there's the retest to try, create a higher low, there's the push-up. That's what I mean. There's a test there, there's the retest, there's the push-up. So that's why I'm saying in this case, this is lower in relation to that. So what I would say is I would want it to come back down. First, prove that it doesn't want to make a lower low, but instead a higher low, and then react off of that. I hope that helps. That's what I would be looking for, personally. NASDAQ, what's going on here? Okay, so it was a break-even bounce so far. Back above the TP1. Yeah, still there. Looking good. Hopefully it can reach TP2. It looks like it's on its way towards it. So I'm going to wait patiently for this one.
Yeah, I think you've got that. I think this move would have missed me had I've, entered into this. I think this is runaway now. I think it's yours.
The MACD has slowed down significantly. However, we are still above the midpoint, the mean. If you have a look... Why? Oh, that is annoying. Anyway, so you had the low, which equals this area over here. You have a higher low on the MACD, but a lower low on the price action. So this creates a diversion of sorts. It's diverting away from each other. So yeah, I do like this for a continuation up higher. Mm-hmm. Even if it is slowing on the MACD as we are speaking right now, this could just literally be the same as what happened here, where you have a bit of a dip lower, which is this low here, and then another revitalized push up higher, which is what I'm hoping for.
Yeah, you've had a beautiful close above as well, to be fair.
I do like the fact that when we had this attempt to try and push price lower on the 5-minute, it was followed up by nice bullish structure, bullish candles, which then did break that most recent 5-minute swing point here, closed above nicely. So I do like this. 15-minute, nice bullish candle. Hourly should be bullish as well. Yes, very bullish, very nicely. Did not create a new low. We did not sweep yesterday's lows. We did create a new high on the day. The fact that we're not sweeping here does tell me the story that we are potentially going to try and go up to get back to today's highs. Yeah. Which would be lovely. Which, by the way, was new all-time highs yet again. This push, new all-time highs on NAS.
Really? Interesting.
Yeah. This was the all-time highs on Monday, which was 24,706, and we're back up to 24,490. So we're getting close to 24,500. Getting close now. Getting close now. Come on.
I wonder if we can get to 27,600. When do you reckon?
27.
No, God, no, not today. No. I mean, maybe
New York.
Maybe today.
Maybe
New York. The more I look at it, That wouldn't be
We
impossible.
we do have, if I go to the stocks, Amazon, we have earnings today, earning reports today at New York Open. Google, Meta, Microsoft, not sure about Netflix. Nvidia is going to be at the end of the month. Tesla is also not today. Apple. So yeah, we have Amazon, Google, Meta, and Microsoft all doing their earning reports today, and that may have a significant reaction, or cause a significant reaction on NASDAQ. So yeah, something to take into consideration. I'm going to be very careful when we get to New York Open. Be very careful there.
I'm just not trade. I don't think I'll paper trade today, but I won't
Speaking
trade.
of paper trading, I should probably look for a trade on this account for the stream. Raphael saying, I entered on the 5-minute True Richard. I should have get better stop loss payment. No, you don't have to. That's the thing. It's like you don't need a better one. That is a pretty good one. I do like that. I'm saying in the event where you wanted to adjust your stop loss, you'd still have a very good risk to reward ratio, even if you did pull your stop loss lower. Now, obviously, I don't know what was your risk percentage, but even if you did go and basically pull your stop loss all the way below this, the Tokyo lows, you'd still have a 1 to 2 in terms of risk to reward. That's all I'm saying. Yeah, don't have to change it at all,
No,
mate.
legit. Yeah,
There's no,
legit.
I don't think there's anything wrong with
Yeah.
your stop loss.
As long as it's what you tested, and we can talk about, like, oh, I don't like that trade. Oh, I don't like this stop loss placement. I said to Martin just now, I was like, why did you put your TP there? It's in the middle of nowhere. Other than a fib placement, I can't see a reason to TP there. Martin can. Doesn't mean doesn't mean that we're saying that, oh, we think your strategy is wrong. It just means that it's not what we see according to our strategy. So yeah,
Well, I mean, I understand why he placed it there. I mean, you have the low of the day, you have a higher low, you have yet again another low that did break like a previous attempt to try and push price higher. So I do like this area here as a potential area for a stop loss. I mean, if price were to come all the way back down here, it just means that there's probably more sell
low,
off.
yeah, exactly, low side potential.
So then, like you would always say, it invalidates your trade.
Yeah,
So
and
if it goes to
exactly
that
that.
point, it's fine. Yeah.
As long as that's why you're placing your stop loss where you're placing it is an invalidation of your trade, then yeah, dude, I back that 100%. Even if I think it's in the most random place on planet Earth, so be it. As long as it invalidates your trade, and you know that if you hit stop loss on this trade, then you want to get out, or you know that if price goes below a particular area, you no longer want to be in this trade. That is where you place the stop loss. And
Yeah.
it doesn't matter if it's an imbalance, an order block, I don't know, a high, a low, a fib. It doesn't matter where that is, as long as once it hits that area or passes that area, you no longer want to be in the trade. Then I fully support that being your stop loss zone.
Yeah, no, I agree. So long
Yeah,
as you've back tested it and you're happy with that stop loss, it needs to make sense for you.
yeah, 100. What
Did
infuriates me
say
the
thanks
most?
for the advice.
Yeah, you're welcome, bro. What infuriates me the most is when people say, "I've got a stop loss here." Why? No idea. That
Yeah,
infuriates me. That really does annoy me because it's like, bro, ow, stop.
yeah. Why are you trading without a plan, you
Yeah,
muppet?
literally. It's like,
Shane's
oh, come on.
Shane saying Labor Day in Australia is on Monday next week. Yeah,
No,
ours we call it Workers' Day, but it is Labor Day.
yeah.
So ours is on Friday tomorrow. Manu saying, "Hey guys, good morning. Waiting for a setup on EU. I mean, EU is busy pulling back. This is Raphael's trade. So
Yeah, I'm waiting for it to come around break-even bounce for Raphael. I want to see if we can get. Let me just refresh my chart so I can see
I mean, it's
properly.
the same idea as on the NASDAQ. It's
Yeah, no, literally.
low, higher low, higher low.
Hmm.
This entry here again on a bit of a pullback. There's nothing wrong with this potential movement. I
Yeah, no,
just don't
legit.
know.
I'm
I just
looking
don't know.
around. 16,814. So I like Raphael's trade. 16,814 would be where I'm looking at entering from.
So there's only one thing that I would say. Knowing that today is the refinancing rate decision as well as the new rate amount, having a take profit point that high, we may not get close to this area before the news comes out. And then you may have that. That's all I'm going to say. That's all I'm going to say. It's on a rate decision day, I would probably want to bring my take profit lower. In the event that price does start moving, it's like guaranteed to either hit one of the two, but that if the news comes out and I'm still not out of my position, I might have to cut it short, which is also not a problem. You can still do that. That is not a problem at all. Anyway, you do you, man. You do you. Still slow on NASDAQ. The Jokers is saying, does somebody have $20? I think I have $20.
I do have to. Do you have $20, Rich? Yeah.
I think I do.
It's
in my wallet.
Somewhere have $20. So together we have $40.
Yes. How do you see German 40 15-minute? So, indices, German 40 15-minute. Okay, this was when we were having a look at that. So, 15-minute alone was bearish. Nicely. We're having a bit of a V-shaped recovery now to a dip lower. We came back into the highs of the day. If I remove some of the drawings, it would make a little bit more sense. We had that last attempt before price started to push down very strongly during the Tokyo session. We're back at this area right now. However, this being a V-shaped recovery, almost, it's actually on the 15-minute, it's more like a W, if you look at that. So these 2 points here being the low end of the W. There's a V-shaped recovery of sorts. We've come back into this area, but this is so volumetrically strong because consider this. So if I remove all of this and we just look at how long did it take for price to get to the lowest point, that whole move took 4.5 hours. Whereas in that same time, or in this, to fill up the same gap that we created, the same drop down, took half that time. 2 hours for it to pretty much take back everything that it had lost during this movement. So whenever we have something like this, I'm quite cautious because it might mean that this area down here is a area of strong demand and support. So price may want to come back down to retest it. Potentially this last area that we had. So this last zone here, price might want to come back down to test it and then start reacting very bullishly. So I would be very cautious about trying to just buy up from where we are right now. I would rather wait for it to come and retest this area down here first. I mean, you can try and sell your way down if you wanted to. But I would be very careful, especially with having a strong volumetric reaction like this off of an area, especially after creating a new low.
Yeah.
On the 15. On the 5, it might be that you had, there you can see it now, you have the higher low on the 5-minute here. And you had this consolidation area that got broken there. So in that case, what I would do is I would look for price to come back down to this area.
Yeah, I don't really trade the DAX, so I'll be honest. That seems pretty valid, but I don't know how it moves. I do know when DAX does get going, it does get going.
Do you know who we should ask?
Richard Wells?
Yes, there we go.
Yeah, I was going to say.
Rich trades the DAX, and he's going to be on today, so we can ask him what he would have done with this. We should do that. We should ask Rich.
Yeah, we can give him some hindsight trade and just be like, what would you have done? What would Rich do?
What would Rich do? I'm going to get that, like, what do you call those little bangles? I'm going to get a bangle that says, what would Rich do? Which technically also is my name, so what would I do?
Fair. Yeah, I suppose it kind of works both ways.
Yeah. Donald saying, am a swing trader, so I'm still holding sell on EU. I like the logic you have on intraday. Thank you. Appreciate it. I'm not a swing trader at all. I think Will definitely has more swing trading strategies than I do.
I do have a swing strat. I don't often trade it because my intraday it's so successful. I don't really need to.
I'm so successful. I don't
No,
need
you know what? As soon as I
strategy.
said that, I thought, oh, I sound like a right dick. Yeah, yeah, and I knew that was how it was going to come across as well. Yeah, like I get so many setups. There we go. I get so many setups on my intraday. I don't need to move over onto my swing. My swing's more like almost like a backup strategy.
Yeah.
I'm kind of I kind of want to auto because there's only a niggly little bit on my swing strategy that makes it difficult to automate, but I really want to automate my swing strategy because again, I don't trade it often, and sometimes I miss like with my swing strategy. I'll will suffer from this. Yes, MG, and I know. Tell me about it. What a hard life. Uh,
Woe is me. My life
Literally.
is so.
Oh man, it reminded me this morning. My brother, we were in the gym, and my brother's massive, and like he's there like this, like flexing in the mirror, and he goes, "I wish I had a bigger chest." I was like, "Women wish they had chests as big as you, Ewan. Like, shut up." I was like, seriously, shut up. Like, there's me being like, oh my God, I'm progressing. Still looking like still looking like a toothpick. Like, oh, I'm progressing like a toothpick with a beer belly, like, and he's there looking like some chiseled Greek statue saying, oh, I wish I had a bigger chest. I was like, yeah, wow.
You know what is funny? No group of people suffers more from body dysmorphia than bodybuilders
Yeah,
in general.
100%,
It's
100%.
just they get to that point where enough is not enough. Like you can have the
Yeah.
largest chest, the largest arms, the largest shoulders, everything just looks aesthetically pleasing and you're super strong and it won't be enough.
Yeah, no, I know. To be
So you
fair,
need to be
like,
very careful. You need to be
yeah,
very careful. Yeah.
yeah, 100%. Like me and you work together a lot with psychology as well. Obviously, him being a gym guy, fitness, health, and all that good stuff. He refuses steroids. He refuses any supplements. He tries to do it as naturally as possible. He takes creatine. I think that's about it, and some, and just high protein natural foods. I think he's actually stopped creatine as well. To be fair. But so we talk about psychology a lot when it comes to growth and when it comes to keeping the body fit and healthy and growing his body. But he now and then he does suffer with body dysmorphia. Like he will look at himself and be like, "Oh, I wish I was bigger," or "I wish I had bigger shoulders or bigger traps, etc., etc." And same goes with me when I'm talking about P&L and profits. I'm like, "I wish I earned more this month. Wish I earned more today." And so we do try and keep ourselves in check with psychology. But yeah, like you said, no one has that sort of what's it? Is it imposter syndrome? Is that the word that I'm looking for in this situation? No one has that sort of body dysmorphia, imposter syndrome sort of feeling than those who are trying to become successful in whatever field. Body
Yeah.
dysmorphia along gym guys, bodybuilders, etc. P&L when it comes to traders, traders P&L. You can be the most successful trader in the world. Like you can pass your funded account. The minute you pass your funded account, you don't care about a funded account anymore. You want to scale the account. You want more. Instead of 100K, you want half a mil. Once you get to half a mil, you want a million. You're never going to be happy. So we work together a lot when it comes to psychology and trying to make sure that you're appreciating yourself in the now.
Yeah. Speaking of exercise, deadlift 1974. Hey, how long after a withdrawal request are people getting paid to their Rise accounts? So, Rise accounts, we've had a little bit of delays with the Rise accounts specifically. It's not supposed to take longer than a few, like 2 days, like 48 hours. However,
I would say give a business working week, like a working week. A business week is like a nice little bit.
yeah, but I mean, like, we were talking about the delays
Mm.
last week, the week before. Sol came on talking about we were having some delays from the payment provider. So this is where the delays are generally. It's with this payment provider. So if you haven't received your payout just yet, just do still remain patient. It will eventually come to you. Like I said, it was sorted out on our side. It's now on their side, whether or not
Yeah.
the delay is there. Alicio saying, hello, Richard. Will have a wonderful day ahead. Thank you very much. To you as well.
Yeah, that's super cool, man. Thank you very much. Same goes.
Bombing Bull saying, hello, hello, hello. Hello to you. Look at JPY. This was 18 minutes ago. Yeah.
Oh, guys, don't forget as well. 10 a.m. is up in 3 minutes' time, so we have got news coming out in 3 minutes for the euro. So just take that into consideration. It's medium impact, but non orange folder news. But just take that into consideration. We have got some euro news, so don't go opening up any trades, and don't be shocked if you get a bit of volatility or some spikes coming into the market. So just remember, guys, 2 minutes time news.
LJ will be here soon, and he is our resident macro master. I wonder if this is not what's that saying? You're putting the cart in front of the horse kind of like thing. You're reacting a little bit preemptively. Because
premature reaction.
Yeah, a little bit of a premature reaction. I don't know if I would want to participate in this going down just yet. I mean, imagine we do a V-shaped recovery of sorts, and then they decide, okay, it is now time to intervene, and then we get the
Dixie isn't that strong either.
Yeah, I mean, a bit of a drop down and then a push up from there. But I mean, this is good generally for this means strength for the yen.
Yeah.
So the fact that they want to intervene is a good thing for the pair itself, for the yen pair. It's not good for the dollar. That's probably also why we're seeing a little bit of NASDAQ pushing up with the DXY being a little bit weak. It's just a little bit more buying power, You buy a little bit more, and then once the dollar index picks up, you get more bang for your buck with like the NASDAQs and stuff like that. Robert saying on Euro USD, I think this Asia and London is just fake move, and New York, we will take that probably. Personally, I think this.
I hate that idea. Yeah, yeah, literally.
I don't know why, but I do think that we're going to have a bit of a tumultuous day on euro and pound. I don't think it's going to be running in one direction. I think we're going to have a back and forth quite a bit.
Well, pound yesterday was awful. I looked at pound twice yesterday, the morning session and the afternoon session. Looked at it twice and left it completely alone.
Yeah, I mean, you have all of this just...
It was just garbage. It was...
And then nice volume, retest, and then eventual continuation pushing lower. But today, I think is going to... You're going to have this area down here that you can potentially come and retest. You've just swept the highs of the day. You've created a new high. Price is going to come down, maybe pick up, maybe go down, take these lows, basically a double low that you have down there, then pick up, then push down. I don't think pound is going to be a lovely trading... Lovely trading today, no. I don't think.
I don't think so. I think EU and GU could potentially sell off. I think the pound, with what's going on at 12 o'clock at midday, I think could be really messy. Depending on obviously how the fundamentals come out. I think same with euro. I think euro is going to be a bit odd. I'd love to see a short on the euro. I would. I'll be honest with you. However, it's just price action at the moment is super bullish, and we have got a little bit of news coming out throughout the day for the euro as well, and I think it's just going to be messy price throughout today and tomorrow.
Infinity Velocity is asking, what yen pair should I short? I mean, dude, fill your boots, mate. Like, you can choose whichever one. AUD, CAD, CHF, Euro, GBP, Hong Kong. You could choose whichever yen pair you want. They're all pretty much They're going lower. So I'm once again I'm gonna preface caution. Don't try and catch a falling knife. That's how you lose hands and toes, mate. That's how you lose fingers and toes. So wait for a bit of a recovery and then decide whether or not it's still going to do this. I feel like this is a preemptive downwards move. I think we're jumping the gun here, I think. I think that there's still some time for it to recover. Hello, LJ.
Yo, LJ.
How are you feeling today? Rough?
All right, slightly better, about the same. I didn't end up going to bed last night, so
Oh, good. That's
I went and had dinner. Right, I got Thai. Had my dinner, watched The Boys, and then had a glass of wine, sort of chilled out for a bit, and then I was sort of awake, and then just stayed up all the way for FOMC. My partner went to bed.
FOMC ended up being a nothing burger, right?
yeah, literally.
No, it was great. Cleaned up all the accounts, so I'm just actually waiting for them to reset now. Just went across all the targets, so
Nice.
yeah, it was good. I wouldn't call it a nothing bag. We definitely had stuff, but nothing in particular.
We didn't get a massive.
Like I said to you, it wasn't going to be anything different. We did get the descent right in the Fed, which seems more of that. I think it's a very calculated move, like kind of semi-political, just not exactly political, but the robustness of the central bank itself and independence. So it's just a framing thing. So that markets, when Kevin Walsh does come in, everyone's like, okay, yeah, there's clearly going to be split opinions. It's not just going to go one way.
Yeah.
So yeah, it seemed very very orchestrated, because that's the biggest descent since it was like 1990 or something was the last time we had that. So yeah, no, it was good. So yeah, I'm a bit tired today still, but a little bit more lively and still feeling off, a bit ill, but I'll survive.
Yeah, dude, you look good. I'm glad that you have. I hope that's a coffee.
I look better. Yeah, it is coffee. Yeah,
Good.
so I don't know if I feel better exactly. I'm still like sweating, like cold sweats, whatever, but I know we'll get through it. So,
We definitely need you to take good care of yourself, mate.
Yeah, absolutely.
yeah. Well, what is it? Labor Day weekend this week?
Sure.
Not that that actually means anything. It'll still be just a normal week. Just be here on Monday, but
Yeah, I mean tomorrow
either
we can have some shenanigans, but other than that, I think it's just going to be a regular old weekend.
Yeah, no, literally.
Yeah. I'm going to a law ball on Saturday, actually.
Yeah, you mentioned.
So,
Fun.
Yeah.
You get to dress up vampire LJ. High
Yeah.
collar.
Yeah, high collar penguin suit.
Look all suave. You know, that
Yeah, it'll be
meme that meme of Twilight where the older vampires like looking down on everybody. That's going to be you from your 6'4" stature, looking down on the peasants. Yeah, we've got a music festival this weekend in town, so I'll be the whole weekend, Friday, Saturday, and Sunday, gonna spend most of my time there. And then my brother is probably going to be dressed up as a wizard, as he always does when he goes to music festivals. He dresses up like Gandalf. Yeah.
Yeah.
I'll send you a photo of what he looks like in the Discord, mate. Then you can have a look.
Definitely do it.
Yeah.
Just give me 1 sec. I just got to jump up and then I'll come back. Sorry.
Awesome
Yeah, dude,
stuff.
no problem.
Right. Also, guys, I'm going to dip out real quick. I gotta go sort a couple of bits and bobs out. Oh, I had an eyelash go into my eye. What awful timing.
Tis horrible.
Tis horrible timing.
Tis
Anyway,
terrible.
guys, I am going to love you and leave you. I'll see you in about 2 hours' time for the second session of the day, the afternoon session. As I'm jumping in, will be midday UK time, 12 p.m., so 11 GMT, which will be the news for the pound. So, guys, very high impact news as well. So it's going to be doing bits and bobs. So make sure you are careful, guys. Today, make sure you are taking your time. A+ setups only and risk management, most important thing of all. So, guys, I shall see you in just a little while. Peace.
Awesome. Thank you to Sir Wilhelm. I wonder, should I short UJ? Let's put 0.5% risk on the table. See, this is now the thing. It's slowing down as we're going down, so you don't want to try and catch a falling knife. We are roughly around these lows here. So maybe a reaction from here. This was Tuesday the 28th, so that was Tuesday. New York low, come back all the way down here. If we break through and retest, maybe continue lower, then I might short this one, potentially trying to aim for down here, 159-ish. So that's 45 pips or so away from where we are right now. What does the 1 minute look like? 1 minute has slowed down significantly on UJ. You can see on the MACD as well, it's also showing the same slowed momentum in relation to that sudden. So actually, no, I'm just going to sit on my hands with UJ. I'm not going to do it. Short NQ, Richie Rich. Okay, let's have a look. I mean, 1 minute, 5 minute. I am currently still in a long. Hasn't come up to take my TP2. However, it has wicked that consolidation area of this morning already and having a bit of a reaction. Now, I'm just going to be patient. If it ends up going down to stop loss, so be it. It is what it is. I'm not too fussed by it, to be dead honest. What does the hourly look like? Okay, so the hourly has slowed down significantly. We just got a new hour open about 8 minutes ago. There is always that potential that we can potentially go down from here. I mean, it can happen. It is quite slowed. So 1, 2, 3 bullish candles and then a bit of a rounding. What I would do hope is that it is a short-lived rounding and then a continuation pushing up. That's what I would like to see. Obviously biased because I'm in this trade. I got a question on mechanical methodology and a discretional methodology. What do you think about the two ideas? So I think mechanical methodology is the idea that you have very specific rules that then you either hit one of those two things as an example and you never deviate from your mechanical plan. So if you had a plan that said, I take every 50 EMA crossover as a sell or a buy, and I take the candle closure, I have my stop loss above that area as an example, or I have a specific, let's say in this case, 50, I don't know, pips, and then I look for a 1 to 2.5 as an example. So I have a 1 to 2.5 risk to reward, and I do this always. So whenever there is a crossover, there's another crossover there, I take the long on the close of the candle, I make it 1, 2, 5, and this one 5, and I do this always, regardless of what any sort of directional bias or something. That's, if in a nutshell, that's mechanical. You take very specific rule sets and you follow it to the T. Discretion is going to say, look, we are slowing down. We're not really getting the momentum. I am in this trade. However, I'm going to cut it short because momentum has faded away. I think that having a blend of the two is the best. Having a mechanical strategy that relies on well thought out mathematical and specific rules, and then on discretion level saying, you know what, I'm going to allow the market to give me what it wants to give me, but I'm also going to take advantage of the fact that, okay, if we have runners and we have crazy pushes, instead of going from my 1 to 2 in the 1 to 2.5, I'm going to have it open-ended and I'll only close it once we start getting resistance somewhere over there. So blending the two together, I think, is the best approach.
Yeah, I think it depends when people say discretion, what they mean. So I think a lot of people say discretion, they just made like a random choice, like they just click some buttons. If we're talking about discretion between having an actual, like, again, just like the mechanical approach, like you have some kind of like actual reasoning as to why you might actually be engaging in something, or cutting a trade short, or potentially even doubling up on a trade sometimes. But that comes down to discretion, which is a derivative of the prior sort of more mechanical workings that you've done. So for instance, one of the most highly discretionary portions is going to be stuff like macro, right? You've got all the data now. Macro is like data, but then how you compile that data, your discretion on where you see the current sentiment of the market, the kind of like vibe, to put it that way, is, and when I say that, I mean like sort of relative fear or greed and positioning.
Yeah.
Then you might decide to go against, right? Everyone's like hyped on gold. People think like, no, gold's ripping. And you go, okay, yeah, this is too extreme. Other people say, no, you should go with it. Go with the momentum. You might say, I'm going to go the other way, right? Be contrarian. So that would be like a discretionary choice in amongst, obviously, the evidence is clearly saying everyone wants to buy gold.
One or the
Gold
other
is
one.
still ripping. Yeah. So.
Yeah, I do think that the blend is the best for it. And I feel like I used to be a full-on mechanical stop loss, take profit, always the same, always have exactly the same entry point. Everything was very rules-based. But now I think my discretion comes in whether or not when I decide to get in. So I don't just take every single entry based on the rule set that I have. I do pay a lot more attention to how's the volume, how's the momentum, are we close to specific areas. I've added more rules to my trading, more confluences, but I can decide which confluence I want to use for which trade. So even if we did have a reaction off of an established area, and we're not really getting the volume that I want, instead of saying establishment reaction, lower low from a previous high entry. Instead of saying that, I'll say, okay, I'm seeing we're having the reaction, but it's super slow. Yes, we are getting a lower low, but the lower low is subdued. I'll wait, and then I'll wait for maybe a follow-up reaction, and then I'll decide to get in. So just trying to add a little bit more discretion to it.
Yeah, and things like cross correlation, for instance, like you can often see like you might get the setup and the structure on a certain like currency, but you can see the cross correlated currencies aren't quite there yet. So chances are you're going to have a bit of maybe another dip, even though it looks beautiful, it looks pitch perfect. Get another dip, some kind of other shuffle around. There's pound news or something. Therefore, that's going to link over to the euro. Wait for that to clear, and then take the trade. Whereas if you coded something in the way of thinking mechanically, and if you were to code it as an example, it would just take the trade regardless.
Yeah.
So that would be a discretionary point where you go, okay, I'm going to wait for that first. So
yeah, that's kind of like the idea that I look at when I look at discretion versus mechanical. Mechanical rule-based numbers, always the same entry. It's always the same, or at least you try to have everything exactly the same. That's why I feel like patterns play a big role. Whereas with discretion, market structure might not initially be the biggest point for you at that point in time for your entry. The biggest factor to take into consideration for your entry, but it will play a role eventually. Sometimes you'll decide, okay, I'll cut the trade short because of market structure, that kind of like thing. So that's how I always kind of like viewed it. But your description of it makes a lot of sense as well, considering the macros is more the discretion because you're going against what let's call it you're swimming upriver instead of with the river,
Yeah, and then it comes down to
which isn't wrong.
Yeah, time frame, timing. Again,
Yeah.
that's part of discretion stuff as well. Similarly, even with macro, you can be looking at today's things on the card, looking through the week, month, 3 month, 6, 12, and so on and so forth, right? That's going to give completely different views across the board. So, yeah.
Cam is saying I should short NQ. NQ dropping should have went 5 times the size, and then Henry is like, should have martingaled my way. So just like I've already told this to Will and to chat, I am currently in a NASDAQ long. I've already taken TP1, so I am now just waiting for TP2 to kind of be hit. I don't know if we're quite yet ready to start going down. We do have this area of consolidation after this like nice sell-off during Tokyo session. We did wick that area of consolidation before we started continuing lower, but I think there's still a little bit more in it to potentially come higher. I just want to have TP2 hit. If TP2 is hit, I'll be happy. I can move my stop loss to break even, and then I can just leave it, and then it's fine. Then I don't need to pay attention to this at all. But that's what I want, and if the market's gonna give me what I want, I don't know. We'll see.
Yeah, it's hard because we had.
I feel like you're gonna say you're gonna go short. I'm feeling it because your reaction was like.
Look, put it this way: Thursday we're going into Friday. Well, Trump seems to be pushing the buttons for the weekend as well. With the whole Iran situation, they're moving in like hypersonic missiles and stuff as well, which sounds like more like a threat. I don't know if they
than anything else,
because these things are expensive as well, right? The US hasn't used them themselves yet. I think Russia's used a couple in the past. But yeah, they move 5 times the speed of sound. Like, is that really necessary right now? I don't think so.
So 1,600 and something meters per second, because the speed of sound is 333 meters per second in air.
Yeah.
Which it speeds up depending on which material it is.
Yeah.
If it goes through aluminium, it's 6,200 meters per second. If it goes through stainless steel, it's 5,400 meters per second.
Yeah, so I think we're definitely going to get something on the weekend. And given now we've had basically bulk of the earnings, I think there's still like Apple and stuff to come today. Yesterday we had Microsoft, Apple,
Did we
Google,
have them
Meta.
yesterday?
Yeah, they were recorded yesterday.
Oh, it's showing that it's today.
No, it was yesterday. So after the close of market, so that might be why it like
it's not showing then
the next day. But yeah, it's basically it was basically half an hour before rollover, pretty much, or the hour before rollover. Systematically, they each come through. So I think Meta underperformed. Google did quite well. Google's actually starting to make money on their AI stuff. I haven't dug super deep into each of the earnings. Just saw the headline stuff because then I went to bed. It was then 7 a.m. my time, so got my trades done and knocked out. But yeah, so look, just after having all that, went pretty well. We saw NASDAQ climb basically just before rollover. That's why we had the kind of up, down, and then back up again. That was through earnings coming out. So now that that's through the system, we might see a bit of a profit taking, as you tend to, like we did earlier today through Asia, and then particularly going into this weekend. So there'll be some jostling today. I think that'll be more related to the fact it's end of month, however, right? So
yeah,
book
I mean, end of month is always rebalancing.
Yeah.
Against the grain, that's it, Rich. Gotta close the long. LJ has spoken. Yeah, no, that's true. That's true. It is pretty much close to break even yet again. It is showing the propensity to want to potentially start going lower. Once again, I don't mind this one going and taking me out at stop loss. I really don't mind. This is a 0.25% risk left on the table. Like I said, after TP1 gets hit, the profits of TP1 covers TP2's stop loss, so I'm only left with TP3 and TP4's stop losses effectively. So, yeah, I don't mind this. Let it be. I would have loved to have been in on a little bit earlier on this trade. However, it didn't set up the way that I wanted to. Like I said, that low and this low here needed to play out first, and that's why I got in over here. But yeah, like I said, if it doesn't go, it doesn't go. So what? Tis what it is.
I'm just trying to check any other levels. I haven't really looked at NASDAQ today, so.
Yeah. Deadlift is saying top is in on NQ in my honest. LJ, UJ, yen. All of the yen pairs. Have you had a look at the yen pairs?
Yeah, I saw that just before. I was actually waiting to jump on these shorts, but I've been waiting for my accounts to be active again after going through profit target. Because last night. Sorry, go on.
Here's the thing. We had the news event the news come out from Katayama saying we're nearing the timing to take a bold action on FX. Okay. And then this is what led to this sudden sell-off. I feel like, and I want to hear your opinions on this, I feel like this is jumping the gun. I feel like there is a V-shaped recovery in play, potentially, and then the potential big move. I feel like people are going to be in on this a little too early. That's what I feel.
So as far as where we are from, to anyone out there, I wouldn't be shorting it now. You've missed the move, right? What are we down, like 150 points almost or something?
Yeah, it's something ridiculous.
Bottom, somewhere like that.
125, 126.
Yeah, and like roughly,
an hour and 20 minutes
from the tops, right? Yeah.
Oh yeah.
So
141.
141. There you go. I would say you probably get a 50% retracement of this. From there, I'd be looking to short it though. The only way I think we get any kind of further bounces, again, if we go into the weekend, and hence negative news of the weekend. Therefore, we come into Monday, dollar gaps higher, right? As far as buying, I would not be buying this at all.
No.
You want to short sell tops, unless in this specific moment right now, you could potentially take a buy for that retracement. But again, it's one of those things to be very happy to pull the trigger and get out. That or else also be wary that the bounce might start to run and then just literally just fail and you just go the other way. So we had the divergence from the Bank of Japan. So we had 3 members voting for potential hikes. It looks as though now it will be June that we'll get the hikes. The other thing with them talking about intervention, again, it's above that 160, between 160 and 161. They start to bring out the ban hammer and start to jawbone the currency. So jawboning currency basically just means they're trying to talk it either up or down through words rather than intervention, right?
That's why I'm saying I feel like this is that preemptive. And what you're just mentioning now is jawboning. I don't think this is the move yet. I don't think so.
Oh no, definitely. Yeah, there'll be that's not the move at all. That's just that's just chatter. That's just a headline.
Yeah.
But it's going to move markets because of the headline.
Obviously.
Around that, but that's not the activity. Yeah, no. But them doing it in combination with, we've got ECB and Bank of England coming through
today,
which looks as though they will tilt neutral hawkish overall. Now, I think the market's still pricing in too much as far as potential rate hikes for both Bank of England and for the ECB. We're basically pricing in 3 for both of them, which seems way too much. Like, we won't actually get there. However, they will keep up appearances for now, right? Because that's what central banks have to do. It's more the whole taming inflation type thing is more a appearance type thing rather than direct action.
Yeah, often. When everybody else is freaking the hell out, they're like,
show
calm face,
show willingness. Yeah. So in amongst that, if we start to see some kind of resolution with the war, therefore dollar sells off, plus you've got Bank of England, ECB starting to move up, However, obviously, if the war starts to come off, that means they don't need to hike rates so much. There's a bit of a jostle in there, but it does set the Bank of Japan up for the best time to actually hammer the currency lower. The other thing as well with last night, we did also see the 10-year on the JGBs, so Japanese bonds, hit a new record again. So these things are very much, once again, going even further in the opposite direction. So yeah, short rallies on dollar yen. I would not be trying to jump in front of a
Moving
it's not
bus
even a
at this
freight
point in
train.
time.
It's like it's more than that. This is like jumping in front of a rocket ship.
Oh, this is like trying to jump in front of an avalanche.
Yeah.
Hey. No stopping that, my friend. No stopping. Anyway, I still think that there is a potential, let's call it a V-shaped recovery of sorts. I want to at least, in this case, I've marked up the 50% retracement off of the whole high to low point that you mentioned. And it coincides very nicely with the New York low, the Tokyo low of today. So good potential push up here would be nice to get it into this area. I would like that. We did react all the way down here to, what was this, Tuesday's New York lows, basically. So we just jumped below that. Didn't go all the way through, however, but we did come into a slight little area of interest here. So this whole section here, basically, we came into this. Here we go. Came into that. So this was Thursday's low, Friday's low last week, an attempt to break through a reaction on Tuesday this week. So we did come all the way down into that area. So hopefully we can carry on pushing. If not, we might come all the way down to, what was this, Tuesday's lows as well. So interesting to see where it's going to go from here. NASDAQ had a break-even bounce yet again. Still in it. Still waiting. Still waiting for my TP2 to be hit. Come on, boy. Make daddy proud. I think you just muted yourself, LJ.
I don't know.
Yes.
Yeah, sorry, I coughed before. Yeah, I don't think we'll be going towards autumn highs again. Probably that likely. I think we'll tend to sort of stall out somewhere in here and have a bit more chop, a bit of back and forth, especially given the month end. I think we will end up slightly higher though. Everything's very positive. No real reason to short just yet. There's a bunch of background stuff of just how stacked we are that eventually this is, I don't know, we're going to have a bigger conversation. I'm sure we will with when Dirk comes around, because this goes into Kevin Walsh, liquidity, this, that, the war, potential stuff, oil pushing 120 again today.
Ooh.
There's a whole bunch. So I didn't get the time to sit down and crunch through it all today. After I went to bed late, I had to get a little nap and then be up early again. And then I had a nap before I came on. So, but over the weekend and Monday, put some more stuff together. I'm sure Dirk's going to want to talk about Bank of Japan and dollar yen as well. So all of this kind of coalesces and ties together. So I think I'll just wait until got it in like a full framework.
Okay. TP2 has been hit. I need to move my stop losses.
So we're going into phase 2 of the year now. Drone power gone. The war in its next stage. You could almost argue this is going to stage 3 for the war. And then we got the midterms coming up and that kind of thing. Very nice. Very nice.
Okay, so stop loss is now at break even. This is officially a risk-free trade. So, where's my doubters? No, I'm joking. I'm joking, guys. There was a question here from Trade Fun Q saying, what the pro-growth plan, explain the hyper-growth types and its scaling. Can anyone can explain, LJ or Richard. Yes. So the pro growth is a new variant of the hyper growth program that we have with the 5ers. So the hyper growth is the one-step program. It's as close to instant funding as you can get. It is a one-phase pass. So the pro growth is a variant of that. It is also a one-phase pass evaluation. You just need to make 10% of profit, and then you will pass, and then you would be in instant funding. So you then get a 6% drawdown available to you, but you don't have a daily pause. So the nice thing about the pro growth is that you're allowed to trade news without any issues. It has the same scaling plan as the high stakes. So if you start off with a 5K, then the next is going to be 7.5, then 10, then 15, and then so on and so forth. So the scaling itself follows that of the high stakes. The one-step program is that of the hyper growth. It is also significantly cheaper than the hyper growth is. So it follows the same 1 to 30 leverage as well. I do like the pro growth. So yeah, go and have a look at it. It's a significantly cheaper version of the hyper growth. That's it. That's pretty much the big differences between the two.
Yeah, that's it. I like it. I think it's really good. I think it's a good in-between mix of the two. Yeah, very good. Nothing else to say. You covered it all, Rich.
Yeah, I do like it. It's one of the new accounts. You can go and have a look at it if you want to. It is entirely up to everybody else. My third TP was almost taken. Almost taken. Eight pips away. So close.
I'm wondering what to
Gold
do
is
right
waking
now.
up. Oh, LJ, why don't we trade this account? Why don't we go play around with it? Did you do
Sure.
anything,
Yeah.
Did you do anything with it yesterday?
I did put in like a couple little ones at the end there. But then I just left it. Actually, I put it in because I accidentally went to the wrong terminal and entered on that that one instead of the other. And I was like, Then once I was in it, I was like, I'll just hold on to it. So
we did get a bit of a push now on everything. I wonder why. Did we have news that suddenly came out?
I didn't see anything.
So far, nothing.
We basically just, I think there was just we just came up to a couple of the sort of key points I was looking for. So I think it was just a sort of further push to hit some of those targets, yeah.
Gold had a bit of consolidation after that move. Breakout, maybe a potential retest, but however, I do not like this this wick that we had basically on the high of the day so far. It's back into this area of consolidation on the left-hand side. Maybe it's... My apologies. Maybe it's a continuation. I don't know. JPY. It's trying to push even lower. You know what? Screw it. JPY. Stop loss there. Gonna have 2 TP points at a 1-to-1. Lock it.
Where are you going? Are you going short or long? Oh, short.
Yeah, I'm just gonna short it.
All right.
To 159. So if we get in there and the stop loss is there, that's 20. It might. It won't even be a. It'll slightly be more than a 1-to-1. Actually, I don't like this as a short. You know what? Screw it. I'm going to take a long.
I don't like it.
I'm going to take a long. I'll give it enough space. Let's say 30 pips or so. So what is that? 130 something. Yeah, and I'm risking 0.5% on this. Yeah, let's do it. Okay. I am longing UJ from where we are right now. So entry point for the two entries is 159.36 and 159.35.9, which is technically as close to 36 as we're going to get. Okay, so if this ends up being wrong, so what? So what? Who cares? This is the first one. And then gold. Don't really want to get in gold's way, but this wick reaction here at the top is bad. NASDAQ is still slowing. What's the hourly? 22 minutes before the hourly closes. How much of this did we take back? We've taken back 50% of the whole move of the day so far. So euro, pound. I'm going to buy pound as well.
I just got to grab my passwords book because I can't log in to my email just now. Hang on. 1 second.
Okay, I've bought pound. So I've sold UJ and I've bought pound. So for everybody who's wondering, this is just a demo account. This is one that we are just having fun with. We are literally just having fun with this account. It's UJ, so it's these two. So let's just do that. And then we'll do that. Why do I have GBP AUD? That is weird. Gold minimize, NAS minimize. We'll do this. Okay. So those are the two ones currently in play right now. Do this. Do that. Okay. Whatever happens, happens. NASDAQ still in this one, still waiting for it to potentially come to, my apologies, for it to come back to my TP3 in this case. So I've already locked up at least 75%. Well, this TP1 is a 1-to-1, TP2 is a 1-to-2, TP3 is a 1-to-3, and a TP4 is 1-to-4. It takes off a quarter of the initial risk at each point. So I'm currently 0 risk on this trade. TP1, because I risked 0.5% with this trade, so it means it's 0.12% per profit point, basically. So 0.125 technically. Anyway, so this TP1 locked up 0.125% profit. The second one locked up 0.25% profit, which then gives you equal to 0.375. That is a 7.75% already. The total move would be 1.25% profit if it eventually hits TP4. However, if it comes all the way down to TP, well, to stop loss again, then it is just a 0.375% trade, which is good, which I'm more than happy with. Shane saying, while you're going to town, Rich, why not short oil? I mean, why not? Let's have a look at energies. I don't want to short here.
Why is this?
Did you bump it, mate?
Did I was shifting stuff before trying to find my credentials book. No, messed it up.
That happens. Longing UJ due to that wick. Henry, you and I are in the same boat here, my friend. We're both longing and we're both wrong at this point in time. So,
What should I do on the account? Should I just like full margin every time or something
oh, dude, whatever you want to do.
for fun?
Fill your boots, mate. Fill your boots.
What's the spread on oil? Maybe I should like just trade oil.
So on, I didn't add the spread. So there we go. There we go. Spread. Spread is 8 on XTI and 8 on XBR. So, well, 7, 8. It's not that bad. Bitcoin, it's 245. NASDAQ is 152. So it's $1.52 on price. So 152.
What's the max
Points.
lots? Because I don't think
For
the for oil.
Okay, so which one? XTI or
accounts.
XBR?
I've got XBR up
Okay, so let's do this.
because
I'll
I've
chart
got
the
the
window
little
for you.
I've got the indicator on, but that doesn't seem right.
Oh, that's the wrong one. There we go. Oh, idiot. So 0.45, 0.5, 0.4, let's say 0.5 for 1% risk, give or take.
Okay,
So
that seems
0.5. 0.5 is too much. 0.49. Yeah, let's say 0.45 for 1%. So if I'm risking
yeah, what's just like full margin, right?
4%, so 1 point, let's say 88. No, 1.75.
Like assume no stop. What's full margin?
4%.
Or does it not show the actual?
No, it doesn't show. Okay, but then
Thing on
consider
that
I'm
count.
already in a trade. So
Yeah, that's true. Okay, because I've got the like 5ers one on there, but it seems to show different stuff for commodities. I think because it's putting it in points instead of.
yeah.
I
So
don't know. It's
you
doing,
have
playing out.
5% available to you. 5% where it is now. I think 0.49 is my max. That's what I have available to me. And that
Maybe I
would be
just try.
$250 of risk.
Maybe I just press numbers until something enters.
Can you imagine? Okay. UJ is flat at the moment, and the GU one is slightly in profit, but it's only about 4 pips in profit at this point in time. So let's see. Scalpy. How is NASDAQ doing? Oh, okay. Had a bit of a pullback. It's very, very flat right now.
I'm just wondering what to do right now. Because for the day, I've been bullish on euro dollar, pound dollar, Aussie, so basically bearish US dollar. But we've now sort of pushed quite a bit, but we're not yet at the central bank meetings.
Levels.
Yeah, or just like I thought we would have taken a little bit longer to push this far, right? Obviously, we got the Bank of Japan currency intervention headline, which accelerated everything.
Yeah.
Yeah. For the ECB, it's mainly going to matter the speech after, and also with their projections, where they give their base projections, then they give like a adverse projection given the war, and then like an extreme one. So there's going to be flux around what they're seeing around that.
Yeah. I told Will that I think that the EU and GU is going to do stuff like this.
Yeah, well, I think
it's going to be all over the place.
I think there'll be more pushback on rate hikes from Bank of England in general. So hence, and they come first. So I think we could see a dip there, and then euro dollar potentially strengthen. That, or we see if Christine Lagarde / the ECB don't want to frame it that way in order to keep euro dollar slightly suppressed, like below 118, and sort of cement it in this lower band. Because obviously, if their concern is inflation, going higher doesn't. Right now, it doesn't actually help because they've got the industry troubles. It's like a more complex. This is really annoying. Everything's stacked on top of each other.
Yeah. Raphael saying, Richard, what if I tell you I closed my EU trade and I feel like shit now? Dude, why do you feel like shit? Did you end up closing it here? So your trade was on this movement here with your stop loss all the way. Wait, let's do this. Your trade was here with your stop loss just below that point, and then your take profit was all the way up here, 217, 2 something. Yeah, it was the highs of that one there. So I'm assuming as you came down here, you decided to close. Let's ask the question, why did you decide to close? So if your strategy tells you that break-even bounces is something that can happen, would you normally allow your trade to go to stop loss, or was it a discretionary decision? What made you decide? Was it the fact that, oh no, it was slowing down too much? What was the reason? Tell us a little bit more about your thinking for closing the trade. Because the only reason why you're feeling like shit now is because hindsight has showed you that it started pushing up. In the moment, you probably felt, I should close this because it's going to go against me. But it's only hindsight that's causing you to feel like crap right now. Because you're seeing that, it was maybe a mistake to have closed it. So don't focus on what happened afterwards. Focus on what happened in the moment. Why did you decide to close it?
I think that's also a good thing to then go and cross-compare it in those instances to like the Dixie. And you'll tend to see the Dixie does like to play out certain structures. Now, I always have a little bit of looseness with the Dixie because sometimes you have to add context to it. Because if you do have like an outsized mover from one particular currency because there's been like a central bank or headline or something else going on, which can sway the whole index when the majority of the rest of the index is moving in sync together, and you've got one idiosyncratic currency that is skewing, the overall index altogether. But yeah, I think if you look at the Dixie, let me just check. So I looked at it before.
It's dropping.
I don't have my screen up. Sorry.
That's fine. So it is dropping. So it slowed down a little bit and then it started dropping. So
yeah, my brain is a little
maybe
bit slow.
that's why it was a silly idea to enter.
But yeah, so I would have looked at this like, we did come into that tap there, but we pushed back up and basically just into the underside of this wick here, which you could form that as structure and say, if you're really looking at that kind of, high, then we fully collapsed and really pushing down, and we've broken these kind of lows and pushing into yesterday's formation. And this, I would say look for the full movement. So Dixie further to the downside, therefore Eurodollar is likely to come back. that's the other thing I'm looking at, euro dollar. This is why I was saying just before, I'm trying to consider, have we played out the full push, or do we get a push further to the 200 moving average on the 1 hour right now on the Dixie?
You know what's a nice thing about this new account that you have is it doesn't matter if you're wrong. Just do it.
But it will if it gets blown. Or what, are we just going to reload?
Get a new one.
Just start again. Yeah, okay.
What are you talking about? You get a new one. LJ, are you taking your creatine?
I am actually. 15 grams a day.
15. Okay.
Yeah, 15 to 20. I'm running low though, so I've gone back to 15.
Okay, so you're trying to push it a little bit, and then you'll reduce it at some point.
No, I'll just keep it there. That's for
long?
like brain assistance.
Oh, you could have gotten yourself some lion's mane. You could have gotten yourself some omega-3, omega-6. They all help. They all assist.
Yeah, they all assist, but dude, creatine is god tier. Creatine's
Yeah,
great.
I'm
But
on
yeah, you need to be
5
pushing
milligrams.
that 15 grams sort of plus. For me, it's probably more like 20 as well, just because I'm like a bigger person. So in order to flood stores everywhere else before then
Yeah,
start stacking up in your brain as well. But
yeah, I'm on 5.
yeah,
5 grams.
yeah, that's like a typical sort of, I don't know, training. I would say even push to 10, to be honest, for you.
I mean, I've had really good results with 5, and I'm happy to just keep it there. Like for me, I'm not intending on becoming the buffest person on earth. I just want to.
It doesn't really do that. It's just like ATP, right?
Yeah, but I mean, it's the fuel for the cells. It's the energy and all of that stuff. And I don't want to pick up too much water weight and all of that kind of like stuff, because
Yeah.
it does kind of like retain a little bit of
It
water.
does. I've noticed my cheeks have
Yeah,
filled
so
up.
I want to get to a lean point, and I'm mainly using it just for the energy sources, the stores of energy. That's it. So I can push my rep limit a little bit more without blowing my arms out or my chest or whatever. There's a quick question here from Rickard, or Rickard, or Richard. Rick had 9. Rick had 9. I had a 5K account and I was up $600 in profit. So that's nice. That's 12%. And then I got an email from the 5ers. I got terminated since I hit equity based. What do you mean? You got an email saying that you hit equity
So
based?
he was $600 in profit, but I think it was a running trade. So he got equity based stop rather than like a bounce stop.
Oh, okay. So you then went down. Okay.
So it must have ticked over the next day, reset
All right,
whatever. Yeah.
Why did you go all the way to 12%? Why didn't you just lock out at 10%?
Yeah, should have taken profit. Sure. I mean, that's 12%.
There's no point in going above 10% because you need 10% in order to reach funding or to pass the phase. So, okay, I'm sorry that happened to you. It does seem like a little bit of mismanagement on your end, where your take profit should have been 10%, and then you could have locked it up. It would have closed it there. Rollover then, so what means is that on rollover you were still in profit, the trade didn't close, and then you started dipping, and then you dipped 5%. So you went into, let's say, $100 in profit at that point, and then you exit. Okay, so take this as a learning curve for the next time. There's no point in going above 10% at all, especially if you're in an evaluation phase, because you just want to hit the take profit point and then have the account be either scaled. If you're in funding, it'll automatically go into scaling, or you want it for evaluation to go to the next phase. So next time, if you're going to have a trade like that, if you're close to $500, which is 10% for a 5K account, just close the trade. EU or GU trade is sitting around 8.5 pips. UJ is still flat, still at break even.
I think I'm wanting to find a short here somewhere.
On EU?
Yeah, just near term, like for a little bit of dip, something like that, and then run higher later. Overall, I feel much better being long today. But I think coming up to where we are, same with the Aussie. I'm kind of eyeballing the Aussie mostly. Up at this cluster through here, plus the 50-hour moving average, dip back down to about 71.30, and then some kind of push.
Okay, I've closed the GU trade. UJ is starting to climb up now, which GU should then technically be starting to pull a little bit back from there.
Dollar yen is tempting to jump in on the reversal, but
isn't it? I'm in it.
I don't know.
SM Trader asking, how do you think about day trading on the 1 hour time frame without monitoring the screen, so meaning staying away from the screen while you're trading, versus day trading focus on the 5-minute time frame monitoring the screen? Which one is better? So different time frames. One you're at the charts monitoring, the other one you're not at the charts monitoring. What do you think, LJ? What is your opinion?
I would say they're very different, right? I would say it's almost like having a car. Like, do you want to jump in the Beamer and rip down to the shops, and run through a few gears, or do you need to go down to the hardware store? In that case, you jump into like the 4-wheel drive and you got to pick up some shelves, right? They're just very different a little bit. So the 5-minute, obviously, I think that can be very good in the sense that if you've got your process nailed down, and depending what you're trying to get out of the market, you can sit down for like an hour or 2 hours and probably knock out what most people are looking to get. Depending if you do it as like a side assistive thing to your income, or if you're trying to do it full time. Doing it full time, you're probably going to have to do a bit, much more than that for some time until you build up some kind of relative capital base and you've got enough capital under management that relative to your daily expenditure, you could spend 1 to 2 hours just knocking out a couple trades, then be done. The thing with trading on the hourly like that and then walking away, that's also very good. It allows you to get through with your day doing other things. For instance, if you do have a job or you run a business or something like that, you can just check in. It also, for some people, helps prevent them from like over trading or trying to adjust their trades or move their stops or revenge trade or jump into stuff. You just enter the trade, you set your alerts for certain key levels, and then you just don't look at it. Now, if you get an alert for a key level where you might say, okay, if this level we come to here, I might want to make a decision, either to take profit early or potentially close the trade early before you get to full stop loss, something like that. Yeah, I would say they're very different. It depends on what kind of lifestyle you want from your trading activity. Running on the 5 minutes is going to be much more bing, bing, boom, boom, active, kind of thing. So, yeah, I think context around that will probably make that decision, because one is not better than the other.
Yeah,
they're just different.
That's kind of like my viewpoint on this topic as well. It's just, the one is not better; it's more suited towards your personality.
Yeah.
Thank you for the reply. I was down like 4,750, which is the 5% I usually on my account, and indeed 40% to pass my first stage. So since I short gold from 4,749 and I hold it till now. Yeah, so the thing about the percentage, it's based on your rollover. Let's say your 12 o'clock rollover equity on your account. And then from there, It is the percentage that you lose from that point. So if you then go down 5% from there, that then will initiate either a daily pause or, stop out, depending on which account you have. So it's always important to ensure that you don't try and pass it all in one go. Like in this case, like you were up, you needed 14% to pass and you were 12% up. Don't try and pass it in one trade, mate. Take it a bit slower. Do lock up some profits here and there, because this is, it's easy for somebody to kind of forget that you have this rollover and then you lose an account. It's easy to forget.
Yeah, so just
Uncle
remember,
Jerome
like,
Powell.
yeah, I'm making my robot noises. I need to be put on recharge. That's why my program is glitching out. There you go.
Beep.
I need to be plugged into the solar grid,
Getting too much rain.
Yeah, dude. That's the thing. Like, I'm sweating bullets, and it's gotten colder here, and it's been raining, so it's like chilly outside, and I'm like drenched under here, sweating hard. But yeah.
It's good. It's good. You need to sweat out all of that extra water, mate. Get rid of that weakness that's in the body. Grant Rogers saying, "Call me crazy." Okay, Grant, you're crazy. However, each day I have a limit on day trading of earning £50 on a 10k account. That's 0.25%. Well, that's 0.5%. Sorry, not 0.5%. I know it's small, but it helps my risk management, not overtrading. Do you think this is crazy? No, I don't think it's crazy at all. I think it's well thought out. You know why you're doing it. You're doing it because you want to prevent overtrading and over-risking and all of that kind of stuff. And if I won £50 today, tomorrow I don't win £50, so what? Carry on to the next day. I like it. But yes, you're crazy.
Yeah, no, I think it's great. I think if you're doing that and you're doing it reliably, successfully, like on a repeated basis, I would then try and push it to like 0.4 or 0.5. Because then if you think about that in a month, right, and then you compound each month, like, dude, you're off to the races. Like 2-3 years, you'll be completely set. Perfect,
Yo, what's up, Rich?
Hey, how's it going, guys? What have I stepped into today?
You stepped into all kinds of shenanigans.
Yeah. Shenanigans. Basically, I'm getting... Uncle Jerome Powell has caught me out on being a robot because I was making robot noises. Beep boop, beep boop.
Zunk. I am going to go ahead and just close this UJ trade. It is not doing anything. It is what it is. And then I am going to love and leave you guys. It's lunch for me. I'm going to go and jump out and have some lunch, and then I'll see you guys a little bit later for myself, Will, and myself and Will.
Perfect.
All right, Rich. Enjoy. LJ, yourself as well. Enjoy. We'll see you guys a little bit later. Have fun.
See you, Rich.
Catch you in a bit. Cheers.
Welcome to Other Rich.
Welcome to the Other Rich. We got non-stop news pretty much the entire day today, which is...
I do.
I should imagine a lot of traders are going to be caught out by this and probably glued to their charts trying to find the next move. I don't think we're going to have to look too far with, interest rate decisions coming out today on the pound. I had a look this morning and it was just red. Made the decision today can't be a trading day for me, which I think was a bit of a blessing in disguise. I'll have to step through and kind of see what the results would have been. But you say you're caught offside. Did you say UJ?
That was Rich. He was saying he was wanting to long UJ. I was saying, like, I don't know. We were talking about before. So basically, UJ's come off pretty heavy. We had more chatter of intervention from the finance ministry in Japan, right? After, again, pressing that 160 and getting deeper into the 160s. So we've seen this come right off. Rich was talking about, a potential retracement. I was saying, when we were talking about it earlier, like, yes, from here, we've probably had majority of the move. I'd be cautious in continuing to short it. but also cautious in trying to catch, the bounce back, the kind of dead cat bounce. Like we might get some kind of a 50% retracement, but as I was saying to him, if you do want to jump into that, be very quick to either jump out or expect it to look as though it's going to start kicking off and then just fall apart. So I think on the lower time frame here, we did start to have some of these 5-minute candles jump up, and then just like I was saying, it just bang right down. So I don't want to be catching a falling knife. I don't want to be longing dollar yen at all. So, but Rich decided to go and do it. But he's doing it on our little like play accounts for stream, where we kind of do some sort of fun trades and that kind of thing, like big risk trades and that. So
these aren't the martingale accounts that he was talking about playing around with, was it?
Pretty much, yeah. So yeah, we're taking some like proper trades, like serious trades, and then other times jumping in and like hammering something on whatever's going on, just for the day, like entertainment accounts, put them that way, I guess.
Fair. Oh, I know what I was going to ask.
Combined, right?
I know what I was going to ask you. The competition accounts in the 5ers, because it's community month, they come to an end today in about 10 hours. Have you been trading that?
I did for like the first week, and then got caught up with all my own accounts with everything going on, and I stopped trading it. I actually forgot even to look at it, and then just left the trades in there. I was like, whoops. I didn't know. I'd have to find the login again.
This is where you accidentally find yourself.
Answers. Yeah. I have no idea if it's still got stuff on there. I haven't even thought about it the past 2 weeks.
Well, you need to be going something to get first place on that, because first place was sitting around about. Bearing in mind, for those that don't know, these were the competition accounts that we have within the 5ers. Now, they're open to the 5ers community, and we're going to be rolling constant competitions. And this kind of section was with 10K accounts. And I believe after about 5 days, first place was already over 10K profit. And it was like something like 13K profit. It was like 130% gain on the account. Now, we're talking about 1 to 10 leverage as well. Like, I've been trying to make that account dance, and you've got to be. I don't know how the trader made 130% gain when they've only got so much buying power. But let's say now, coming close to the end, first place is round about 100% gain. Now, there's prizes for the top 20 accounts, so completely free to be a part of this competition. But the top 20 accounts will get hub credits. They will get accounts for participating and finishing in the top 10, or top 20. And it's really interesting because it shows who's funded, it shows who's verified, it shows who's profitable. So it kind of gives a bit of a track record as to
only if you put it on your public profile. You have to click yes to display it.
So if
otherwise
you
can keep it hidden.
Private, it won't show.
Yeah.
Oh, okay, that makes sense. I've been playing around in that, much like yourself, dude. I totally forgot I even had it. And then I kind of put a few trades on it, got about $30 up, closed, and then forgot for about a week, and then come back to it. And the account's been enjoying the volatility, let's say, of these markets. But even being what I consider to be aggressive through the duration of trading this account, I think I'm like 6 to 8% up. It's the best I could do. I'm not even going to place in the top 20. And I'm looking at what top 20 needs. And there's a part of me that's like, nah, not going to be able to do it as well. So yeah, need some serious all-in big swings. And I'm typically a scalper. So I'm looking for very small movements in the market. And I could tip the account up, go all in, and probably only make $50 on a trade. So for me to make 10,000, dude, there's not enough opportunities for me to be right that many times within the time window. But it's a bit of fun. And it does build us into something that I did want to chat to you about today, and the community as well. So if you're joining us on YouTube, I'm going to be with you for about the next 50 minutes or so. If you don't know who I am, my name is Rich. I've been trading for 8 years full time, and I'm the 5ers performance coach. And it is literally my mission to make better traders within the 5ers ecosystem. So we spent 10 months creating a course. If you're a 5ers trader, you get access to this for free. If you're not a 5ers trader, all you've got to do is register to become a 5ers trader with your email. So it actually doesn't cost you anything, but you do have to register to become a 5ers trader. Then you get access to your hub. When you get access to your hub, you're going to click on Academy and then performance coaching. And there's a 3-module course in there, which is 2.5 hours of content that takes traders through pretty much all of the lessons that I've picked up and reflected on and then taught over 8 years of being in this market and being in this game. So next week, we're also going to launch something pretty exciting that's coming inside the Discord that's going to be a follow-on to continue supporting traders at the level they need at the most. So super excited for that. Also today, before I forget, we've got a Q&A panel discussion with senior management within the 5ers Discord. Now, this is going to take place slightly less than 2 hours. So if you are a 5ers trader and you are available in just under 2 hours from now, if you go into the 5ers community, you'll see under the announcements, there is a Q&A panel discussion. You're going to have the brand manager, you're going to have the CEO, you're going to have the community manager, you're going to have myself in there as well. And it is literally ask us anything. We've got a couple of topics that we're already going to touch on. So if there's anything that you did want to know a little bit more to do with the 5ers, to do with kind of what's going on behind the scenes, what have we got exciting stuff that's coming out in the future, feel free to join, feel free to ask. We'll do our best to touch on every question in there which is asked. And that brings us to now. So the topic I'm turning up with today is something I've been toying around with, even as a... am I allowed to... Okay, I'm not allowed to say that because that's actually a project we've got coming a little bit later. But a part of it is building into, if you were to start trading again, how much money do you really need to take trading serious? And just kind of have an open discussion. So there's no right or wrong answers here. We're all going to have different standpoints. We're all going to be able to afford to lose different amounts and continue as well. But I think it'd be good to build some kind of awareness around how much money do we need as a trader, or how much money should we really be thinking about to try and build some kind of sustainable career. Now, as always, LJ is going to be an outlier with this, and because he has completely different experiences, but we get to lean into that experience and say, what would it look like from a total different lens as well? So chat, this is where I want you to get involved and have a chat with us about it. If you were starting trading again and you're looking at building trading into a serious career, now we're talking about taking a part-time income that would be equivalent to, let's say, half your monthly salary. So it's like a part-time job. Or if you were to build trading into a full-time income, something you can say, you know what, this is all I do. I'm just a trader and I just trade my own money. And obviously there's going to be two different numbers. How much do you need to do this via prop and how much do you need to do this via personal account? So they are going to be different numbers. But I think to kick it off and to put it under the spotlight, LJ, what do you reckon, mate?
I was going to say to you, Rich, you kick it off first. I'm just going to grab some more like cold and flu tablets. Otherwise, it'll be all snuffly. And I will be right back. I'm sorry. I've got a terrible flu at the moment, so I'm trying to survive.
No problem.
Give me 1 sec. You kick off, or give me 30 seconds just to jump up. Yeah.
All right.
Cheers, man.
So what LJ is really telling us is that he's going to have a count in the background and make sure he's got enough money. If he had to start over again, how much would it take? So thinking about this and spending a little bit of time doing this was one of my objectives as a trader, was to build enough income that I could reliably trade it in my own personal account and build an income on my own terms. I shared this, I think it was a little bit earlier on in the week, where my attention to trading was just all about how can I build an income on my own terms. So it wasn't about how can I get filthy stinking rich, but how can I first of all build something that I can rely on. So this is something that I spent a little bit of time thinking about, and obviously depending on what you can earn per month and stuff like that, it took a little bit of I'm not reading that comment out. Just to let you know, I can see chat, and there are comments that are coming through, which I'm not reading that. But I will read this one. So, okay. Garden Design Pictures says a 500K account. Are we talking about a 500K prop firm account, or are we talking about a 500K personal account? Let's be a little bit more specific with this, because traders who are sort of still yet to reach these kind of points in their career, these are the kind of conversations which are going to be ultimately quite helpful to a trader. how much do you need to start trading? Well, when I first started trading, I did so with £1,000. I was like, it's a nice round number. I'm going to put it in a personal account. And I guess I had an expectation that this £1,000 was actually going to do something consistent for me. But when I started learning about risk management, I didn't really want to be going more than 1% risk on my personal account because my win rate wasn't high enough to support that my drawdowns wouldn't be savage. So that gave me the ability to risk about £10 a trade. Now I might finish the end of month and make 5R or 10R, which is 5 multiples or 10 multiples of what I was willing to risk. That put me in a camp of £50 to £100 a month. Now at that point, it was exciting to get to a point to say, hey, I'm potentially able to earn £50 to £100 a month. But it was never going to change my life. And so I very quickly realized that £1,000 or even $1,000 was just not going to be enough. It was always going to be something that kept trading at a level of being a hobby. I see Garden Design Pictures says prop. As a full-time career, so on a prop firm account, be looking for about 500k. Okay, now let's lean into this a little bit because what I started to realize is that the limitations on my own personal capital was like £1,000 in the real world, working a real job, saving up your money was, Cam, LJ is not going to see your previous comment. Don't worry about that. So on the previous, I was looking at £1,000. I'm not bringing it up. So I very quickly realized that £1,000 wasn't going to be enough money. And I then looked at how long it took me to earn £1,000 in the real world, paying all your bills, paying your tax, and then having a little bit left over. And I started to work out that it was going to take me ages to build the kind of capital I needed, because even with 10,000, my kind of range was only really earning maybe £500 to £1,000 a month. That's if I had consistent good months. Now we're going to half that and say that averagely maybe I was able to do somewhere between 2.5% and 5%. So even with £10,000, that put me in a camp of maybe earning £250 to £500. Now this isn't specifically what I did, but I was very easy to work out that the maths wasn't mathing. Even in the real world, a £10,000 account at the level of risk my strategy could produce, unless I was going to up my risk, which was going to mess up my psychology because I knew my drawdowns would be too big, I needed more capital. And this is where I want to lean into what Chat said with us about using a prop firm account. Now, I discovered prop firms about 5 years ago. And I'll be honest, for a little while I didn't tell anyone because I felt they were a massive scam. I felt prop firms were too good to be true. How could I pay just this little bit of money and suddenly I get access to a whole lot of money? Because in the real world, I didn't have $100,000 that I could put into the market. But prop firms come along and for $500, I suddenly had access to this massive amount of capital. And what it done after I finished getting really excited is it lowered the bar to entry. It meant that I was able to start hitting financial goals on a monthly basis that would be significant enough in the real world, and I could do so within a level of finances which was affordable to me. So the logical part of me was like, Rich, this is great. £10,000 in a personal account, it kind of wasn't going to get me the results. But if I was willing to use that kind of money through prop firm accounts, I could start. I mean, we can see in chat that 500k, I mean, you're talking what, $2,500 to buy 500k's worth of allocation if you could pass the accounts. So all of a sudden to have 500k in funding, it would open up a financial upside that I'd never experienced within my trading before. Now, I first didn't go into prop firm trading in a way to make money. I actually went into prop firm money for the opposite reason. And genuinely, I went into my very first prop firm account, which was a subscription model. I paid a couple $100, a little bit over actually, every single month just to keep the account active. And I did so not to make money. I did so to cap the amount of money I had previously lost. I had lost so much previously that I needed to no longer trade personal account and go into a prop firm account that every month I'd pay $300. And it literally was about $300. And I was like, you know what? This is going to cost me $3,500 a year to trade their account. Even if I don't make anything, it's only cost me $3,500. And there's no reason for me to move on to a personal account and risk over 10 grand if I can't trade. And what actually happened is I traded this account, learned to trade, and I spent about 8 months trading it, and I'd managed to hit some profit targets. And I started to get several $1,000s in the account. Now, the account was one of those where you had to keep your money in to scale it. And if you withdrew it, the account stayed at its starting balance. So I left all the money in, and I'd earned over $5,000 at this point, and the account had scaled up and it had doubled in size. And I thought, we're really getting somewhere now, because I was still paying my $300 a month, but the account was twice as big. And I was like, think how much I can earn now. And then I had this period of kind of break even, and eventually I chose to withdraw, and I got all that lesson, and the money I made paid for the fee of having the account. And then I finally learned that there were accounts I could buy that I didn't have to pay a monthly fee. And I was like, are you kidding me? I can buy an account for $300 every month? I was like, literally, I can buy a brand new account every month for $300 for the same price I was paying with this other firm. And it opened my eyes massively to how much potential I could leverage my capital with. I see that we got a comment in here. 10K, is that with or without leverage? So it would just be putting 10K raw balance in an account, typically an FCA regulated broker, 1 to 30 leverage in the UK, and just saying, yes, I can leverage this account to 300K's worth of buying power, but I'm not going to be full porting the account. I'm probably typically using somewhere between 1 to 5 and 1 to 10 of the leverage, but 10,000 was in there as kind of my deposit in which I would put in. So that was the journey of prop firms, and I first learned how to minimize my downside, and that's when I started to become a profitable trader. Got my first payout, and then realized I could just buy an account for $300 every month. And I'm like, this is such a hack. How am I ever going to go broke? The problem was I was so bullish and so aggressive on my this can't fail attitude. I was so excited that I'd found a way to take $200 and turn it into a 50K account, or whatever the number might be. Sadly, it was actually $500 to a 100K account, because I'd been paying $300 a month for so long. There was a part of me that was like, why don't you just pay $500? And you could lose a 100K account every single month. And who cares? Like, not who cares, but surely something would stick. And I felt like prop firm trading was the biggest hack. But what I didn't realize is that I was really getting caught up in my own bias. And I was starting to over leverage a little bit more money than what I could actually afford to lose. And the more pressure I put on myself without realizing it, the more it was starting to affect my performance. And then I started chasing. And this is going back to when we had the 30-day profitable rule. So if you hadn't made money for 30 days and your account was in negative, you'd lose the account. You'd have to buy a new one. And then at the end of the month, LJ, I'm sure you know, kind of we've all been there, where the big old sort of like, I need to find a trade now. And it's just got to go in, right? Real traders, real talk. And it started to actually put me back as a trader. And I would say that I kind of reached profitability, and then I got to a stage where the way I was aligning my trading put more pressure on it. I had this goal. Rich, you need to earn £1,000 a month from trading every single month. And I become so fixated on that number that I almost stopped trading. I just started randomly clicking on charts with just bigger accounts. And the more I was randomly clicking, the more I was losing. And it kind of took me away from the process. So I think the whole kind of prop journey is an incredible tool, but we've got to put it in the right context. And it's really good to look at how are you using, or how are you choosing to use prop firms to support your trading right now? Is it an environment in which you're choosing to learn on very safely with a small amount of downside, which is your challenge fee? Is it an environment which you're chasing big returns because you've seen this is what's possible on social media? Or is it actually you're building a proven track record and you're scaling your capital gradually, and then your payouts are becoming large enough to actually hit those financial goals? I'd love to hear it in chat, because those are my experiences from trading prop firm, and my attention went away from how much money do I need in a personal account to how much allocation would I need through prop to reliably produce a monthly income that maybe I don't hit it every month, but I'm positioned in a way that actually, you know what, I could cover my bills and have a little bit of play money with only this amount of money. And very similar to chat, the number I came through with was $400,000. And I thought, that's only $2,000 worth of commitment on my side. So obviously I wasn't going to put up the whole $2,000 all at once, but it gave me something to work towards. And then what I did is I gradually brought a small account, like a 5K. I got it funded. I got some payouts with it. And the amount of payouts I got actually was enough to buy 100K, but I didn't go for 100K. I then bought a 20K account and I'd done the same process. Lost a few accounts along the way, but there was enough change to learn my lessons from it and get back on the horse safely. But I had to do all that after I'd come through the rabbit hole of sadly jumping onto 100K accounts day one and losing way too many, way too quickly. And so now it's about knowing what's the allocation number you need. Would you stop at that number? No. Why would you? And so what I knew was I knew there was a benchmark number that I needed, and it was no longer 10,000. It was just a couple of $1,000s. If I could afford to back my trading with a couple of $1,000s and build it gradually, I could bring my allocation to 400K's worth of funding. 400K's worth of funding, around about 2.5% return a month, put me on the doorstep of $10,000, paid out around about £6,000 a month. And I was like, wow, I don't even need 400,000, but £6,000 a month would be quite a nice income. So I started to play around with these numbers, and I just want to take an opportunity to remind us, the numbers, we've all used compound calculators. They're all super exciting. We can all pull numbers out of thin air, and the problem is, what can you actually produce? Not what does your mate produce, not what you could hypothetically produce, but what does your track record prove that you have produced? And then using that as your guide and saying, well, actually, my track record hasn't shown so far that I've produced what I hope. I'm still developing. This is where we learn for cheap. This is where we say, you know what, I've got to have skin in the game and maybe go for a small account. Or at least that's what I did. Some traders will do it with demos. But other traders will say, you know what, I've got the track record. I'm now aggressively scaling my allocation, 100K, 200K accounts at a time. And there's traders in this space that can, well, there's many traders in this space that go upwards of 7 figures in allocation and go well above the $1 million mark. Even the 5ers account, just one of the hypergrowth accounts or the bootcamp accounts, just one of those scaled will go to 4 million. And so we don't have to stop at these levels, but it's nice knowing how much money do you need to get to be able to put behind prop firm accounts. And I started to favor prop firm accounts over personal simply because it protected my downside. If I went full tilt, I'm going to lose that account. If I went full tilt on my personal account, you stand to lose the entire pot. And I hadn't built a track record in the first 2 years where I could trust myself to put $5,000 in a personal account and not start adding to losses. Well, if I bought a prop firm account, I could practice for cheap. So it's something that I would definitely encourage us to revisit. So for me, that number, very long-winded way, but I wanted to give you context to it. For me to support myself solely from trading based on my track record, about $2,000, aligned very specifically with prop firm accounts. And I know exactly what models, I know exactly who I trade with, and then just a monthly subscription on a trade copier. And it's saying, well, that's all my career, literally $2,000 will support. But without the skill set, I might have needed $20,000, $50,000. Well, without the skill set, there's no amount of money because you'd just be losing. But the better you get that skill set dialed in, the cheaper that price actually comes down. Because if you really get your system dialed in and you can do, rather than a 5-hour month, if you've got a track record that shows a 10-hour month or a win rate that's high enough and you could risk higher on a trade, you actually don't need that amount of money. There's traders I speak to who have put in no more than $200 to $300 into a prop firm account with the 5ers, and they've literally changed their life with it. They've been traders that typically have lower monthly costs, but they're getting funded and the payouts are just paying their entire monthly outgoings. So that number for me was never Never something like too high. In the beginning it was, but I become better at learning how to navigate my downside. I become better at knowing how to maximize my upside, and then how do I align my edge in a way that's actually beneficial long term. And some traders will still be caught up trading 2, 3, 4% on smaller accounts, just trying to get there quickly. But what I wanted was to build a sustainable model where I could trade at 0.5% risk and have like a 20-hour drawdown. And that gave me a big enough window to be able to take the pressure off and go, oh, I'm in a 5-hour drawdown. Cool. Like, that's 2.5% on the account. You're not going to lose sleep over it. I can still remain objective. When I'm trading at 2% risk, 3% risk, 4% risk, a couple of losses and the account's done. A little bit of a slip on the mouse button and the account's breached to daily loss. And that puts me under a position of like hesitation when I'm pulling the trigger. So it was about not just how do you create the income monthly, how do you reliably position yourself to create it, and how much money do you need to do it? And when I realized that number was actually pretty low, after I digested and stopped being an idiot on my accounts, I was then able to start saying, now I can just focus on the process. Just catching up on a couple of comments, and I'd love to hear LJ's insights with this. So I see we've got a comment here saying, how long will you break even on that account? 3 months. So for 3 months, I paid $300 a month. I paid $900. The account had scaled to 100K from 50. I was up $7,500 profit, and I pulled the account back to $5,000 profit. And I thought, I can take 2.5K payout. Should I keep going? And I realized that, you know what, my objectivity was starting to break down, and the account had served its purpose. I'd proven to myself that I could build a track record that I could lean into. Love this. Henry saying, refined in the furnace, coming out as pure gold. Dude, some people just get in and just burn themselves to smithereens, and it's not really a refining process. It's just scalded. It's like a scalded cat. Ask me how I know. I did the same when I started my trading journey. There was no refinement going on there. There was just scalded cats. But over time, I was able to sort of heal from him, and those are the scars that actually give me the experience to do what I do today. And I wouldn't change it. But at the time, yeah, not going to lie, Henry, it sucked. 5 to 6% monthly returns on a 100K account sounds good to me. And that's all it needs to be. But can you do 5 to 6% returns monthly on average? Because if you can, that means you're getting funded inside of 2 months and you're never really failing prop firm accounts. I see we've got a comment here. The new pro growth isn't visible on the 5ers hub. Okay, something that the team can look into. It might be worth bringing. Yeah, I thought it
will
was.
be there. Yeah. So when you go to the hyper growth, it will be on there, and there's a little tab in sort of the top left of the corner when you're selecting. On the other side, you select like the account size. On the top left of the corner, you'll have a little tab which you can swap. It's like a slider, and it'll go from hyper growth to pro growth. So if you tap that, it should swap to the other one.
Legend. Yeah. Thank you for that, mate. Okay, Unbiased Trader says, afternoon all. Unbiased Trader, how are we doing? We're just about to get the juice from LJ. We're talking about how much money would you need if you were starting trading again? What would be the kind of money that you could use to position yourself to pay your bills? I went a very long-winded way around the roundabout and eventually landed at, I had moved away from trading personal accounts in the earlier stages and realized that for about $2,000, I could position myself with enough funding that would get me close to 400K's worth of allocation. Over time, there's going to be some burnt accounts in there. There's going to be a lot of learning process, which there has been. But over time, that's where if I 400K for $2,000 worth of investment, I could stand a really good chance of paying off my, to position myself where trading just pays my bills. And give some spare change on a relatively low stress environment. But we're now going to lean into LJ's thoughts with this. So what do you reckon, mate?
Yeah, so when you brought this up at first, I was wondering if you meant like how much capital, for like a personal, or how much capital could you get going with these days, right? Because obviously different back then when I started, and we didn't sort of have the prop environment to take advantage of, not in the way we do today, right? So I think back then for me, it was always, I had sort of a cusp number back then of about 30,000. for me. So from there, it sort of starts accelerating. You start to gap from your like personal costs, right? And you start to be able to have more left in there to compound. So for me, it's if I had to say just keep the money in there and withdraw everything and not allow it to compound at the same time, it's in that kind of 35 to 50 band, probably. So of personal funds in a personal account, which that also has my own structures, my own sort of rule settings, that kind of thing. Now, just like you were saying with
I hate to cut you off, but I just wanted for a sec. Are we talking Aussie dollars?
yeah, Aussie dollars.
Okay, so just to put this into context, you remember earlier we were talking about different traders at different skill levels and different strategies and different risk appetites as well. They're going to need different amounts. For me, that personal number, it sits at £120,000. What's that? 200 Aussie, maybe?
£120,000, that'll be 240.
240.
It's basically 2 to 1. Yeah.
So it also comes down to risk appetite. I'm a very, very risk adverse trader. So £120,000 for me would be actually coming in at 0.5% risk. So if you're saying about 30 to 40 Australian dollars, what would you be talking as a percentage risk? Or are you working it out slightly differently?
So I'd sort of focus it more on total like expected monthly return. It's like 10 to 15%.
Right?
Oh,
okay. Yeah.
And then,
gotcha.
Yeah. Then that would allow me to withdraw a portion of that, live on, keep a portion in to compound. Then that grows a bit more, that kind of thing. Obviously, you have to technically subtract, taxes, that kind of thing from that. So once you strip that out, that changes the numbers. But if you're able to keep some in there and compound it, then obviously that comes at a later date there. So yeah, I would sort of focus it that way. And then as far as drawdown or risk, I typically give myself I'll happily have like a float of open trades, like especially when I used to do a lot more swing trading. I might have a trade that might be down 5, 6, 7% in flux whilst I'm waiting for it to then run on, right? But I'd be happily comfortable with that. And depending on what's going on, sometimes if we got down to like 3%, 3.5%, 4%, then I hedge it out, come down to what otherwise would have been 8% drawdown. But I've now captured that 4%. Then we swing back up there. Now I'm actually net, and then you ride on to your higher targets. So that's the kind of thing, sort of the approximate way. So I'd still keep it within that sort of 5 to 10% max. Other times you might, if I'm going aggressive, like we've got a really good sort of market environment, or say, for instance, maybe not even a good market environment, but you've got like COVID or these other kinds of things, like I'll happily digest like a 25% swing, because that's just how chaotic the market is. But as long as you parameterize it with that being within your expectation, you're able to come out on the other side, then you can also get that equal upside as well.
Yeah. Do you know when you talk about like a 25% swing against you, at 0.5% risk, for me that would be a 50R drawdown. So do you remember what I said about kind of like risk tolerances? For me to go for a 50R drawdown at a 1-to-1 risk reward system with 65% win rate, dude, I'm getting cooked. Like at that point, I'm like doubting my edge. I need to refine. So I like that there's total different numbers here, but the accounts are going to go on a total different journey because they're used very differently to achieve their target, right? So for me, it's like, I don't want more than 0.5% exposure, but you're like, hey, I'm chill if I'm down 3% open exposure and I'm still allowing my analysis to play through, which would make sense why my upside is kind of 2.5% return a month. Yours would be more 10, 15, because your level of aggression with it is so much more dialed into you as an individual, right?
Yeah, exactly. And the other thing that also might often be with like a whole bunch of assets. So I might have like 5, 6, 7 different assets all running simultaneously. So hence, some of them will be inversely correlated. But obviously, if you get times of like adverse activity, shocks in the market, correlations tend to go to 1. So hence, you have to appropriate that if these so-called, apparently right now, inversely correlated assets all go to 1, where do you end up, right? And that's kind of where those full barriers come to. But then obviously as they come to 1, they tend to also go back the other way. So long as you can stomach it, again, it's one of those things, being able to, live to fight another day type situation. If you can do that, then for me, it's just a flux. Like, it could have been up 5% the whole time. It's no different. Like, it's on paper, right? And the other thing as well, I'm also, as the moniker goes, like, only invest what you can afford to lose, right? So if I did smash all of it and lost it all, then I would be like, that's okay, right? I've accepted that from the get-go when I've gone into it. So I'm not like putting down, money I need to buy some washing detergent next week or something, right? Ideally, you don't want to be doing that. And obviously, a lot of people either do get into that situation or may be in that situation from starting trading, which is why they've started trading, to actually try and get out of that. But of course, yeah, if that's your starting point, that's your current running point, operating point, you're going to have a very hard time, because just like you were saying, it's going to change all of your decision making the whole way through, right?
Yeah. So talking about a personal account, you're talking that maybe 30, 40K would be enough to get yourself, where it can compound, you're earning enough returns from it. What if the account starts growing to 300-400K? Are you still happy to have that sort of 4, 5, 6% floating against you, or are you going to start tightening up the risk, because in the real world, replacing that amount of money is a little bit more difficult than, say, 30K?
Well, at that point, like, if I got that far, like, I would tend to like withdraw 50% and then sort of hold 50% cash, 50% to continue to run. But yeah, I'd still be okay with that. Because then it just becomes, it's the same thing. It's just a percentage, right? So you have to then learn to actually play with bigger numbers. Otherwise, you're just going to stay in this small little pond. If you want to go out to the ocean, you got to be able to deal with the big fish. So at the same time, though, yes, I wouldn't be just full porting the whole thing fully exposed the whole time. I like to have a bit more of a barbell approach in that way, if that makes sense, where you tend to draw down, have a bunch of like safe asset stuff that can't be hurt, can't be touched, and then you have your risky, dangerous assets, which are going to be volatile and all over the place. But if that goes to zero, you're safe because you've got the other nest egg, and it actually allows you to take more risk and actually push it further because you've got that safety net. So that's sort of the way I'd approach it.
Okay. So for those of you just joining us, we're talking about what kind of money do you need on a personal account to position yourself to have a really good red hot crack at trading. Bit of a nod there to a friend of mine. Now, what about a prop firm account? So LJ, you're talking about in a personal account, but now we're going to turn our attention to a prop firm account. So for those just joining us, my numbers were, I need about £120,000 personal account if I'm going to say, hey, I'll just want to be a trader. Now, as a prop firm account, I'm going to need about 400K's worth of allocation, which is about $2,000 worth of purchase. I wouldn't buy all that at one time. I would just drip feed it in. But I'm curious, LJ's come in at 30 to 40 Australian dollars. But if it was prop firm, if you're like, you know what, I'm not going down the personal route, I'm just going to be a prop firm trader. What does that journey look like for you now?
I would say for me, it's probably about 300, right? I think that's kind of the sweet spot. And if you kind of
on about $300, starting with
$300K, like allocation, 300K allocation. So whatever that is, I know what, like, I guess sort of $1,500 or so, US. That's kind of like the general sort of going rate, right? That'd be about there. So, yeah, as far as that, that would be how much money I need. As far as allocation, would be about 300K. That gives like the appropriate sort of distance, room, and if you readjust some of the numbers that I was running, and then obviously align that with the sort of prop oriented rules and all that kind of thing, that's probably where that number sort of meets that sweet spot. Yeah. So 300K, I think is good. Yeah.
Yeah. So one of these is a lot easier to achieve than the other, very clearly, right? Which I
Yes.
guess is quite easily to be slightly biased, because if we're just building like a efficient probability model,
Mm.
I don't want to be the guy that says the numbers don't lie. But when I sat down and I've done the comparison, I used the spreadsheets and I worked out what is my most efficient way to develop as a trader, to align myself as a trader with the skill set I was building. What I started to realize is a hybrid version of the two was my best match. Now, obviously, from a numbers point of view, I wanted to go all in on prop. I wanted to push all in. But what I found is when I did this, things just didn't go as well as I'd hoped. So I actually found that a hybrid version of the two was kind of that happy middle ground. And so the goal was to get funded, get payouts, and use those payouts as a way of supporting and building those personal accounts, so that it was almost like a hedge. Even though you would trade the same systematic approach across the board, maybe different strategies in different places, but it would give like a mental relief. Because what I didn't want to do is, and I'm just going to pull a comment up here, just to acknowledge this. So we've got a comment in chat that says, on the second phase of my evaluation for my 2.5k account, so congratulations on passing your first phase, but the account's now at $2,275 left. So it only has $25 left before it's gone. Now stressed. And what I found is sometimes how I position myself within my trading would cause this similar kind of stress with this, where I was working with a small amount and I needed to produce a slightly bigger approach. So sorry to hear that you're in a drawdown at the moment. What I would encourage you to do, and this is something that I've done many a times with myself, I've taken an account, I've drawn it down to a very small amount, and it's like my logical brain then fires up and says, right, Rich, now you've got to trade properly. Now you can't lose this. So I would encourage you to look at that $25 left in that account and say, how much can I learn with this tool that I've got available? It's no longer about getting huge payouts. It's no longer about getting a massive return, but it's more about saying, you know what, this would be the cheapest lesson I can have. And maybe taking that $25 and dividing it by 10 and putting $2.50 behind each trade and saying, I'm going to give myself 10 good opportunities to follow my plan, make sure I don't tilt, make sure I don't FOMO, make sure I don't greed, and make sure that I do the work that's actually going to benefit the future me, because there's a higher chance you lose the account based on where it is to passing. And if you do, wouldn't it be good to come through that with a whole refound bunch of processes, lessons, accountability, and skill set that you can now apply to a new account on a fresh slate? What we don't want to do is drag all the old behavior patterns into the next account and then lose another account, because now we're stuck in a cycle where trading starts getting expensive. So for me, it's all about learning as much as we can for as cheap as possible. And when that time's right and you say, you know what, this account, it no longer serves me. And you might have $10 left. You might have $100 left. But at that point, it's where I got to a point where I'm like, you know what, Rich, you've been paying a subscription model on a prop firm for a long time. You've proved what you need to prove. It no longer serves you. There's better ways of aligning your skill set. And I picked that account up and I give it the big heads or tails send. No, I didn't, obviously. But what I did is I increased my risk to a level where if it went wrong, no problem, I will drop down to my withdrawal amount. But if it went right, I will rescale again and go from 100k to 200. And that trade didn't play through, but I didn't need it to, because I'd already won. I'd already proven what I needed to prove to myself. I can manage my risk, I can follow my plan, and I can be objective. And it was super cool to get an email saying, congratulations, you're in the top 17% of any trader we've ever seen. And they like, you know, they were like, we would love to interview you for this. And I was like, you know what? I don't need that. I've proven what I needed to prove to myself, that I was able to follow my rules and maintain an account balance. I took the withdrawal and I used that money as an investment somewhere else. So I would encourage you, if you're on $25 left in an account, and for anyone who's in a drawdown, look at that account as, what value can you take from it? What can you learn from it? Because if you don't fix the issues that put you into that drawdown, you're just going to take them into the next account. And then what is that saying? Definition of insanity is expecting a different result whilst continuing to do the same thing. trading gets very expensive if we can't pinpoint really what it is that we need to work on. And if you need a little bit of help with that, as a 5ers trader, or even if you're not a 5ers trader, if you go to the 5ers website and click on, I think it's Learn to Trade, Performance Coach, you've got access to Module 1 of our course. If you log into your 5ers account and register with your email address, you get access to the rest of the course. And that is they're all the lessons that I've learned on my 8 years of being a trader. And to be honest, I would always point a trader towards that. If a trader feels stuck, there's going to be something in that gives them a point in the right direction. And if you can't keep it cheap and you go bust, you can't carry on. And as LJ said, I'm going to take out a profit from when I scale an account so that I've got that money back. If LJ starts with 30K and busts his account, this is not, I'm kind of factoring that in. I've got enough to go again. There's risk management in life kind of behind the scenes. So although we apply risk management on an account by account basis, there's also a bigger level of risk management in terms of how you align your allocation. So if you can't afford to replace an account, then you can't afford to lose it. And if you do lose it, you're now putting yourself in a position where stress is higher. You're looking at alternatives to get your hand on money for new accounts. And it's by that point, I remember being in one of the coaching sessions, and sorry, I'll get off the toilet in a minute. I feel like I'm hogging it. I remember being in a coaching session and a trader asked, is it okay for me to max out my credit cards to buy challenge accounts? And I had a reaction inside that I'm impressed with myself to this day that I managed to not have an outburst. But let's just say I got triggered. I was very much inside. And I had to try and speak with this trader and say, look, how would you feel if you lost money you couldn't afford to? And they were like, well, I'm stressed now. I was like, well, if you couldn't afford to lose money and you kept losing money, how would you feel then? And they stopped and said, yeah, that would feel awful. And I was like, so what would be the best thing you could do to put yourself in a position where maybe it takes the pressure off and you could afford to trade? And I recommended, I said, well, what about trading demo? How does that feel? Traders, nah, I don't want to trade demo. I'm not going to trade a demo account. So the trader was kind of stuck with this, I need skin in the game, but I've used all the skin that I've got available. And it's why when traders say, please give me an account, I'm a very good trader, I'm like, something's not adding up here. Because if you were a very good trader, then I'd be asking you for money, like so I can buy an account.
I think if you were a very good trader as well, you wouldn't have to ask the question of should I burn my credit card on it, because you'd already know the answer if it's a good idea or not. Because if you know you are, and something just adverse has happened, you'd be able to go and do it, right? So if the question exists, just like what you're saying, if you need to ask, you shouldn't be doing it, right? Or if you need to think about it, you shouldn't be doing it. So, yeah.
Well, this is the benefit of having these conversations. I guess we get to soundboard off other people and say, how would you approach this problem? And it's certainly not for us to tell people how to approach it, but to share your own experiences. That's one of the best ways I learned, was just listening to other people when I was learning how to trade and saying, well, this person's kind of getting some pretty cool results. Like, what are they doing that I'm not? What am I doing that they're not? And I realized it was a combination of both. I was over trading when they were patient, and I was under risking when they were risking and really pushing a throttle on their valid setups. And it was, I mean, trading is a difficult thing to sit in a room on your own and go through your own thoughts and figure out what's working. So sometimes it works. It works pretty nicely to lean into other people's ideas and say, how do I feel about that? How would that fit me? I just see, imagine buying UJ.
Like right now.
No, imagine. It's because LJ said that you bought into UJ a little bit earlier on for a little bit of a gig.
Oh, yeah.
Sorry, I'm
that
pressed.
that was on the play account, let's put it, the stream play account. I did close that one for basically break even, so...
Okay, fair.
Yeah. I only saw it now, I was like, whoa.
That's a big drop.
Yeah, that's what I was talking about with the when we were talking about Dolly. And yeah, it looks good, but be careful. I wouldn't be touching longs with a 10-foot pole, type thing. Yeah, we just died now. Absolute collapse.
Yeah, this
But yeah,
is rough.
what you were saying though before, Rich. Yeah, definitely. I think one of the biggest things is just like what you're saying is you can do it for cheap, right? You can both learn for cheap and you can actually succeed for cheap, which is insane, right? So if to get whatever allocation, you're looking at 20, 30x, at least based on my numbers I was giving, less of an entry cost by going through prop than saving up the 30, 40K, right? You can get basically the same access, same buying power, same potential for 30 times less. And then also, as far as even one account and actually passing it, going through, say you even just went through like one successful stage once funded, that basically pays for what? Almost 15 challenges blown, you'd be net, right? Say if you're on like a high stakes. So yeah, you pretty much just have to hit 1 in 15 and be net. So it's definitely probably the best way to do it in that manner. And then over time, you should be able to progress. And then, like you were saying, take that capital that you are making from prop, also build up your own personal accounts. That goes into things like retirement planning, taxes, all this other kind of financial engineering you can do over here to set up your life. Which then, if you have that set up and confident, you'll probably do better in that and do better here. And then it's a positive reinforcing cycle. So yeah, props are 8-1. Absolute blessing for anyone starting out trading.
But can we agree that they're a magnifying glass for the skill set you have? So if the skill set you have is a bit icy cold, it's gonna extend that and make it feel a little bit more of the same. If you are a profitable trader, if you do make a bit more than you lose, then it can be an opportunity to start scaling up and pushing your edge a little bit further. For me, I've always used props as my demo. I wouldn't trade demo because I needed a bit of skin in the game. So my challenge fee was that, okay, here's my little bit of commitment. Let me see how this goes over time. Dude, this is an absolute massive sell-off at the moment.
Yeah.
Yep. We went from 160, almost 1-ish, to now 157. It is... She is sinking.
And this is all to do with the potential, the talks of intervention?
Yeah.
Yeah, it seems to be, basically just a cascade of that. So people have come in and just given up the goose. And then I would be further tilting on probably more neutral hawkish overall tone from Bank of England and the ECB in general. So hence that'll be dollar negative as well. So I think we've just got that cascade of trying to price this stuff in overall. So
there. Okay, I'm gonna quickly have to jump in. So two things just before I fly off because I've got to get going. In the Discord, in 1 hour from now, we have a Q&A panel discussion. You'll catch the CEO, the brand manager, the community manager. You'll also catch myself on a live Q&A session. So everyone who's a 5ers trader who's involved in the Discord is welcome to come join this event and just have a proper chat with us, find out anything you want to know kind of as to, future plans, stuff like that. So that's in 1 hour from now. It's one of the Discord events. So I'm going to shoot off prep for that, make sure that I'm super ready for that. Just quickly going to pull this up. Maybe one of you guys might be able to pull this up on screen. I know LJ spoke about it earlier. But if there is a chance to just maybe share screen, run through that option, just show them where the progress option sits. Or maybe they can just contact support. Sorry, I didn't read that whole message before I do it. But I am going to have to fly. Cheers for keeping us company, LJ. And I will catch up with you all shortly. Cheers, guys.
Cheers, Rich.
See you, Rich. Thank you.
I'll bring that
So
up.
it's just here. If you guys tap this, right? So you just go through CFD and then tap this little one. That'll go to hypergrowth if you want that. And you just select whatever account size. If you want the pro growth, you tap it that way and select the size.
Nice.
My screen is freaking out a little bit at the minute, but it's doing the freezy thing. Yeah, sorry.
I'll bring mine up. Don't worry. Let me bring mine up. Oh, dude, I just had like a killer lunch. TST.
Well, hello there.
Hello, Senor William. How is G?
Hello, people. How are we doing?
We got Bank of
Not too
England
shabby,
popping
no.
off now as well, by the way. So
What, right now?
Yeah,
yeah,
literally 1 minute ago. Yeah, Bank of
yeah.
England rates come out.
Give me 1 sec, and I might come back. I'm starting to feel more alive now.
What, now that Rich is
Medicine
gone?
kicking
Or...
in.
Oh.
No, not the Rich is gone. No, no. The trouble is, I went and jumped up and grabbed some more before because I could feel myself declining again. Now it started to kick through. Also, when Rich was on, I was trying to focus on some of the trades and stuff at the same time. It was hard to keep everything going. But yeah, all right. Give me a sec. I'll be back. I got to restart my stream anyway. It's doing the laggy stuff. So.
Dude, look at the sell-off. Like, I
know.
was under the
Yeah.
impression that we were going to have a V-shaped recovery. Was I wrong? Dude, this is... Bloops.
Mate, EU, however,
This is rough. This is rough.
Raphael must be laughing right now.
He's probably laughing.
So Raphael is like a couple of pips away from TP.
What do you mean, like...
I'll show you now.
Yeah, sure.
So this was
an
Raphael's.
euro.
Yeah, this was Raphael's stop loss. This was his entry, and then this is his TP 1 to 4R. And then this was the one that I plotted up. You know, I wanted to see it come down to this level here. We did that. We came down. We came close to a stop loss, and then came up.
Yeah, dude, that's rough. Like, I don't know. Okay, let's consider this. Let's just think of it like this. This whole sell-off that we've had is a 2.33% drop.
Mm-hmm.
We've had more than this on gold on a single move. So if you compare it to other assets, percentage-wise, this isn't like super crazy.
No.
However, for the specific currency, this is kind of crazy because you just don't see like this like level of drop-off. I mean, we had a similar sized drop on Friday, the 23rd, and then we had 1, 2, 3 days off of that, of selling pressure. Then we had 3 days on the 9th of February, 3 massive selling days. We had 1 massive selling day on Thursday the 19th. But what I mean is like with days like that, you have like a little, it picks up a little bit, and then it starts selling, picks up a little bit, starts selling, and then eventually closes low on the day. However, today is like we opened up and just went, It's like somebody literally removed the floor out from underneath a safe, and the safe just goes.
Yeah, Japanese peers with rug pulled.
Oh. Yeah, so UJ down, AJ down, CAD-J down, CHF down, Euro, JPY down, GBP down, 3.6, 3.1, New Zealand dollar, yen down, even like Singapore dollar, and everything is just down, this exact same. So that then means if you go to look at, okay, well, the Japanese stock market and whatnot didn't really do all of that much change, but this is the thing. It's the dollar. It's the dollar index that is taking a hit on this right now. So the yen is strengthening. The dollar is weakening against the yen. And against pretty much all of the other ones. Euro USD, you're climbing. GBP USD, you're climbing. USD CAD, you're falling. USD CHF, you're falling. This is dollar weakness based just on the yen saying, listen, we're going to have to intervene. And it just shows you how much of the dollar is invested in the yen. So the fact that the yen is appreciating, the dollar is depreciating to an equivalent point. Like, if I had to go and compare it to my currency, which is the USD ZAR, it's not crazy. We're still sitting around 1677. But I mean, still, like, it's a large enough attempt at a sell-off if you compare it to how much of a movement we had. Massive movement up, enough of a sell down. So it's the same idea.
Yeah.
The dollar, she is weakening.
She's weakening very much so.
Craigo is saying end of month flows mainly. I don't think so. I don't think so. You would then see this every single month.
Profit taken for the dollar.
Yeah. The fact that the yen wants to intervene is probably the biggest reason for this.
Yeah, no, 100%. Yeah, well, like you said, we had that news out for the yen earlier on, so probably plays a big contributing factor.
Still in my trade?
It's entirely the jawboning of the currency for currency intervention. I mean, this is stuff, myself and Dirk been talking about for ages, so more times where you tap into 160, eventually it's going to get smacked. And hence why
and now
I keep
it's smacking.
highlighting it. Yes, because when it comes, it is brutal, swift, and extremely aggressive. And this is where you get those like 300-400 plus pips. And this is without them actually intervening.
No, this is just talking about intervening. And then the dollar's like, whoa, 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 whoa. And then even they're dropping like, what the hell? And I was just telling them to Will now.
Yes.
This is when you start realizing how much the dollar had invested in the yen.
Oh yeah. We've had like
you see it like physically now happening. We're talking about intervention, and then the dollar is like, dude, relax. And then it's just sell, 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 and you just see the dollar index is also like dipping.
It's like, okay.
Yeah, we've had this long-winded carry trade for essentially 35 years. Japan has been the funding center of the globe. So yes, massive. And, after we had inflation go up, everyone had to raise interest rates. That only became more favorable because now you had a massive yield differential. So further pile into that carry trade. So yeah, when it unwinds very aggressively for sure.
Here's a question from Thought Feeder. How do you know this isn't an intervention? UJ and GJ down 5 ADR, and it looks a lot like intervention phase 1. They tend to time it around news events too.
Not yet, no.
I mean, intervention would be interest rate hiking.
No. Intervention is currency intervention, where they directly go in and sell the living daylights out of dollar yen, and then also do that across a basket of other currencies, and basically deploy all of their currency reserves to push dollar yen down. So they'll just buy a heap of yen. Yeah. Typically, you want to have it on the back of some kind of interest rate hike or something to make it actually stick, right? Otherwise, it will be seen as like temporary. The market tries to call bluff because obviously it is hugely, hugely, hugely expensive. The currency FX market is so massive that not even a central bank can, move the market for that long, right? This is why when people talk about market manipulation and stuff, it gets a bit silly. If central banks can't even put a currency where they want it, I don't know who else is. So, but yeah, so it looks like we'll go towards June, probably a rate hike. When you take FX intervention and actually want to deploy that, there's a whole, just with what I was saying, for it to actually stick, there's a whole basket of tangential considerations you have to make as well. Like, if you know that the dollar's just going to strengthen anyway, it's going to be completely ineffective. Then it's just like a limp noodle. Like you just hit someone with a pool noodle, right? And it's not going to work. So right now, given where dollars come down to, we've kind of had the Fed out of the way. Dollar yen is pushing higher like that. We did have the dissenting opinions for Bank of Japan earlier in the week. That hasn't knocked things. Then they come out, talk about the jawboning. That's going into the back of potential neutral to hawkish ECB and Bank of England. They get double bubble effects just from the jawboning chatter. Now, if that sticks, it's going to help them not have to intervene so heavily. They get a win. If it doesn't, then they bring out the massive ban hammer and then people get smashed. But no, when they actually do intervene, you'll know, because we'll be down 700, 800 points, not 250
What are we
or so.
currently sitting on? From the high to the low is 374.
Yeah.
So you're saying double that, at least.
Yeah, so we'd be pushing down towards 152. Over the next couple of days, you probably end up somewhere at like 148. Then you get a bounce up to like 153. Then you'd probably start trailing again, and eventually end up in the 144s.
Thought Feeder saying, nope, intervention is liquidating overseas assets, bonds, equities, and FX, and then buying up all the yen going. Exactly as LJ had said.
Yes, because they hold a bunch of treasuries and other assets. So all this stuff is still transacted in whatever local currency they've got, and then you're just basically switching out. So you're
Wanted to say
dumping
by
total dollars or whatever local currency into the market, or keeping it on your own books.
I wanted to say that my NASDAQ trade is still running. Getting closer and closer again now to my TP3 again. I'm hoping this time it's actually going to sweep it. That would then be lovely, because then this becomes a pretty good trade. Then I would have locked up already 0.75% with
nice.
TP3 taking.
Like I said, it's gone without me. You know, I was wanting to pull back a bit further down to that zone, but no, it doesn't want to do that, mate. It doesn't want to do that. Although it is holding at that that zone that I marked out, which is that consolidation zone that you've got there in orange. Yeah, we seem to be respecting that at the moment. If we can break through the high of that, then I think you're on for a nice TP4.
Yeah, I'm hoping it hits TP4. That would be nice.
Yeah, that'd be pretty cool.
It would be the first one in at least a week and a half that have gone full fourth TP. So that would be nice.
This is a really good question. I like this. So guys, do I need to know all these market info to be a successful, profitable trader?
I don't think so.
In terms of like what currency intervention, all this kind of stuff, no. Which is why, like, even talking about just trying to put it in simple terms for anyone that isn't deep into that stuff, it's not relevant to what you're doing. You definitely don't need to. No. Is it going to open up more potential avenues for you to explore for trading ideas? Sure. But you can carve out your own niche. That's a really good thing about markets. Like, there's some people out there that, trade literally just one asset and have done for like 10 or 15 years. And they do great. There's no right or wrong way to do it, per se. The only right or wrong way is the right way is your P&L is higher. The wrong way is your P&L is lower. That's kind of
literally that.
Something like that.
Yeah.
Let us know in chat as well. Let us know your opinions, because some people may say you may have the LJs of the world say you need to know this information. People that love their fundamentals like and that's why I said the LJs of the world. I'm not saying that LJ disagrees with that theory, but LJ loves his fundamentals. Myself and Rich, much more into our technicals, and we're clearly very different traders, and all three of us are very profitable traders, very successful traders. So therefore, the obvious answer lies in front of you, which is no. But let's know what you think in chat. I personally don't think you need to know such in-depth detail about the fundamentals. You can if you want, like LJ just said. Does it open up avenues for not only conversation with other traders and certainly fundamentalists and potentially more qualified people? And what I mean by more qualified is academically qualified people. You can potentially get taken a little bit more seriously in the realm of finances, not just day trading. So yes, I think it does open up a better conversation. But does it help you with your trading? It doesn't need to, and not necessarily. You can be like LJ pointed out quite clearly. You can be a profitable trader trading solely, technicals on one asset for once or twice, one or two trades a month. It doesn't matter as long as you're earning money. Doesn't matter how you earn it. Doesn't have to.
And it depends what we call success, right? Like if you're looking to go and trade millions and millions, you're probably going to need to clue in on this stuff.
Yeah.
Once you get further along, because then there's certain trade strategies and approaches that you can trade with lower capital. Higher capital is going to change the dynamics altogether because you got different entries, fills. Spread will change. You're not going to get the same liquidity. You got to have access to brokers. Like there's a whole bunch of further. More and more your capital increases, the complexity of things increase. Certain strats break down, that kind of thing. So that's a whole different thing. But if you're not looking to do something on some massive scale and you're just trading for yourself, you're good.
Yeah, literally that. Yeah, like you said, unless you're trying to get unbelievable amount of capital, millions if not billions of capital allocation. You're looking after you become a fund for companies, or you end up having your own liquidity pool and stuff like that. Then yes, you're going to need to be a little bit more clued into what's going on fundamentally.
Yeah.
But yeah,
and because even outside of the trading aspect, when you go and do that, even if you're trading very technical, like you can set up quant firms and stuff, which are much more technical. You still do need some fundamental aspects, but there becomes a whole business side of things where you have to understand, all sorts of, So without droning on,
simple answer, no.
But
answer, maybe.
Yes, depending on how far you want to go.
Do you need to know how to race like a race car driver in order to be a typical driver on the road? No,
exactly.
You don't.
Yeah.
Does it help your chances of not crashing? Maybe.
Maybe, yes. But the idea is it depends on how deep into the field you want to go, and it depends on how vast you want to make your empire. Let's put it like that. Like LJ is saying, you can go without. It is niche. However, those that are the most successful, that have let's call it millions in capital, they utilize this. So you don't have to become a successful trader. It just depends on how far you wish to go. It's as simple as that.
It's like going to the gym as well. Like you can have a great normal physique. If you want to get dialed in and be diced, you're going to have to start thinking about biology, considering hormones.
Yeah, exactly.
What time you eat. Like you have to get more and more deeper into that sort of side. But if you just want to kind of look good when you go to the beach, no, you don't have to get crazy with it.
Yeah, and 100%. And I reference my brother a lot when we come to this sort of thing. There's only two ways to drive: sideways, right. Well, we now know that Shane Joyce drives a rear-wheel drive.
Dude, the first thought that went through my head was Underground. And I was like, I want to install Underground and play Need for Speed. That's what I want to do. Just when he said sideways left, sideways right, I just, in my mind, was Tokyo drifting and doing the drifting around the... That's all I wanted to do now. So...
Oh man, I love that. But yeah, like I was, like we were just mentioning, you don't, LJ, you were pointing out about relating it to sports or relating it to the gym. My brother will still have a pint, he'll still have a takeaway or a pizza or a Chinese or whatever. He'll eat when he wants to eat. My partner actually ordered me food to arrive. She ordered me lunch because she knows that I was working hard yesterday, doing late nights in the office. So she's like, I've ordered you and your brother lunch. We had a couple of pasties and a coffee and a donut, because she wanted to treat us. He still looks cut up as hell. Like he still looks better than most people's dream bodies, but he still indulges in garbage food now and then. So that it goes to show you can still have your sort of you don't need to be so dialed in unless you're trying to become that top 0.1% of bodybuilders or traders.
I wanted to ask you: Is Cece back in Wales with you?
Not in Wales, no. She's not in Wales with me.
Oh, das ist sad.
Sorry, I was just going to say, I might say bye to you guys. I just have just full brain fog, still sick. So
Dude,
I'm not going to even be that much helpful.
Bravo made it last this long.
Bank of England, ECB, that kind of stuff. But yeah, we'll just rehash it later on. I think we've already had the massive run, so
Yeah.
you guys already know what to look for. Went through the Bank of Japan thing, so I'll see you guys on Monday. Hopefully, I should be be right as rain by then.
Absolutely,
So,
man. Yeah, no, dude.
You guys
I
are-
honestly wish you the quickest recovery. You know, we can tell that you're brain foggy a bit. So, dude, I'm amazed you lasted this long. You're an absolute trooper for it.
Yeah, I just feel stunted. Like, it's like I've got a misfire in the engine. I'm just like,
Yeah, not firing off all cylinders. Like.
Yeah, LJ's a bit slow today, guys. Slow.
yeah. Alrighty, guys. See you tomorrow. I will see you guys in the Discord tomorrow as well. Plus, don't forget the Discord event tonight with the AMA. Be there or be square. See you guys.
Cheers, LJ. I just wanted to bring this up.
Yeah, I know.
You,
Thought Feeder, awesome stuff, man. That's sick. You're in Gwent. That's not too far from me. I'm Pembrokeshire. So as you can tell, I'm Welsh without sounding Welsh. So yeah, I'm a Pembrokeshire boy, born and bred.
David Monday, we did bring up your comment, but it's exactly the same answer as that of, do you need to know the fundamentals or macros in order to be a good trader? The answer is no.
Actually, I'm going to build on this a little bit because do you need to go to college or university? No, not at all. I went to college and did travel and tourism and business. So I didn't study the financial markets at all. I got no fundamental knowledge. I got no education around trading. Oh, lovely stuff. However, if we can close now, like above this zone, this would be beautiful. However, does it help? Yes. Have I been in meetings with institutions, and have I been in meetings with people that allocate capital and people looking for traders? Yes. Do they want qualified university students? Do they want qualified college students? Yes. So simple answer. Do you need to go to university or college? Again, it depends how far you want to go. If you want to go work for a bank, or even if it's a small-time firm with a small liquidity pool, yes, you are going to need qualifications. Whether it's university, whether it's you can go to you can actually go apply for courses. You don't need to go to university. There's like open uni sort of courses. So unless you've done courses, no, you're not going to be able to access these trading floors as qualified.
Yeah, but you don't need them. The question was before you become a successful trader.
It depends on where you're going, because me and Rich, we're not qualified professional traders in the traditional eye. Instead, what we are is successful, profitable traders. We're self-taught, we're profitable, we earn money, and that's how that's how we trade. So no, you don't need to, but if you want to become a professional suit and tie guy that walks around on Wall Street, then yes, you will need to go to university. Hello,
Ian Smith is asking, hello, appreciate anyone answering. I recently passed my phase 1 of the bootcamp challenge, but now I am not sure how to access phase 2. Thank you for anyone's answers. Okay, simple. You should receive an email saying congratulations on passing your first phase, and it will let you know that your second phase is active. So second thing that you will see is when you open up your bootcamp, or let's say you've closed your account, your trading account, not close it, but you've closed your terminal. There we go. And you open it again, you'll see that your second phase, depending on the size of the account, would have changed. So, well, it would have changed regardless. If you were on a 20K bootcamp, you would have started out with your first phase being 5K, second phase is 10K, 15 for the third phase, and then your fourth phase when you're funded would then be 20K. If it was the 100K, you would start with first phase 25K, 50K with your second phase, and then so on and so forth. Okay, so depending on which size account you have with the bootcamp, is going to depend on what your next phase's allocation is going to be. You'll get an email, and if you don't get an email, you can just send a message to help@the5ers.com, and they will then go and have a look for you. And then alternatively, you can go into the hub, and there is a little chat box on the on the bottom right of the screen that you can go and just ask there. And then they should be able to give you, let's say, a ETA on when you should be receiving your next phase. It should be within 48 hours, generally. Okay, I'm busy heading on my way to TP4.
Yeah, mate, literally.
When I went for lunch, I closed everything because I was like, I don't want to go.
Right.
No, I didn't close the trade. I closed the terminal.
Oh, okay. I thought you meant you closed. No, what have you done?
No.
Yeah.
No, I closed the terminals because I didn't want to accidentally have something come and click buttons like a cat.
Yeah, no, that makes sense.
And two, I didn't want to, while I was here, feel like, oh, I need to close the trade. So I closed the terminals and I just opened it now, seeing, okay, I did indeed hit TP3. So it's on its way to TP4. If it hits this, Labosh, then I'm back over into Profitsville. Well, I'm already in profit for this month, but I would be in Profitsville for the month as a whole. Wasn't the greatest of months. I'm going to be dead honest with you guys. Wasn't great. Started out a bit in profit, then a bit back to break even, then back into drawdown, back into profit, back into drawdown, back into profit, back into drawdown. It's been a bit of a roller coaster this month. Yesterday got a nice trade yesterday. No, not yesterday. I'm lying. The day before yesterday was FOMC. Didn't trade yesterday. I traded on Tuesday. A nice trade on Tuesday that got me 1%. Well, it was close to 1% trade, and then I got one now again today. Hopefully, this one hits TP4, in which case it would be a 1.25% winner.
Yeah, dude, I see. I like this.
Anytime, mate. Anytime.
I got this magic little button. I don't know if you can see it. It's an on-off for my keyboard because I got a cat as well, and it loves my office because the door's always closed, so it's always really warm in here. And I've got like a load of blankets because, you know, when I'm doing late night sessions in the office, you know, CC will, you know, she'll come chill in the office with me and she'll fall asleep. So she puts a blanket on. So the cat will come lie on the blanket. And every now and then the cat will look at the charts and be like, ooh, it looks like he's in a trade. Let's go jump on the keyboard. So I've got this magic little button that turns the keyboard on and off. So I make sure that there's no possibility of that happening because, you know, we know a certain person who doesn't like. Yeah,
he may or may have not just left.
who may or not just left. They had a fantastic experience trading with cats. So now I turn the keyboard off whenever I'm not in the office.
Yeah. So Money Diary is asking, hello, sirs, why do you have so many TPs? I'll tell you why. So if I just go here. Did it hit?
Mm-hmm.
No, it's spread.
It's not hit yet. Oh, you
spread.
Yeah.
Spread.
That's so frustrating. It
didn't.
Like, oh, surely.
It went up to 357.49. It just didn't. It's almost there.
Come on.
Surely. Oh, come on. Come on.
Surely.
There we go.
There it is.
There we go.
Oh, brilliant.
On that candle. There we go. All right. Okay. So Money Diary, I'll explain it like this for you. And it's the simplest way that I can do this. Okay. In the past, I used to have a typical 1 to 2 hour trading. Okay. My strategy that I have is a reversal and trend continuation strategy. That's how I trade, okay? So I look for reversal points like this to enter, and I look for continuations of trend like over here, where you have trend is going one direction, we slow down, and then we volumetrically continue pushing lower. All right, so in the past, when I used to have a trade, like imagine I had it there, I would go 1 to 2, all right? And that would be my trade in a nutshell. I would leave all of this down here, potential, on the table. Okay, So I had a talk with LJ a while ago, and we were talking about, like privately, we were talking about why don't you let some of your trades run? And I was like, well, my trading has always been set amount and then I'm done. Then I started doing some backtesting, the exact places where I would normally take my trades. And I looked at it in the sense of, okay, why don't I try and have a portion of it? So a portion of it take profit at, let's say, a midpoint like this. So you have the 1 to 2, and then you have the 1 to 4 as an example. So when I take profit here, I take off half of the percent, or half of the trade of my risk, and then I let the rest run to the bottom. So once I've taken off here, I move my original stop loss to break even. That was the original idea after having the discussion with LJ. And then I started looking at expectancy, and I started looking at potential. What is the best way that I can get the best return for the time that I'm going to be putting in? Secondly, what is going to be the easiest to manage? If I'm going to be sitting here and having to move my stop loss every single time I reach the specific TP point, I decided that is going to be too much management. I want to enter once. I want 4 TPs to be placed, and I want to move my stop loss only once I've hit 1. And then what would be the best way? So I went and looked at it mathematically, and the best one that I could come to is removing 20 or 0.25. So let's say 25% of my original risk at every TP point. I have 4 TP points, as you can see with this one over here. There's 4 TP points. So TP1 is a 1 to 1. TP2 is a 1 to 2. TP3 is a 1 to 3. And a TP4 is a 1 to 4. If I'm risking 1%, so I'm going to write it like this in here. 1% risk. Okay. If all 4 of my TP points is hit, equals 2.5% return. So it's a 2.5 hour trade if all 4 TP points are hit. Okay. Straight simple. However, if I hit only TP1, so if only TP1 is hit, then that equates to 0.25% of the total risk. So if I had 1% of risk, it would be 0.25% locked up. But then I would still be sitting with 0.5% risk overall across the 2 trades. So, or the rest of the trades. So basically how it turns out is TP1 gets hit. That is profit. So that is a 0.25% profit. The 0.25% profit, then I've already removed 1 trade. So once it hits TP, it removes the trade. So it breaks it into 4 trades. So the 1 trade is completely off the table. Now I'm left with TP2, TP3, and TP4's trade, which also has the exact same stop out point, basically. So TP1 getting hit reduces my risk from 1% to 0.5%, because this 1.25 that I've locked up can now be used to cancel out TP2's stop loss. And then I only have TP3 and TP4 stop loss that's technically still active. So even if it does go all the way down and hit my stop loss, I'm only down 0.5% of the day. All right. And then if TP2 is hit, I draw it to stop loss. I draw my stop loss to break even, which then locks up a further. Let's let me just remove those. TP1 equals 0.25% locked up. TP2 will again equal 0.375. Or in this case 0.5. Sorry, I'm thinking of 0.5%. TP3 would be 0.75%, and TP4 would then equal to 1%. So when I reach TP2, I reduce my risk to 0. So the only time I have risk is when I am at TP1 or if I have yet to hit any of the TPs. It's the only time I'm actively losing a trade. The rest of these, I am risk-free. I'm locking up as I'm going. Here, I've locked up 0.75, When I hit TP3, it's another 0.75. When I reach TP4, it's another 1%. So I'm allowing my trades to run on the days where I get good runners, like today, and on other days where I'm getting my normal 1 to 2, which is more often than not, I'm still getting a reasonable, in this case, 0.75% trade. And that's why I have multiple take profit points. I'm locking up profits as I go. And then if it were to start pulling back, then I know, okay, that's fine. I've locked up at least X percentage. So every time I lose, unless it's obviously going straight to stop loss, I'm never losing that 1%. I'm either losing 0.5% or 1%. So it's my way of managing my risk, but also maximizing my return. So long-winded way of explaining it all, but that's the gist of it. That's how I have decided to approach this.
You've just said it's a long-winded way of explaining everything, but it's your strategy. It's something you've taken a long time to develop. It shouldn't be explained in 30 seconds. It's going to take a bit of explaining words work. It's going to take a bit of explaining. It's going to take a bit of sort of like, you talking a bit of technicals, talking a bit of how you've developed it and why you've come to that sort of reason, how it works. So it's not necessarily it's not necessarily something that's going to be over and done with and explained within 5 seconds, is it? So dude, take as long as you need to explain how that works. The guys are lucky that you explain that to them, because I've known a lot of people who have developed stuff like this and they've sort of hesitated explaining it to me. Like they've sort of like looked around them and sort of made sure their phone's not recording just to make sure no one can hear them, and then they'll divulge and said, right, well, you cannot tell anyone this. And I'm like, okay. And then they'll go and explain something like, let's say, for example, something similar to you, Rich. And then they'll go and explain it. And they'll explain it to me and they'll say, right, I do this, then this, then this, and this, and this, and this, and this. And I'm like, yeah, dude, it's not that deep. That's just your risk parameters, But because it's taken them so long and it's taken them all these years to develop the understanding on how the markets move to actually divulge this information to me, to them, that's a big thing. So guys, you should, and I don't want to condescend anyone, but you guys should feel lucky that Rich would happily explain this to you. So even if this took 2 hours, even myself, I sit and listen like it's gospel. I'm like, I want to listen to this and I want to understand exactly what he's talking about, because Rich has taken a long time to get to this.
Yeah, this is 6 months of back testing, probably 2 months of actively just having it play out. Let's put it like that. I used to, when I get to like TP1 or TP2 or even close to TP2, I still want to close the trade because I'm like, I have to lock up the profits here.
Yeah.
So, yeah, psychologically 2 months, back testing 6 months. So let's say 8 months. 8 months to get to this point.
Dude, 8 months to get to where you are now, and that's with the understanding of what you want. You can't go to the markets, and we've discussed this in this morning's session. You can't go to the markets without a plan. So you're gonna. In fact, let me stop sharing my screen for a second because it's doing my bloody head in watching me stick. So you can't go to the markets without a plan. So what you do, you go to the markets with something in mind that you want to achieve, that you want to do. So it's taken you 8 months knowing what you want to achieve, knowing what you want to gain out of this, and it's still taking you 8 months. It's taken you from the start of your journey as a trader all the way to when you start deciding that this is what the outcome that I want. So prior to the 8 months, it's taken you all of that time just to understand what you want.
Yeah.
So, dude,
predominantly that. Yeah.
Even as a trader, as a profitable trader, I just want to thank you for sharing that information, because honestly, it's something that I want to take. Like every time I listen to how you talk about your risk management, I'm like I wonder if I can put that into one of my strategies. Like I wonder if I can hit a TP 1, 2, 3, and 4. I wonder if I can divide my risk into 4. I wonder if I can take off a certain amount of profit and move to a break even. Like, what would that do for my trading? And I've been a profitable trader longer than you've been a trader, I'm pretty sure. You know,
Yeah.
so therefore, you know, it's not even it's not even a thing of, oh, he's got more experience than me, he's got less experience than me, so I'm going to listen or I'm not going to listen. It's, bro, this guy has taken something to the table that I have not thought about. What can this do for me? And that's what I love about us here at the 5ers stream. You know, LJ dives so deeply into some of the stuff that he talks about, and I'm like, when it doesn't frazzle my brain, I'm like, what can this do for me? Like, how can I take this on board? And this is what you guys in chat should be doing. You know, I talk a lot about psychology, mindset, fitness, health, wealth, and trading. You know, and how that relates and how important that is as a trader, certainly as a full-time trader. So therefore, you know, I offer that sort of side of trading that you guys probably or should take on board. You know, if you haven't already. Likewise, you know, with Rich, his risk management is inspiring. You know, I remember when you had Rich, you know, best of 3 is me Butler. I was like, dude, this best of 3 is me strategy is incredible. So yeah, you know, we all offer a different piece of value to the puzzle of trading. So yeah, big kudos to you, man. You know, the fact that you're happy to divulge this information, you know, it's awesome. You know, so we're all super grateful.
First and foremost, thank you very much for the nice things that you've said, mate. I appreciate that.
You know, I do troll you a lot, so sometimes, you know,
Yeah,
I have
sometimes.
got to be nice. Every
Yeah.
now and then.
I don't mind sharing the stuff because honestly, it's not going to impact my edge. Because I think people come to realize after they've actually done something like this, whether or not it works for them or not. This works for me. And that's where my edge is in that.
Yeah.
I wanted to say this. Henry asked, do you trail your stop loss when TP3 has been reached? No, I do not. And the reason for that is very simple. Often, if I'm trailing, I won't know to where I need to trail it. So I can go around and say, okay, cool. If I reach TP3, I'm going to move my stop loss to TP1, or I'm going to move my stop loss to TP2. In that case, fine. But that would then mean that I would have to sit here and actively wait for it to reach TP3 and then go and move my stop loss up, because I don't want to have an EA do that on my behalf. So the simplest way for me was, I'm going to choose a singular point to have as my, if it reaches this, I will make it a break-even trade, and then I'll leave it to run from there. If it gets close to TP3 and it starts turning around, then so be it. Then this is one of those trades that ended up hitting TP2 and then going down to break even / stop loss, and I'm fine with that, more than fine. So I have also found that with my back testing, that if I trail, the trailing, sometimes you can have a literal, I'm getting close to TP2 and then I come all the way down and then I just dip back into drawdown, and then I start picking up, and then I just hit TP3, and then I start coming down again, and then eventually do that. So the question is, to where should I need to have my trailing? If I have my trailing too tight, it's going to stop me out prematurely. Where having it at break even, at least I'm making it a risk-free trade, and then I'm just letting it run. It didn't really impact the overall expectancy, which leads to where was it now? Oh, thank you for this nice trade management, Rich. It's like manual trailing stop loss, and the logic of narrowing down your risk as the trade progresses is awesome. Thank you very much. I appreciate that. It's this. So, Rich, does this method improve your expectancy over a fixed 1 to 2 that you were previously using? Yes. And here's the thing. So I know the percentage from my back testing what my expectancy is for each TP. So for TP1, I would hit TP1 78% of the time. So 1 to 1, 78% of the time. TP2, was 68% of the time. I should actually write 2. There we go. Was that TP3? TP3 was 57% of the time I would reach TP3 before going back to stop loss, or in this case, a break even. And then TP4 had the lowest at 38% of the time. So if I only got TP1s and TP2s with this method, it is barely break even. So hitting TP1, every time you hit TP1 and it goes then, this is now assuming it hits TP1 and then goes back. So you have a minimum of going straight to stop loss. So straight to SL was 22% of the time. So you basically have a 1 in 5 going straight to stop loss. But you don't have a 1 in 5 going to a 4R in this, or 2.5R in this case. So if I just had it as a regular 1-to-2 or a 1-to-1, in this case, it's slightly break even. I make the most of my money on TP3s and TP4s getting hit. However, where if I had a 1-to-2 or trade with my regular one, that was still profitable. It was decently in profit. It uses the exact same strategy, except that I cut it off at TP2, the full movement. So I would get a 2R trade straight up from 1-to-2R. So if I was risking 1%, I would make 2% there. But it had this 68%. So it meant 32% of the time it would go straight to stop loss. So you can work that out. So expectancy is equal to the percentage that you win times, where's the multiplication? Okay, well, I'll just say X, times the, where's the dollar? Dollar amount when you win, minus the percentage that you lose, times the dollar amount when you lose. So you can have bracket, 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 bracket. So you subtract that. So it's easy from there on. You say, okay, whenever I win, I am winning 0.68% of the time, so 0.68. Multiply that by the percentage. In this case, it's 2R when I win. And I subtract the 0.32 times 1. So in that case, it is 1.32 minus 0.32, and that gives you an expectancy of 1. Now, this is now excluding commissions or anything like that. You're just purely looking at a 1-to-2R. So that was an expectancy of 1. So it makes sense to do that. But the days when it runs, it goes better than an expectancy of 1. It goes higher. Then it's like a 1.2, 1.23-ish, somewhere around there. So it's on the days where it runs that I make where I actually make a good ton of money, good percentage of money in this case.
Yeah, nice.
So I think actually this 0.36, 0.04. So that's the expectancy. So this is an expectancy of 1.04, which is good. It's a very good expectancy.
Yeah, absolutely. Yeah, do that sec. Also, I just want to say, just before I forget, I did start this comment from Thought Feeder. No, I don't often meet many people in the live stream that know Pembrokeshire. Pembrokeshire is insanely beautiful. Lucky you, perfect for trading, day breaks and walks. Just want to say, it's awesome that you know Pembrokeshire, because like I said, I don't meet many people that know Pembrokeshire. Obviously, you're from Wales, so of course you're going to. But yeah, trading down here is the best, because I can trade and then just go for a coffee, go for a walk, and go chill, and literally just, providing the sun's on your side, do whatever I want. It's so nice. But yeah, big shout out to Pembrokeshire. I love my coastal town, man.
Ooh, I love my coastal town.
Love me coastal town.
Gold seems to be slowly pulling back a little bit from where we are, from this high point that we had earlier. Strong push up. We had some consolidation, break, retest, continuation higher. However, we have failed to make a new high with this fresh impetus to try and push price up. Starting to get stronger pullbacks now. We're getting closer to this 50 EMA. If we do push back lower, we obviously have the area of consolidation to test and then a base area over here, which you can see is that last few candles before we had this nice spike up. So there is a potential for us to come and test the consolidation. We'll see what we're going to do from there. If we do break through, base, and then potentially lower. You can see on the MACD as well, the volatility is starting to come down quite a bit. Oh, not volatility, the volume in this case. So how volumetric we're moving, the momentum. There we go. That's the actual word I was looking for. Momentum is starting to come down a little bit. So I don't know if we're going to have how deep of a pullback we're going to have. We're getting closer to that New York Open as well. I saw a message and I was like, oh, is that on me? No, it's not on me. I'm good.
Nice. I'm just watching. We got. Let me have a look again. I'm sure we got news out. I know. We've had all the news. No, we haven't. Okay. I don't know if we'd had all the news out or not. No, we haven't. We've got
we have
out in 20 odd minutes.
Yeah. That's Governor Bailey was speaking. So now we're going to have the euro refinancing rate and the monetary policy statement, which is coming out in 25 minutes.
Yeah. Indeed, it is indeed.
Dude, we're going to go and buy or have paint be blended for us or mixed for my office. So
nice. What color are you going?
I'll keep it a surprise, but it is a very lovely blue.
I was gonna say, is it gonna be a blue, or is he gonna think
it's gonna be a blue? It's gonna be a blue. Something.
Okay. I was gonna say it's gonna go two ways. You're either gonna do a blue, or you're gonna have like a base color, and your accents are gonna be blue.
Oh no, it's I want a whole wall. It's gonna be a deeper blue than this.
Okay.
But it's going to be something like this. Obviously, you see this little light that's here. That is going to be an accent, and then
okay, yeah, nice, yeah.
This painting, the koi, is also going to be there in the office. So
yeah, nice. So you can't see now because obviously I've raised my desk up, but I got the blue down here. It looks purple on camera. This lightning bolt here, I've run out of batteries on it, but that's also blue. I'm moving offices over at some point this year. I don't know when, but I'm moving to like a proper office out of the house, and a lot's going on with me this year. So I want to move to a proper office space. And I think I don't know what style to go with. I like my blues, I like my neon colors, I like my sort of like modern office look, but I've kind of fallen in love with that sort of oak, dark wood, leather, that old money style look. I've kind of really fallen in love with that at the moment, and I kind of feel like it would go with my. You guys know that I love my cigars and whiskey, so I kind of feel like it would go with my cigars and whiskey aesthetic as well. So,
oh, dude, that sounds cool.
It does, but then I'm thinking at the same time, I love my LEDs. So, like, how can I fit like modern LED look and lighting into like an old money style leather and wood aesthetic? So like that's something I'm sort of trying to design up at the moment.
You can talk to Alex.
Yeah, maybe I should.
She's designing my office.
Dude, I keep forgetting how talented your wife is when it comes to design. Yeah, I keep forgetting that. Maybe I'll have a word. Yeah. I say, Alex, I want this. What do you think? Give me some color combos.
You can use yellow LEDs. You can, but you can also do other colors as well with
That's
that
true.
reddish
I've
tones.
got a remote control around here, so I can change the colors. To be fair.
Yeah. Because you don't have to go the typical yellow. There's so many colors you can go.
I kind of like the idea of that green look as well, because I'm taking like so I got artificial plant there, and then I've also got a window in my new office, so I've got a real plant over here in my window, and I thought, okay, so if I got a bit of green from the plants, and then I got like wood. You got that old, like, sort of dark oaky wooden sort of aesthetic. I've got the cigars, obviously browns, and then I've got the leather, which is going to be like browny red. So I'm thinking I may go like a green LED, like a really dim green LED.
Like, you can go, in this case, you can go complementary colors, or you can go completely contrarian. So you can have colors that oppose each other, but makes the one stand out more. So you can do that.
True that.
So I'm going a neutral color and then a bright, like, standout color, and then the lighting that I'm doing is going to be more in line with. So it's going to be this blue that's here, but a darker blue, brighter, more saturated, more matte. It's going to be satin. It's going to be a satin finish.
Yeah.
Satin finish with that.
Yeah, dude.
After that, we will wait for the video setup. Yep.
Yeah, dude. Should we do it? Should we do like a time lapse of me and you doing our office?
Mine's going to be very quick.
Fair. Mine's going to take forever.
Yeah, mine's going to be very quick.
I'd probably somehow make it.
It won't even be worth a time lapse. It just will be me standing there. Hi guys, my name's Richard, and I'm going to paint my wall. And then you see me painting it. My wall is done. Thank you for watching. Subscribe to my channel. That's pretty much what
No. Guys, he's completely lying to you. It's going to be more, hi guys, my name's Rich. I'm going to be painting my office. Then it's going to be, Alex, get on with it.
Come on. Paint it quickly.
Babe, you're supposed to paint my office for me, but make it look like it's me. I gave you my jumper.
Do you know what's cool is she has all of the design programs, obviously, that you can think of.
Yeah. Cool.
And she has modeled the whole room, and she's like, okay, this, and then she's got a Miro board with all of, like, the different colors, and then, but what if you go more like this, or more like a sage this, or more of it? And I was like, I don't want that. I want this one. This one.
Oh, blue. Yeah. It's like, you know what you remind me of? Have you seen Little Britain?
No.
Oh man, you want to watch Little Britain? It's so funny. You remind me of that.
I don't watch a lot of TV, to be dead honest with you.
No, you can't watch. You got to watch this on like something else. It's been cancelled. There's this disabled guy in a wheelchair, and he goes, "On that one," and he's like, "You sure? But this one won't look as good." Yeah, no, I want that one. He's like, "But are you sure? Because we can go with this one, and it'll look better." Yeah, no, on that one. So anyway, they do it the way he wants it, and he goes, I don't like it. It's like, yeah, no, I know. I can envisage it. I can envisage Alex being like, Rich, you sure you don't want that, my love? No, I want it that. But this would look better. You're gonna finish it. The office is gonna be done. You're gonna be like, yeah, I prefer it your way.
So the nice thing is, it's just paint, mate.
True, you can always
paint over it again. It's not like I'm building a house and then once the house is completely built, you go like, I don't like it, and then I have to rebuild the house. No, it's just paint, mate. It's just paint. You can always just repaint. It's an extra few hours of drying and waiting for it, then go over with a base coat and then repaint it over that again. There's a question here from Eric asking, Rich, do you think EU might sell off on the news event? Well, news events in half an hour. We have the refinancing rate. So that's the interest rate. If you have a look at what happened to the pound, if we assume the same thing is going to happen with the expectancy, the forecast, we had the forecast. We had the forecast as well as the actual being exactly the same, exactly as they forecasted on the pound. And if you look at the pound, what did the pound do?
Ding, 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 ding. What did the pound do? No. Okay.
And I think that we're going to have the exact same outcome for the euro with the refinancing rate. And I do think that we're going to have a similar reaction. I think in this case with the pound, what was the time of that one? It was 1 o'clock my time. So that gives you this candle over here. So a bit of a pullback, attempt at a push up, and then a push lower. Not really even a push lower. We're just really struggling to break above, and now we're starting to break that low, but we have not come down lower than the 50 EMA as well. With the euro, it's the same idea. We've struggled to break through above. We're getting a little bit more volumetric pushes lower. We still haven't broken the 50 EMA. We do have, if I can just show this, this whole area here, basically. So we had 1, 2, 3 attempts, push through, retest, and push up. We've got this area over here that we still need to break through. So you can basically say this is a base area here. If that gets broken, we've still got this area down here to potentially come and test. But what is the upside? Where are we testing on the upside if we were to go higher?
On you, I mean, you got yesterday's high of day. So the high of yesterday, which is the Asia high. Yeah, there. But we hadn't quite come up to it. We got close. We just didn't quite.
But here's the thing. You have this whole segment here, that whole consolidation there, which coincides with that high, which is you've already wicked into it. So I'm thinking we're possibly going to have a little bit of a
dwindle down, even if it's a pullback. Like I mentioned earlier, or
not strong.
I think this was yesterday. I think I mentioned this. We could potentially be looking at some bullish movements coming through on the euro, especially when you look at the higher time frame. But I don't know. We've had some bullish movements today. It could be a potential reversal, but until we break that low that you marked out before changing over to the euro, that low, if we could, if you go up onto the 1 hour. Gosh, unless we can break that low now, I wouldn't be too interested in selling this. However, how I say that, where you've marked out that high, where just before yesterday's Asia high, we've got sort of that zone which we've respected it 3 times now. We got the consolidation, we got the retest. Now this is the 3rd tap of that. Unless we break and close above and show some form of disrespect to that zone, price is still bearish. We're still channeling down. We've not broken new highs.
Yeah, I do think that there's a potential of us dwindling lower. However, never ever think that I know everything. I don't. This is just speculation. I'm just speculating what I think is going to happen based on the fact that we've already had reactions. And remember, the last time we reacted off of this, we made a new low in relation to this low over here after the establishment. So establishment, retest, new low. Yes, very bullish day so far, but I'm waiting for the reaction. I mean, this may just be what can happen. We come down here, we pick up when we start pushing higher. That's just as easy to happen as well because of how volumetric today's bullish price action has been. So, I see we have a very, very good trader on screen right now as we speak.
Well, hello. I didn't know we were introducing celebrities today.
Yes. That's how it goes. Celebrities.
That's how we do it here at the 5ers.
Yeah.
How are you guys doing?
What's good, Pedro?
Good on you,
doing,
Pedro.
bro?
Good on you.
Yeah, man, I'm good. I was just my day is over already. Right? After the move on the yen, there's nothing else for me to do here.
Did you get in on this? Tell us you got in on this.
No, euro yen. It was really close. It was the euro yen. My point of view.
Oh, euro yen.
Yeah, when I was looking the most.
You got in on the JPY drop, surely?
No, I didn't.
Oh, Pedro.
Did you buy?
Pedro.
It was really close, really close to my entry. I rarely put 7 minutes or 5 minutes, but this time I actually put a 7 minute on the euro yen. Yeah, somewhere there. It was really close. Really close.
Okay, so Pedro, walk us just very quickly through the pain that you've lost out on. What would this have been had it entered you where you? Okay, let's just say you got into this trade. What percentage are we talking? Let's talk money. Let's talk dollar value. Come on. Stock percentage.
Yeah, I
and
don't
dollar
know,
value.
to be honest. So I usually take my first profit at around 2.5 to 3 to 1 risk reward. Okay, so that would be still within this structure, somewhere around here where I would have taken. But the second one, I would have just I wouldn't basically almost have a second target so far. Because again, this was one of my favorite patterns. Again, this is a Quasimodo. Maybe Victor is going to be here, is going to be able to say it. But one of the main things that I've been mentioning so many times, even on this live stream, is the fact that when I see a break of structure, where is this orange? 1 second.
Okay, that's Melania Trump.
Okay.
Seeing her husband in the morning. Why is this orange?
So yeah, when I do see a like this first break, I like to see a retracement and a new break, and that's exactly what we had here. So like this move,
Give me one.
it gave me so much confidence that price actually wanted to go lower again. Quite similar to the conversation we had last week in terms of if it is just a week or not a week, if it is a break, just considering a week or not, whatever. Yeah, that really gave me a lot of confidence. And then because we do have liquidity then to collect around this size, and this level was still fresh. So the zone that I was actually looking for, it was on this week. Okay, so I wanted this level, I wanted price to go there. But price just went a little bit underneath that. So there was a chance that price could have gone here. At the base of the level, maybe that's where I actually touch it. Didn't even know. Yeah, it was basically already touched, unfortunately for me. Yeah, it was on the base of that level, and it never really went to the level above where I was actually looking for. And this is basically a Quasimodo pattern. We have the left shoulder, we have move down, we have the head, break, and then price moves, and then eventually goes to the left shoulder. Somewhere in there, but I think there was the potential. There was definitely the potential. We had dollar yen crossing just a little bit above that 160, even took the previous high, and actually looked at the euro yen, at the dollar yen yesterday. And to be honest with you, if I go through many of these yen pairs, they all reacted now from good level. Pound yen, CAD yen, the Aussie yen, I'm not sure, but the dollar yen as well. The dollar yen actually I had on the daily time frame, or even week. No, this is pound yen. Sorry, the dollar yen on the daily, it finally actually touched the week. Before it hasn't touched the week. This is kind of a level that I usually like to see a reaction from. The previous high had missed that level yet. So actually yesterday during the Portuguese live stream, I think I mentioned, there's maybe actually the potential that price can take this high and react from a little bit higher. And there you go. The reaction was actually quite amazing, to be honest. And there you go. Then the minister said something. They said that it was not intervention. Who knows? The reality that she said that they are really close to do it. But the news is that it was not their part. It was not the Bank of Japan doing this. Who knows? If it was not them, then there's maybe a chance that price can maybe retrace before they actually do it. We'll see. But the moves were amazing. Overall, the moves were amazing.
Yeah, that's pretty good. Pedro and Will, I am going to have to run off. I had to quickly take delivery of some stuff, and now I need to pack it away and all of that stuff before it starts melting.
No problem.
All right. So for everybody in chat, thank you very much for joining us today. If you've enjoyed what we've provided for you today and this fun banter and entertainment, please drop us a like. Please consider subscribing and hitting that notification bell so you know whenever we go live. Pedro and Will, I'm going to love and leave you guys and see you on Monday. Yes. Monday.
Thank you, Richard.
Sweet. Awesome stuff. Nice
All right,
to
guys.
meet
Have a great day.
Have a great weekend.
Cheers.
See you, Mom.
Yeah. Aries asked me how did it make you feel. I think that was for me as well. Like that. Like, I don't even want to look at the charts anymore today. To be honest,
mate. Honestly, I was heartbroken after being missed ever so slightly on an EU trade a couple of weeks ago. Watching that drop and knowing you got missed, mate. Yeah, I can. I would. I'd be having an early weekend now.
Yeah, to be honest, I don't even look for any opportunities now. I don't even know what to not to pay attention. Those were, again, I've been looking for this all week. Try to see the potential. Look at the yen index as well, just filling out the space straight away. Now it's just whatever. Let's see what opportunities are still there. But the ones I was convicted, the lot of conviction, that's basically over. So guys, today just whatever you guys want to analyze, we can look at it. Primal, just stay a little bit longer on the live stream until Victor comes, and then Victor and myself, we can explain the pattern. Usually it's Victor that explains it, but I will this time take over.
I was going to say, because you like you use the Quasimodo as well, don't you? I don't have a clue. I don't have a clue on it, but I know that Victor will be coming through in about 20-ish minutes time, so he can explain it for you. But yeah, I was going to say, I'm pretty sure you use it also.
I use all phases of the Quasimodo. That's maybe a little bit of the difference. I don't just trade from the right shoulder, kind of when you're thinking about the head and shoulder, just to try to trade just from the right one. I try to trade all the ways through, from the head, the right shoulder, the retracement. I try to identify the pattern or to predict the pattern, to trade it all the way through. Which we will do again when Peter arrives. We're going to be maybe have a little bit of a section about Quasimodos if you guys want to, and you can talk about that. Yeah, definitely.
Yeah, I think the guys in chat would like that. Yeah, definitely. But I mean, guys, let us know in chat if you do want to explore more into the Quasimodo patterns.
Yeah,
you have to stick around for 20 minutes.
What else? What are you looking at this morning?
Honestly, I'll bring my chart up real quick. I'm not really seeing much in the markets. You know, we had this sort of luck earlier on today. I think this was. I'm sure it was Raphael. Raphael, let me know if I'm pretty sure you're still in. Let us know if this was your trade. But you were just ever so slightly lower than my entry. So again, I didn't actually enter this trade. I haven't been trading today. I have no interest in trading with the news that's coming out. But I'm sure Raphael was around here somewhere. Apologies if it's not you, Raphael. If it is someone else, let me know. So yeah, that's what he was looking at. 1 to 4 hour. We just missed his TP. Just missed his TP. So I thought, what would I want to see if I was to be buying euro right now? And that was literally consolidation. You know, I got to try and remember where the Asia low is. I'm pretty sure the Asia low is around here somewhere. We had this consolidation here, push above. Once we had the push above, pull back into a form of consolidation. That was, I thought it was. Yeah, so I was right, Raphael. This was your trade. Like I was saying, we wanted a bit of a pullback into a nice significant consolidation area, which we got just here. 3-wick rejection. I would have nearly hit stop loss on it, but we just about managed to avoid it, and then followed by a beautiful push. We only had one downwards candle on the whole 15 minutes of this move. So honestly, this was actually a really nice trade had I have taken this. But again, with the news that was coming out, I just felt like it was more, stupidity to be trading this in according to my strategy. With the news, or so close to a high impact news day. But, if I was to trade this would have been the trade. Now, we could have had a different option. We could have had price come a little bit lower. I was also looking, speaking of going a little bit lower, not quite tapping me, I was looking at US Tech or the NASDAQ. Now, that hasn't quite hit a TP yet, but it would have hit TP1. So I had 2 TPs on this. I had TP1 here, and then I had TP2, which was high of Asia, which is also higher day, I believe. So that's what I was looking at on NAS, but I wanted to see a pullback, so I wanted to get that 2-hour risk reward. Plus, I didn't like the idea of trading the consolidation breakout. So what I wanted to see was, consolidation here, break and close below, cut, or I say a break and close below, a break below to try and come back into this consolidation and retest it. Looks a bit nice from the 5 minute. Let me actually go down to the 5. There we go. So, pull back into the 5 minute. Once we got a pull back into this really nice area of interest here, continuation pattern above, I wanted to see the break and close above this zone for, confirmation. So if we get a pullback now, we can have a pullback into this area, and these buys are still valid. So that's what I wanted to see. EU and NASDAQ are the only two that I was analyzing today. Other than that, gold, I didn't like gold today. It didn't give me anything I wanted to see. There was no consolidation. There was no sort of, we sweat, or we broke through through Asia low. So we absolutely smashed through the low of that. Failed to break further. We pulled back. Failed to create a lower low, which is nice. So there's an indication that there could be a reversal happening. Broken closed above, showing that break of structure. Pull back into a really nice area of interest. This could have been your area or your opportunity to go long for the sort of longer intraday trade. However, it's just, if that was on EU or GU, yes, I could have traded it. But due to the fact that, with it happening on gold, it's not how I trade gold. It's not my strategy. So I just wasn't interested in it.
Yeah.
But other than that, yeah, not a lot.
Yeah, good analysis.
Sorry, guys, give me 2 seconds.
Yeah, no problem. Buenos dias, Pedro. Are you Spanish or Portuguese? I am Portuguese, my friend. Monday Diary. I do speak a little bit Spanish, to be honest. But welcome. If you are Spanish, bienvenido. If you're Portuguese, bem-vindo, my friend. And then you can follow us for sure, okay? And if you do understand a little bit of Portuguese, you can also join us on our Portuguese live stream of the 5ers. It's always at 5 p.m. Portuguese time or UK time on YouTube. That's a great question, Primal Light. Okay, so in regards to Quasimodo pattern, I know the basic one, but how do you identify some of the not so obvious ones on the chart, and what potential trades does it offer? That's what I'm interested in, and you can cover it. Okay, literally, let's just wait for Victor, and then you're going to be able to cover some of those. However, when you do mention not the so obvious ones, sometimes actually good when you are trading patterns to just stick with the so obvious. Okay, when you start going into a little bit of a complex ones, those are the ones can be a little bit tricky, and then you are always in doubt if that's a pattern, if that's not a pattern, if you should trade it. Even if you trade it and it's a winning trade, then maybe in the future it's going to create a little bit of confusion, because we're going to then take again that not so obvious pattern, and then maybe it's becoming a loss, and you're going to be a little bit in doubt in the future. So when you're actually looking for patterns, sometimes the more obvious ones are actually the best ones that you can trade. But we are going to talk about the different types of opportunities that you can trade from the Quasimodo, the way I trade it, and how actually you can start anticipating and trying to be 2-3 steps ahead. The one thing that I like about the pattern is that it helps me to potentially be 2 or 3 steps ahead, like you're playing chess with the market. Because if the pattern happens, then you know that there are certain moves that needs to happen before the conclusion of the pattern, and you can start reading the market quite nicely in that way. So yes, so that's the one. Trading gold today was like fighting with your girlfriend. Jesus. Okay.
Oh man.
So basically, basically, you are saying you are just agreeing with everything gold is doing. Is that the case, right? Because you do need just to
Yeah, I was
agree
going
with
to say,
whatever
it
I'm saying.
depends. Yeah. What would that look like? Fighting with your girlfriend? You tried to make how would that look? You tried to make a point. Gold disagreed, and it's safer just
Exactly.
to go along with gold instead of arguing.
Exactly. Just follow what gold is doing. Don't fight
Just
the
say,
trend.
yes,
Don't fight.
gold. You're right, gold.
Yeah.
I totally
Just a
agree,
yes.
gold. I'm
Yes,
sorry, gold.
you are right. Yeah. You are correct, gold. Period. Not happening again. I'm sorry.
Yeah. Yeah.
Oh well.
I mean, at least
gold.
Yeah.
Gold is an interesting one. I don't know if it was here on the Portuguese live stream. I liked actually where the low was reacting for this week, because this level this week in here was still fresh. If you look at this strong candle that we had on the 31st of March, actually basically 1 month ago, this week was left behind. This low never really took the orders from this structure. Again, this for me is a demand zone. Maybe for some could be also another block. And we also have, if you actually then go into the war time frame, maybe 4 hours, you can see how many times price actually bounced from this level. We have one bounce in there, another bounce in here. Price kind of touched a little bit in here, and then there's another one in there just before price creates again another Quasimodo. To be honest, if you want to be a little bit picky, you can have a little bit of the structure there. Price goes up, goes down, leaves this left shoulder behind, and creates this structure, which again, not even this low that we looked at on a daily time frame, we reacted from it, but now the ones that were created a little bit in the war time frame, as you can see in here, they also didn't react from the level itself, okay, which is this demand zone. So this looked for me a little bit of a good level to potentially expect some reaction on gold. I don't know where I am now. So now, actually, yesterday, now we were in the Portuguese live stream. What I mentioned, what I wanted to see, it was actually for price to go a little bit higher, take this top. Okay, this for me was the last supply level that pushed price down. What I wanted to look for a potential long, it was for price to go up, just take this top, regardless of how it was, just a little bit, and then I'll be interested in potentially looking for longs in here. However, price never took the structure that I wanted to see, and in that case, then for me could have been a little bit more of a move down before price would go up. So for me, the only reason I didn't really trade it long, and I actually looked for also kind of a small fair value gap or a demand zone that was left behind, maybe on the war time frame, 1 minute, maybe you can even see it a little bit better. Yep, there you go. So we have definitely this demand zone, that separation here that price created, moved higher, took the low. You have one low, we have two lows, we have three lows. None of them kind of close the gap in here. So usually this level is a great level to expect price to retrace all the way back, take that structure and then try to go higher again. So I had a clear level in here that I was looking for price and gold in this case to potentially go long from. But as I mentioned, I wanted to see price going above this structure, and unfortunately never did. So I end up not even paying attention to the long anymore, because if that happened, then I would have placed an alert in there and then I'll be looking for a trade. Because that never happened, then I didn't even place an alert at around the structure, and we had a structure in here that we could expect then go to react from. Another factor that also it was building up for a potential reaction is that we already had a little bit of liquidity. We had a little bit of double bottom here. Price went a little bit above the structure, so that was the initial kind of break of structure here. But now another Quasimodo. There you go, another one. Price then created a little bit of a buy, so it was attracting people to buy at around this level, and then a strong move down. So that's another pattern that I like to see as a potential reversal. And then again, as you can see, this can become already a new Quasimodo as well. If gold by any chance, for example, retraces back to this level, maybe there's a continuation in here to the upside. But this approach was something that it was also kind of starting to ring the bell for a potential reaction. I liked actually where price was reacting on the left side. The only thing that was missing for me, it was this move for me to then try to look for longs. It kind of happened as Will mentioned. Then you had a new break, price respected the low, we had a new break of structure, and from here maybe now it was ready to do so, but I was not trading at this time, 7 a.m. or whatever the time it was around here. And to be honest, I prefer to look a little bit more closer to the extreme, but the level where actually this will reacted, it was a good one. It was now this demand zone where price reacted. So yeah, that was my bias. One of the targets, it was actually to try to come back into one of the first targets to be for price to just go back to this highs. And then the second target, it will be attention to this trend line that we're having here, maybe close to this structure, somewhere around this level. I'll be happy to try to look for this long on gold and then reassess to see if there's a continuation to the downside from here or not. So yeah, we'll see. If price by any chance starts taking this high, then a lot of this has been compressed already, and then there is a chance that maybe price will at least maybe react a little bit below the first, just to collect some liquidity. Maybe price can create some structure here, go higher, take the highs, retrace a little bit, but I'm expecting then for price to fill this price until 4,770 maybe, something like that. But for that, price needs to take this high first. Until then, price may find some selling pressure around this level. Or if you do like to trade trend lines or break off trend lines, maybe price can take the trend line, maybe retrace to the trend line, and then go ahead. But that would be the way I'll be looking at gold at this point. And if you want a little bit of a deeper retracement, maybe gold can come back into this 4,500
I
and
think I'd
something.
like to see a bit of a pullback. Yeah, a bit of a pullback into that sort of area that you're marking out there, and then a continuation.
That could be nice. That could definitely be nice to look for. At around this structure. That's the one. NASDAQ, you mentioned also NASDAQ. NASDAQ looks bullish. Okay, so yesterday actually there were two levels that I was interested to trade. One was, or at least that I wanted to see price doing something. If price would respect this low, then I wouldn't be interested in looking for sales. If price had by any chance maybe making a new low, then potentially there was new sales opportunities from the highs, or even a fake out from the highs due to the fact that we already have kind of a double top created at the highs. But at this point, price respected really nicely with this demand zone with the news. I think it was around the moment of the earnings release from Meta, Microsoft, Amazon, and whatnot.
Yeah.
So there was a lot of volatility at around this level, even more than it was created during FOMC. Price went up, broke the highs, and now it's respecting this level again. It looks like that we are most likely continuing to the upside. And until there is a potentially break of structure, I think the possibility or the likelihood is for price to continue to move to the upside at this point on us. So I wouldn't be fighting it anymore. At the beginning of the week, it kind of meant, I think we actually mentioned on Tuesday that potentially price could move to downside until Wednesday FOMC, and then during FOMC plus earnings, we most likely resume to move to the upside. And now we will see what will happen in today's session, which opens in 1 hour. We are going to have news though in a bit, I think.
Well, we've got news in 3 minutes time. And then we've got the ECB press in 15 minutes after that. So we've still got a bit of news coming out. So I'm seeing that a couple of you guys are asking about the pound. I'll jump on the pound real quick. But the pound is super volatile at the moment. It's looking. One of you said short. I personally, even on the 5-minute time frame. Okay, I see why you're saying short, but I wouldn't be looking at shorts until maybe we can get a further break of structure, maybe something like this, and then short, possibly. Honestly, though, I'm looking at longs at the moment, nothing but bull movements in pound, especially we've got 3 different confluences here, and that's without even putting a fib on. So I'm not bearish on the pound whatsoever. However, try and avoid the pound at the moment. We've had a lot of news come out. In my opinion, I just let the pound settle down. Let the pound settle down a little bit. Same with the euro and dollar news. We got dollar news coming out in 2 minutes, and then euro again in 15, or technically 17 minutes from now. So that's I'd be staying away from a couple of the majors, especially when it comes to pound and euro. So EU, GU, those sorts of assets. I'd be trying to trade, the yen. Okay, we got a fair bit coming out, or that came out earlier on with the yen. Truth be told, today's just probably not the best day to trade. Yeah, the more I'm talking about it, the more I'm thinking about it. I'm glad that I stayed out of the markets, and it's probably just not the best day to trade right now. However, if you are and you do want that analysis, GU for me, I am bullish. We've tapped lovely into this area here. However, I think I'd like to see this area here be checked, be tested. There we go. That's the word I'm looking for. You can tell it's coming to the end of the day on a Thursday. So this area to be tested, come down, maybe some potential continuation higher. That's my potential on GU. I was, similar on EU. I was the exact same when it came to longs on EU. However, we got a nice question here from Cindy Candy saying, what's the appropriate time frame for day trading gold? Downtrend is just a correction. And then we go further on, and they've explained a bit further, saying gold has broken out of its downtrend channel. I think the dip is just a correction. So if I move over onto gold, there we go. So I'm going to stick on, let me have a look on let's try and see what time frame you're analyzing on. I feel like it's not the 5. I feel like the 5 maybe the 15. Or the what? I'm gonna go 15 or 1 hour. Cindy, let me know what time frame that you're actually looking at gold on. I'm gonna go with 15. I feel like the channel looks a bit better on the 15, especially if you're talking about day trading. If you're talking about intraday trading on gold, the best time frame, it all depends on your strategy. This is the fib, wrong one. Let's try again. Me, honestly, I'd probably be looking at the 15, the 5-minute, and the hourly. They're probably the best when it comes to day trading. Do your sort of top down, start on the hourly, make your way down, do your deeper analysis on the 15, and then maybe entry criteria on the 5. That I find is a sweet spot when it comes to intraday trading. Doesn't matter what asset. Gold's super volatile. You can day trade gold on the hourly and the 4 hour, but I don't know. It all depends how you trade. But what about you, Pedro? What's your sweet spot when it comes to intraday timeframes?
Yeah, so I go in between several because I like to look at the structures on the higher time frame and then kind of zoom into the levels to see which ones are fresh or what kind of structures need to be broken. But I think if you want two day trades, I think maybe doing your analysis on 1 hour time frame and then kind of going down into 15 minutes to look for confirmations or break of structure. I think that's a good time frame. And then if you want just to by any chance go into the 5 minutes to look for a kind of pattern or to see a rejection for the execution, maybe that could go. So maybe 1 hour. I think 1 hour you can see a little bit clearly what structures price is creating, and then or even those levels of support resistance that maybe price can retrace to react to and then maybe continue if you are a trend continuation trader. And then on the 15 minutes, you can have a little bit of an idea. Okay, this is maybe the most recent low or the most recent high that I need to pay attention to see if there is a break or maybe a trend line that you can start drawing between connecting the dots of those lows or highs. And then on the 5 minutes, if you want to just try to study a little bit of the what rejection candle or something like that gives you confidence or an engulf bullish or bearish candle that you like maybe to look for a confirmation to enter into the trade and then maybe wait for the closing of that candle on 5 minutes and you are into the trade. So something like that I think could be reasonable. But then if you want to be a bit more kind of what do you call multi-facet of playing around in between different time frames and just go for it. For me, it's just one time frame. For me, it's just the market. I'm just moving in between just to try to see exactly what levels are still fresh or not fresh. That's basically what I'm doing.
Yeah, I think if you can navigate through the timeframes, if you're an intraday and you want to be in and out within hour to 3 hours ish, I think starting on the 1 hour is a good place to start because you get a lot of sort of insight for what the oh, you're looking at the 4 hour. Okay, apologies.
Yeah, I think you mentioned 4 hours now. Interesting.
Yeah, okay. I marked this out earlier, or was this yesterday?
One second, because it said, is it for day trading or intraday? Kind of is more looking into intraday trading,
fair,
or is it the day trading that?
That's a good question, actually. Yes, Cindy, let us know. Is that intraday trading? Because day trading comes under a massive spectrum. It's huge. Are you intraday day trading or are you swing trade day trading? Would you call swing trading day trading?
No, but
I suppose.
Yeah, but when you mention day trader, is because if it is intraday and it's looking at 4 hours, that's a bit odd. It doesn't match the time frames. That's why maybe it's just saying the day trade. Yeah,
is high. Okay, day trading. Yeah, but no.
Day trading.
Okay. I'm gonna go and assume that that's intraday, so that's like it's you want to be in and out within the day.
Yes, I think that's what you want to say.
Yeah, okay. I'm gonna assume that it's in and out within the day. Honestly, the 4 hours great. The 4 hour gives you a lot to look at. But for intraday trading, I usually go to the 4-hour when I'm looking at holding a little bit longer, like my swing strategies, and I can be holding them for days, weeks, months even. I feel like my sweet spot for intraday, for day trading, for being in and out of the market within like a few hours, within the day, within a 24-hour period, it's the 1 hourly. The 1 hour gives you just enough to look at what the higher time frame is doing, but also it gives you enough that you can look at structure on the lower time frame. Victor, hello
Hello,
there.
hello.
And
Samir,
Samir,
Pedro, Will.
Hello,
bubble, baby,
guys.
let's go.
How are you guys?
Hello, hello, hello.
I'm sorry, Samir, I love you, but that just wasn't good enough.
All
I
right.
tried to give you that energy, my friend. I would show me that excitement.
Hello, guys. How are you?
Yes, yes, that is
Whoa,
what we
there
like.
There you
you go.
go.
Let's go.
Come on,
All
come
right.
on. What's good, guys? How we doing?
It's good. It's
Great.
good.
Actually, I think the question you guys were answering before, I think that's quite insightful. You know, when you start, since there is no curriculum, right? There's no fixed degree to get into trading. Um, and we assume everyone will find their way by themselves, and there are a bunch of courses
Mm.
out there of various quality and intention behind them, and that is even putting it nicely. I think it's quite important to it's quite important to address this question, because I think that yeah, the average usage of a newbie trader is probably not optimal in terms of what time frame they use to do what, and how they perceive each time frame for what they are. Wouldn't you agree?
Fair. I was gonna say, don't all answer at once, guys.
What I was gonna say, it depends on all. I think you were mid answer, Will. If that's the case, then I will keep quiet and allow you to finish your answer. If not, then I would like to interject. Go ahead.
I'll tell you what, I'll round it off. Yeah, so basically, what I was saying, when it comes to gold, looking at the 4-hour time frame feels a little high if you're trying to be in and out of the markets within a 24-hour period or a 12-hour period, depends your time zones that you're trading. However, it all depends on what works for you. I feel like the 1 hour is that nice little sweet spot where it gives you enough for the higher time frame. You can almost see those 4-hour highs, those areas of interest, but you can see them on the 1 hourly. And then you can sort of like slowly progress down. And the 1 hourly is like that sort of, you can see the 1 hourly zones from the 15-minute and the 5-minute. Whereas when you're looking at the 4 hour, trying to find 4-hour zones on the 5 and the 15-minute becomes a little bit more difficult. Hence why, when you're looking at swing trading, like when you're in for like a couple of days, maybe a couple of weeks, a couple of months, whatever that may be, when you're looking at those sorts of levels, then you've got bigger levels, you've got longer time between trades, you've got longer time waiting for TP stop loss to happen. So I feel like the 4-hour is that sort of that introduction into that higher time frame trading, whereas I feel like the 1 hour, it serves a purpose. It's like a general purpose time frame.
Yeah, I think that's very I would say accurate, according to how I use them as well. I think for if you're day trading, you have to, within day trading, still a plethora of options or profiles. You mean people who scalp, who go for only like 3 pips, 5 pips, or anything below 10 pips, depending on the asset. Let's say I'm talking about EU, GU. That's called scalping, but it's also intraday, right? You're in and out on the same
Yeah.
day. The same thing as with those who hold for the whole session, or at least have that intention to start and get the wave that comes with London Open when it breaks. Let's say you have the same way as with equities, you have the orbs where you have the opening range and you have the breakout, and the side of the breakout indicates what direction the market wants to go for at least a couple of hours, likely the rest of the day. Same thing goes for other assets like EU, GU. Now you have the cable, for example, with the London opening range also has something similar. So if you're going for, let's say, half, 30%, 40% of the daily range, the typical daily range, then I can totally understand. And that also falls within the fact that I'm trying to show people here as we are looking for as I'm talking, but that also falls within the day trading profile. So if only saying day trading, we don't have enough information of where you want to be focusing on, what kind of profile you're looking into, and holding time and targets. The lower the time frame goes, obviously, the less these higher time frames, let's say H4, will be relevant to you. Even though they are stronger, in within the a couple of minutes, 10, 15 minutes, there's a lot of fluctuation enough for you to trade the lower time frame with disregarding or without taking into account too much what the higher time frames are telling you. However, if you most likely if you collect data on your setups on lower time frame, considering and also looking at what the H4, for example, is telling you, you will see there's a marked difference in the probabilities of your setup. Even though it doesn't look like it, there is a marked probability in if it's going to work or not in your in your favor, depending on what the H4 is telling you. Why do I say this? Because even though on the lower time frame you might be only going for 5 pips, or 10, um, but the 4 hours sometimes can give you levels and areas that the market will react to them and no longer come back for the rest of the day, for the rest of the week. And even though not even though, if you were only looking and living below the 1 hour time frames, you're not going to be mindful of those H4. And while they are crucial for they're going to have influence, or they're going to affect your stats, and if you can avoid them, um that's great. I mean, that's a you will have less losses, and likely your win rate will be better. And the other thing is, you will see that when you're aligned with the H4, your TPs will, even though you're intraday and H4 is quite high, quite big of a intraday time frame, if you align yourself with the H4, you will see a great difference in your performance. I trade this way, and intraday I start with the H4. I do not go against it. I try not to go against it. I try to align as much as possible with it, and it affects my performance significantly. So I would say start at the H4. At least if you're not using it actively, don't go against it when it has a clear area it wants to react from, and start with the H1. And I totally agree with you, Will. The H1 will give you a lot of more information, because there's a lot more candles and candlestick combinations and patterns that will be visible on H1 and not on H4, because it's way too big. Um, and then you can go to the lower time frame, the 15 or even the 30 minutes, and the 5, depending on what kind of trader you are, to give you more precision in your entry, your exit, and things like that. But do not disregard the H4. That's my main message. Do not think it's too big, because you want to have that giant of a time frame in terms of intraday on your side, not against you.
Yeah, no,
That's interesting point of view.
yeah, absolutely. Like I said, never ever disregard a time frame. Just ask yourself, how relevant is it to what you're trading and how you're trading right now.
Yeah.
What
That's awesome.
did you
Victor,
guys catch anything of
don't talk
the
about it.
yen?
Don't talk about it. Uh,
I got some very very good trades out of this move.
Oh wow.
Uh uh, yeah, I traded um the mean reversion of it. Once it went beyond it and came back, I that was a nice trade. I have to say. I'll have to check, the level so I can share on the screen with everyone. But that was a very very nice trade. In the meantime, I'll get the entries and the target. So, but
was it from the top
mean
or was it a continuation?
no, mean reversion, meaning I expect not expected. I waited for the market to expand, way beyond
Mm-hmm.
what is when it exceeded the extremes, and then I went in the opposite direction, thinking, okay, this is obviously an exaggeration, and everyone is run not everyone, but I mean a lot of traders are running for the doors, and they want to be out as soon as possible, disregarding the rest of just panicking, and that's gonna end, and it's gonna come back. At least something. It's gonna retrace. I mean, that move was way too big of a move not to be retraced, and I waited for that, and then I hopped on the opposite direction, meaning I waited for the market to stabilize, and then I went along against this move.
Okay, so
I'll
you
show you
bought it.
guys.
Fair enough.
Go ahead.
So you bought it. You didn't sell the move. You bought the
I,
retracement now. Yeah, good.
yes, yes. I bought the retracement when I saw the magnitude of the move. What's going to happen when that happens? Everyone who is, I mean, if you're short, you would have hit your TP, so you're out already. If you're long, your stop loss would have been hit, you're out, or you're holding and you're panicking. You want to get out of that move. You don't even care about TA, perhaps that's split second anymore. You just want to get out of the pain, and that's gonna make people to panic and just rush to the door, and you will see these exaggerations in price will go even further because people are panicking, and that's when I come in and buy it, because I know it has to come back. I mean, it's a matter of probabilities. It has to come
Matter
back.
of when,
It's
not
something.
if.
I beg your pardon.
I said a matter of when, not if.
Exactly, and you have to be. Don't do this. For those who are at home, if you don't know what you're doing, don't try it, because you don't want to go against a move like this. But if you've got data years under the belt, you can identify what is an extreme of a move, when to do this and when not to, and how to recognize the market getting to that equilibrium at the end, right before it starts coming back. Not perfectly, but I mean, I can spot it, and when then come back and get into the mark, and don't be a hero. Don't think it's gonna come back, the whole move, or not even half of it. You're just coming for a little pop, but that's it. But it's anyways. But I caught it in multiple pairs, not only on UJ. But I'll share that. I'll gather all the trades, and um I'll gather some information where I got in and where I got out in a couple
I
of
did,
minutes
yeah,
later.
no, I love that. Anyway, guys, on that one, I'm going to leave you fantastic gentlemen to it. And everyone in chat, I'm going to love you and leave you. Have a fantastic weekend. Have a fantastic day tomorrow. Stay safe. Stick to your plan and take A+ setups only. But for now, I shall say peace out and see you all Monday. Guys, thank you very much for joining me, and thank you very much for allowing me to share my attempt of an analysis with you guys with such a high impact news day. So, like I said, we've got a bank holiday coming up now for Europe and the pound, and some other countries out there as well. So, guys, like I said, I'm going to love you and leave you. And gentlemen, been an honor. See you all Monday. Peace out.
Thank you, Will.
Take care, Will.
Will. Thank you so
Thank
much
you very much.
Awesome.
for your insights.
Um,
All right.
high
USD
energy,
JPY, you
Will, as
caught that
always.
beautiful longs as you mentioned.
Yes. I'm gonna be checking on my side.
What
On
was
my
your
first
entry pattern?
and
I'm just curious on USD JPY. You explained the story, which definitely makes sense. but I just want to know what was your entry pattern in this scenario.
Yes, the entry pattern is based on. It's not based on necessarily levels, although I do take them
Okay.
into account. It's a combination of different things where you have the. It's not only levels; it's mostly expansion extremes combined with levels, but more the expansion than the levels. If you look at the daily, for example, I mean, if you we don't even need you know stats or math to understand what kind of extreme the movement is. This is a daily time frame, and just comparing the ATR or the range with what has been happening before, we can understand that this is way beyond what is normal. If you
Mm-hmm.
go to the let's go to the ATR right here, you got 165 pips, right? You can see it at the bottom. And if we measure this, we're talking about what is this? That is 517. That is what the three times, even more than that, almost three times. And I see four and a half, no more than three times, 300% the ATR. That gives you already a taste what we're dealing with. A way an exaggeration of a move. That's one thing. And if you look at other levels, you can see how the market. If you're going to the daily, and you can indicate a couple of things, right? So is the market see what will the market that has been already mitigated? So that could be a level. This is different from fresh order block rules and quasi and things like that. But basically, you go to a high enough time frame, which usually is the daily or could be even the weekly, and you look for the reactions that the market has as it is, in the extreme ranges, and you look for when it is interacting with this order block. What kind of reaction does it give you on the lower time frame? When it gets to the next one, you do the same, and so on, right? So it's combination of, but you're only doing this when the market is expanded, has extremely expanded compared to otherwise. And you go to a time frame, right? If you look this uh, right here, yeah, and you start looking for ways to. I'll check the trading platform for the exact numbers, but if you can look at the reaction the market has whenever it gets to this level, right? There's a little pop there. There is a little pop at the end of the upper end border of the order block. Little pop, but it's still not changing. It's not breaking any structure. If you go to and I use the 15-second as well. These are the let me get them. These are the structural break or the necklines, and it's you can see how the market breaks doesn't break the neckline, so you can stay on the sideline, even though you could get in on the reaction of the upper and lower border of these order blocks. These are the basically acknowledgement of price action or price to these levels, right? That's why the market is reacting to them. I mean, this is not these little pushes are not you know that that they're not coincidences, right? It's not
Okay.
happening randomly, even though it happens more often. The fact that it's happening right at those moments is because, at least in my point of view, because of the market, reacting to the upper and lower border. And this one is a much bigger one, and you can see it here. That's the level and there, right? So as you can see, there are more happening not only within, before, and after the upper and the lower border of the order blocks, but specifically to these borders, right? The upper and the lower border of these order blocks, even though if they're not fresh, they're not they have been mitigated already, and you can just not always, but you can use that to your advantage and get in on, scalp a little bit, get a few pips out of it easily, because the market will react. Let's measure how big these moves are. You get an idea what we're talking about, right? This is, let me see, 40 pips, 37 pips. That's 40 pips.
If I look at my point of view, it was also, slowing down the momentum. I would have
This is
entered at the trend line break.
110 pips. As you can
Mm,
see, that's even, that's plenty to catch a move. Even if you're not, you will likely not catch the whole move, the whole 40 pips. But there's plenty of, to understand. If you go to lower to the seconds, let's see, 15 seconds, you can see how this is behaving before it actually breaks and continues higher. So there's probably something like that you can catch from the move, as it is leaving and showing price action to be reacting to these borders. And you were saying, the deceleration of the market.
yeah, yeah. Momentum was slowing down, and I think if it was US 30, VWAP would have been so away from the price, and the trendline breakout, it would have been my entry. Yes, it also makes sense to me. I do like to trade these type of legs also, and I
Hmm.
can get your point. Yes, definitely your entry pattern is different, but we are seeing the same. We are looking for same trade. I think that is a
Mm.
beauty of trading. You might can look at other concept, but we can have similar bias. So I think that is amazing.
Doing the same thing
Wh-
on doing the same thing on another pair, right? You can, from a mile away, you can see, this one gave it, very close to the lower order block, the border of it, and to the upper on the other one. And if you go to the lower time frame, you can see that in this case, I would have been, without knowing anything, I would have been looking here, and this is what you know, let me get the. I don't think both of them are indicated here. You want to say something, Pedro?
Yeah, just anti-wire. Do you think that that retracement can now be or going to? Are you expecting
No.
kind of almost a full retrace? Are you expecting just maybe a 20-30% retracement of that bigger move that we had this morning? What retracement would be expecting nowadays
I,
on these
I, I
numbers?
Yeah, I don't have I don't have a view. I don't have a position. This is just using probabilities in
Mhm.
terms of that where the reaction is going to be a reaction, and a 50% reaction is a lot. That is, to get 50% within the short duration that I hold these trades. That means that it must be something that changes, right? So it's either a fake move that it gets corrected later, or the fundamentals really have to change. And I don't bet on that. I just see that the market is being overextended, and I try to see the levels where, and the price reaction, the reaction it has on these specific levels on a higher time frame, maybe the daily, maybe the it could be even at the H4 if I have a quasi, but on the weekly, at these upper and lower border, and then watching the price action as it reacts to them, understand that the market is going to have that pop. And it's not about the percentage of the move that it's going to retrace. And I don't have an opinion on, you know, is this going to, is it going to have continue lower? Is it going to retrace more? I just want to catch that pop, and I follow that as long as there's that momentum, and I just go for 10, 15 pips. Most of the time, that's it, and I don't need anything else. The win rate is, you know, quite high, and you need to, with stop loss, you need to be flexible and not go like a hero and thinking, this is the bottom and that's it. But just give it some room and not be too ambitious with the TP. Don't think I don't I don't want, I'm not thinking of two percentages. I want to catch 30% of the retracement. I mean, of the move down as a retracement, or let alone 50%.
All right.
Yeah. Um, Yeah. Okay. Unfortunately, I did try to short it. I missed my euro yen from the top. I already explained that before. It was actually a good Quasimodo pattern on the euro yen in a higher time frame. For a short, I missed my entry by a little bit. I had a 7-minute order, and actually, I was just looking at the dollar yen. There was actually maybe a Quasimodo as well on the dollar yen at the top on the lower time frame, like on 5 minutes, 1 minute time frame. It's maybe possible to see it. To be honest, actually, if I just moved into here, and the way price actually fake out that, where is it? So price, so this line that we're having here, it was the previous high that we had on the left side, and after price fake out that top, actually created a very. Now it's a bit difficult because of the new scale of the move of the candles and the new dimension of the candles. Everything gets a bit weird, but we actually had this move in here because price actually managed to go below that low, and from this level maybe could have been actually great entry to trade from. To be honest, I was not at my desk at this moment, so I didn't really see this move. But this was a nice Quasimodo just before. If anyone had caught this trade, that would have been amazing on the dollar yen. Yes, yeah, the trade I was more looking for, it was actually this one on the euro yen, which unfortunately I didn't really manage to catch it. And now the question is, I think someone actually was there asking that question in regards to the pound yen, like one thing that we also analyzed, which was, do we see 1 second. Okay, I was trying to remove wheel, but for some reason I cannot. Do we see a strong enough retracement to buy looking at the pound yen? And that's kind of a little bit of what you mentioned in regards to pound yen, right? So we did already had a little bit of reaction to the upside. We saw a little bit of either sellers getting out or at least buyers. Maybe it's even take profit from the sellers. But reality is that we saw some buying pressure a little bit. Now, what kind of move we are still going to have is going to be a full move or not. Now, because the question mark with these yen pairs is, did BOJ actually participated on the move? Okay, or it was literally just the finance minister that said that they were close to intervene, and because of that, the market and all the big investors they just anticipated the move and they start selling, or this was already the Bank of Japan. That's the question. That's the question mark. Because if this is still not participation from the BOJ, and actually then there was some news in here that's saying that they didn't participate. I don't even know where it is now. Further warnings. Yeah, Japan didn't intervene in FX market in April. So there was kind of that new that actually they didn't do it. Because if they didn't do it, then maybe there's a chance that, I don't know when, but there's a chance that maybe price can still correct and come back. Okay, but if this was already some part of the BOJ interviewing, then most likely there actually can be a follow through and price actually can drop even more without going all the way to the highs. Again, but overall the moves were quite good. Price is filled and now is reacting from daily levels. Maybe if we look at the daily time frame, I think you can actually see where price reacted from, basically from structure to structure, and that's basically what price did in a nutshell. Yeah, all the end pairs. Basically, there was that reaction. Victor, I don't know if our friend is still here. Primal Light. I don't know if you are here or not, because there was a little bit of a question about Quasimodo before you arrived, and you mentioned, there you go, this has been kind of 1 hour ago. We're just waiting for you to arrive, so maybe between you and myself we can have a little bit of a conversation. Because before that, can someone explain the Quasimodo? Then I mentioned that let's wait for Victor as well, because in regards to Quasimodo pattern, I know the basic, but you would like to be able to identify some of the not so obvious ones on the chart and what potential trades does it offer. So we definitely can cover a little bit. Let's just see if he's still on the chat. So let's reply, and then maybe can take a look into it in a bit. But before that, I know that Samir is going to pay attention to the US Open. Samir, what is your take? What are you expecting on the Dow and for today? What is your trading? Yep, there you go. Our friend is still here. Okay, so we're going to look at it in a bit. But before that, let's just see what Samir
Let
has
me
to show us.
can Remy put my screen on? Okay.
Yeah.
Thank you so much. All right. So let me go to the daily time frame first. This is the daily high to me, and we have this trend line which is based on 4 hour time frame. So I can plan like price pulling back here and going for longs. This can be the trade idea number one. Trade idea number two can be if we break out, maybe test these levels, and we can trade some kind of reversal at least to the VWAP. So VWAP will be something like this. If we are way too extended from the VWAP, like Victor was saying, overextension, something like that, I have seen on US 30 VWAP, and combining this overextended type of thing, it works really well. So trade idea number two can be we breaching the day high, we're doing some kind of retest around this area, and we can easily capture that reversal trade. Not the reversal, just the pullback. As we are bullish overall, I am expecting that we are gonna go higher at least to this area. So for intraday, so these two ideas seem solid to me. If we pull back, some kind of rejection, going for longs. If we overextend, maybe breach this high by a point or two, maybe 10 points, it's fine. I will look for shorts. These two trade ideas for me, and NAS 100 is looking very interesting to me. As you can see, we broke these highs. Right now, we are in a very good market structure. We pull back. Right now, we are trying to go to the upside. If you go to the 15-minute time frame, let me delete everything. Actually, let me go to the 1 hour time frame. We have a very small fair value gap here, and VWAP is bullish already. So I am planning buys on NAS 100. Trade idea number one can be for buys. I will draw my Fibonacci something like this. So I will like to enter around that 70% area. A little bit of rejections on the 1 minute time frame, or maybe pattern, something like this. So that will be my entry signal here. If we break this high and then we start to do some kind of consolidation, then I don't mind taking that small pullback. My 1 to 1 will be done in that leg, so I don't mind that either. So two ideas for NAS 100, pretty similar to US 30, but I do like the idea of buying on NAS 100 or 100 because trend is bullish, already established, and I just need a pullback, maybe liquidity of this area, and then I can plan my trade somewhere around the VWAP. That will be awesome for me. So I was looking at Euro USD also, by the way. So it really looks good for longs to me. Why? If we go to the daily time frame, daily took out the low. This high is pending. We took out this low, and if I go to the 1 hour time frame, VWAP is bullish. We already broke this level. We are just retesting that area. Going to the 15-minute time frame, Fibonacci is very clean. Drawing from here to here, daily high is not swept yet. So I do think we can tap at least to the daily high. So if I was trading Euro USD, my entry would have been here and my TP would have been here, stop loss and all these things. But we are just, I think, 22 minutes away from the NYSE Open. So I do want, I'm considering to take buys on NAS 100. But if things changed, we just impulsed way too much, I don't mind taking small pullbacks also. US 30, similar idea. We pull back looking for buys. We overextended. We can even breach these highs. I can wait for that. And then I can look for shorts. And yes, if anyone is planning this trade idea, don't hold your trade for like a very long time. Just take your 1 to 1 and just get out because it is counter trend trade. So if this was a pro trend trade, then definitely you could have holded the trade. If we get a retest around this area, then yes, there is a high possibility we can go at least to this area. Then your risk reward will be, I think, 1 to 2, or it can be 1 to 3 also. So yeah, let's see what we get today. Euro USD, very amazing reaction from that area. And do we have any news or something? Because it is moving way too aggressively.
We had GBP. GBP. I mean, No, let me just
No,
in
we don't have
Portuguese
any
is coming.
news. There
We had
was
before, no,
Right
news.
now, in
before.
the last couple,
Yeah, there
you
was.
mean the last
There
Yeah,
couple of
was.
40
minutes?
minutes. Yeah, GDP.
Yeah, yeah.
Um, yeah, maybe something from Trump, maybe saying something. But aside from that, we just have the
Let's see.
press conference from Christine Lagarde. But I don't know if Christine Lagarde would impact the Dow, to be honest. But Christine Lagarde is speaking.
All right. This trade really, actually, I should not say this trade. This analysis was really nice. We have impulsive leg to the upside, breaking out of this structure. We already swept the daily lows, and Fibonacci is clean. Even if I see the 200 EMA, yeah, it is also bullish. So this made sense to me. And USD JPY was amazing fall from here. Let me see how many. It is, I think, 5,000 pips, if I'm not wrong, or 500. I think it is 5,000.
500, yes.
Oh,
500.
it is 500. I was considering this point. Okay, 500 pips. I haven't seen this big of a drop or rise on Forex pairs. Even this drop, let me see what it was. Okay, it is even more. It is almost like 700 pips.
Yeah,
So, yeah,
they are
these,
still extreme. They happen quite quick, quite um,
yeah.
frequent. It looks like it might happen more often, but they don't. They don't happen that often
Hmm.
at all. And that's why you can. That's how you can recognize them, right? Compared to the long term expectation or long term average, they are multiples of the average.
All right. By the way, this daily Fibonacci, we broke out of the structure, we took out the liquidity. So I think the daily time frame here can be the swing trade price. Maybe you can look for consolidation here and there, and you can look for these highs. But again, it will take a lot of time, maybe a month or two. Let me see how much time. Okay, this was a really good move here. It took like 3 4 days, but this is a very big of a leg. So I do think if you're a swing trader, this can be the potential entry for longs. And there is also a very decent demand area. If you see here on the weekly, yeah, weekly is also making sense. We haven't swept this high yet, so I do think this high can be tested in near future. Of course, this was a very abnormal move here, but you couldn't have expected this move. Of course, you could have said yes, this was a liquidity point. Price fell off, but this huge of a momentum, it happened in like 8 hours, in 6 hours actually. So quite aggressive, and yes, I missed gold actually. And let me see what it is doing. And of course, Victor and Pedro also can share your views on gold. All right, daily time frame. Okay, if it closed like bullish engulfing, I think tomorrow can be a bullish day. So we have to wait for today's candle. If it rejected like with a big wick, then it will be a problem for gold. We can see more momentum to the downside. But if we close like this bullish engulfing, then I do think we can push higher. Let's see to where. Okay, at least to this area. So now this is the area we need to see. If we hold this area or we reject this area, then of course this can be a retest area, then continuation to the downside. Today will be a make or break thing for gold. I have to see how this daily candle close, and then I can plan my trade. You might be noticing I am just giving some intraday buys type of thing only, because I am that kind of trader only, where I'm talking about intraday moves. Tomorrow it can be a buying or selling day. I'm talking about that. So if you are a swing trader, then definitely this may cannot help you for that. Weekly time frame can be a good time frame, and yes, actually weekly is also rejecting from this area. We have like one day left. If we close with a big wick, I do think weekly candle again can push higher, because these candlesticks, they do tell some kind of story. So if you see this candle, it was a way too aggressive momentum. You could have said yes, next weekly candle may can be a bearish candle, which it did. And look at this candle, it was a big wick with a rejection. You can easily spot that maybe next candle can be a bullish candle. So if you do this small thing, I think this also can be a added confluence in your strategy. And look at this week also, it was a weak candle, so this week we got some bearish momentum. So yes, if it closed like a big wick, I do think next week you can push higher, and maybe you can. You don't even have to catch trade all days. If your bias is bullish, maybe you can take one or two trades in a week. If one is a stop loss, one is a win with a decent risk to reward, it is still gonna be playing in your favor. So let's see how this weekly candle close. I think it also depends on this daily. If we close like this bullish engulfing, I think this is fine. I think next week, even if we pull back to this area, we didn't breach this low, still we can have a possibility to reject, because this candle is having no wick. So in near future, you may can see a test of this area. But of course, you don't have to marry to this no wick candle. You can easily take opportunities as you are as the price is printing, as market is moving. So yes, you can. Yeah, let's see how this daily candle closes on this particular pair, which is gold.
Yes,
Marvin
there's
Chetty. All right. Yes, I'm sorry I
yes.
interrupted you.
Let's No, no, not problem at all. Primal was the user. Thank you, by the way, Primal, for making and asking those questions. That shows you want to learn, and that's the right attitude if you're coming to trading, and not thinking things already, or you have the key to the market. It's by coming humbly to the market and see what you can learn, and be very uh respectful of the market, just like a sailor is of the open sea. Um, Let me see here. Let me go to the. Let's go to what a quasi is and a quasimodo. For those who have seen me do this before, or Pedro explain about the quasi, please bear with us as we explain it to everyone who is joining us on our show. So let's do that. On the quasi is a very powerful, very useful, versatile chart pattern that you can use. Even if you're new to trading, actually, it's very, very good because it gives you the framework, a complete framework to understand if whether the market is wants to reverse or not, and that's a huge thing. If you can identify when it is trying to reverse, and did it succeed in reversing in a timely fashion. Everyone can see the market bounce and went the other way, but the earlier you can understand that it is succeeding in doing so, the better you can profit, or the more you can profit from these moves. All right, so basically you have the established, the classical pattern, which is the head and shoulder. Nothing nothing difficult about that. It's about the one uh, peak. In this case, it's a bearish one, so one peak with each side a what is called lower peak, which are called the shoulders, and typically this would be called the head, left and right shoulder, and this is the head and shoulder, right, as the name says it. And the one of the hallmark signs of head and shoulder is that you can see symmetry, right? So the tops, not perfect, but the tops of the shoulders are typically roughly the same height, as well as the bottom of the shoulders, meaning these two areas. And it indicates, as you can see, a trend, an uptrend, turning into a downtrend, right? That's basically how you get the head and shoulder. If you put the uptrend with a downtrend, you get the head and shoulder, right? That's perfect. That's nice, and it's very powerful. However, the market doesn't move with that kind of symmetry all the time, and it gets tricky. And there comes the quasimodo. Quasimodo is and short quasi. What you're looking for is, one thing is, you still have to have the established uptrend, right? Which are these 3 or 4 points, and that gives you what is called the neckline. That's the break of structure, BOS, and it gives you, as long as we are still making higher lows, the trend is intact, and there is no sign of any reversal. The moment we break that line, there opens the door. And in my vocabulary, that's when the quasi gets activated, at least the pattern, and I start looking for this possible right shoulder being created before it does it, right? So as soon as price is breaking the neckline, I'm already looking for where could that right shoulder be. Before I go into how I trade it, the Quasimodo is it could be something like this, totally not having any symmetry at all compared to the head and shoulder. This could be a perfectly a head and shoulder for me, not a head and shoulder, a quasi. I mean, it still satisfy all the criteria. Established uptrend, break of the structure, and coming back, retracing a great deal of the move down. Even though this is a quasi as well, I don't trade those, right? Because it needs to have a certain limit on what kind of how much retracement is needed, right? So that's the top, from the top to the bottom, and you can be flexible with this. You don't have to use the 50% retracement. I do. I do use the 50, but I mean, you don't have to limit yourself to only the 50. You can use any number you want. But in any case, the point is you want to be uh, somewhat selective in any case and not trade, for example, these ones, because otherwise your win rate will suffer quite a lot. All right, so that's the quasi. As you can see, it looks quite different from the regular head and shoulder. But if you have the right framework and rules and definitions of what an established uptrend is, where do you put your BOS, your break of structure, the neckline, where is a valid entry to take, and what kind of retracement they are still considered a possible right shoulder, then it doesn't matter how it looks, because as long as it complies with the, it meets the requirement to be called a quasi, then it's a quasi, no question about it. And the way that I trade it, there are a couple of ways to do it, right? The typical way, or the classical way that head and shoulders are traded, there are many ways to trade them, but one of the classical ways to trade them is to wait for the market to actually close, to conclude the pattern. The pattern is on, in the case of head and shoulder, I'm going back to the classical pattern right there, right? The pattern is when when you have the neckline, which normally is similar on for the bottom of each shoulder, when that level is confirmed, meaning this is uh, the completion of the head and shoulder, meaning some people will then uh, get in, put their stop above the last swing high, which would be then the right shoulder, and they would, this is the classical form, they will measure the height of the head to the neckline and use that as the measured move for the move down. And basically, that's one of the classical ways to trade this. There are other ways. You could go to lower time frames and catch either before the break, and you put your stop right here and your stop above that, or you wait for the oops, you wait for the hold on, you wait for the structure to actually close, or move away from the broken line, and either halfway through or above that, meaning your entry would be a little bit lower, but a bit more with confirmations. Those are the ways of the head and shoulder. However, in my way of trading the quasi, and you can ask Pedro. Pedro has a slightly different way of trading it as well. Although we there's a lot of overlap. One of the things that I do is I wait for the market to actually break the neckline to start looking for the there we go, the break of the neckline, and then whenever it starts coming back up, starts retracing, I would, as I explained before, I would measure this and only be looking for entries, price action structures that are above the 50% retracement, right? So I'm gonna indicate it here with a, why is that not working? I'm gonna indicate it here, right there, and I'm only going to be looking in this area, and not the whole area. Of course, I would use, in my case, I would use entry order block on the quasi. These are order blocks that are not necessarily fresh, but they are part of the quasi, meaning they have to, you know, not be too many, because otherwise the whole quasi is not in the right time frame. And I will wait for the market to get to these levels, and there might be one there, there could be no other, or perhaps something else here. And I'll wait for price to actually get to these level, and I'll go to the lower time frame to understand whether or not the market has, indicated with enough price action confirmations that it is reversing. And once it reverses, then I can I can, confidently take the trade. And what I would do is I would either put my stop above the level that is being reacted upon, target in principle the low of the structure, and sometimes depending on the situation, I would have my stop above the head of the pattern as well, right? So either that, this is the more conservative move, or a stop loss, and this is the more aggressive, more higher win risk reward ratio, and target the low or something bigger on a higher time frame. Like this could be, let's say, an H4 or H1 target, and extended by quite a lot. That's basically the quasi and how I trade it. And if you have any questions, just let us know, and I'll gladly talk, answer them. Primal is no problem, Primal. That's why we're here. Looking at the gold at 5 minute right now, and could see it forming something like that. All right, let's take a look at a current uh, price action and pattern. All right, so what do we have here? I always start with the monthly just to understand if there are higher time frames at play. We are going away from the monthly. As you can see, this is a fresh order block that was retested as a fresh, immediate retest. So, automatically I expect this to happen. But that's on the monthly. The weekly, what do we see? The price reacting of a monthly, going away from it, but hasn't reached the weekly yet. So I'm a little bit cautious with that. I would have wanted price to actually reach the weekly level below us before thinking about a long term or a durable reversal. Meaning, I have to be a little bit cautious because I would expect price to come back and actually needing to reach this level before having a much bigger push. But I mean, this is the weekly, so even a couple of candles can be plenty of indication to trade. All right, so that's the weekly. The H1, see, this is a little bit tricky because the structure to be retested is above the weekly, and I would have preferred, if you're going to use the weekly, you need it to be tapped into, and it hasn't happened that yet. So whatever you do, consider that it's only a daily structure and not a weekly. So we have a possible bullish engulfing being created here today. We'll have to wait for the end of the day, and you can trade it tomorrow, but not today. Let's go to the H4. Do we have a quasi? We don't have a quasi here yet, not in this time frame. We do have a couple of fresh order blocks here created by the 4, and there's overlap, so it's one big area. This area is fresh. And I would wait for price to come back if I want to use that comeback to move out of it, right? So that's the idea. That's not useful right now. On the H2, there is nothing here, no quasis, in my opinion. This is the low, but that's not this is not a left shoulder to me. I would consider this the left shoulder and that the neckline. Why? So this is the neckline. It's very important you have clear rules. What is a neckline? How do you objectively target it? Because this looks, visually, it looks like a possible neckline, but I want the reaction to be with potency, right? I want to have a potent reaction after supposedly creating the left shoulder, and I don't see that there, right? It's a kind of a weak move That's not a good left shoulder. Much better is when there's market is actually pushing forward with potency, with strength. And this is a much better move compared to that. That's way elongated in time. So to me, there is no quasi yet. If you go to the H1, perhaps on the H1 there is. Let's look here. Yes, yes. Okay, so this is a one. This is a 1 hour neckline. So that means the H4, H2 we can disregard. So we do have a quasi now, at least on the hourly. That's the left shoulder, neckline head, breaks it. And now we wait for price to come back to where? The H4. And because we're on the 1 hour, we wait for a refinement, because this is way too big of an area to actually trade successfully. So as you can see already, this is the order block. This is the entry order block that is, screaming at us, please, please trade me whenever I get touched. If you don't hear it, you may have to, put some earplugs and I don't know, try to be to hear that inner voice, or maybe it's not inner voice, the voice of the market. All right, so that's it. There's nothing else in. This is the head, and this is the area indicated by the patterns, by the candlestick patterns. That is the refinement of the much bigger area. So this is the area that I would. This is much higher time frame than the one you mentioned, primal. But this is the area that I want to be looking for in, if the market's going to reverse and it's going to do it, it can just reverse and continue. That's always a possibility. And if that happens, a quasi trader will not be participating. If it is going to be reversing using a quasi, this is the likely place, or the likely area that it might use. And it may not be perfect. It may squeeze it, but it has to reach it in any case. And you could see even this happening, right? Price coming back and then stays here for some time. It doesn't look like it's going to react, and then suddenly it goes up, right? So it doesn't have to be, perfectly like that as you would, but that's the general idea. Come back to that area, and then on the lower time frame, it needs to start setting up again. With reversal patterns, breakouts on lower time frame, you can get the idea, the hint. Okay, the market is ready for that completion of the quasi, and your target would be the highest point between the head and the time it came down. Meaning, if it's going to move away from here, this is going to be the TP. Let's see right there. But if if the market goes higher, then the TP should be there. You understand what I mean? Maybe this may not be the recent high that it will get. It may get higher. All right. So this is a quasi, and you mentioned about let's see. We have a 15-minute. Let's take a look on the 15-minute. What do we have here? Do we have a bearish? um, let's take a look. Let's take a look here on the 5-minute. What do we have? The hourlies. There's nothing in here, right? So this is the bigger, right, on the hourly. On the hourly chart, bigger pattern. This is where I want to be entering and holding it all the way up from here. You put your stop below there and target this high. Okay, or something in between could be as well. However, you can apply the same price action, you know, reading skills to the current area. Are we? This is quite a very powerful move up, and the U.S. market opened already, so we're gonna switch to Samir soon, but we can go to this area and see if we already have some kind of a reversal pattern coming in. This would be the high. This is the highest point, so that is the default a high or the head, and if we go back, there isn't a neckline, not even on anything on a 5 minute perhaps. But you shouldn't be looking for quasis on the lower time frame. You should have them on the higher time frame first, and then you break down to look for possible areas of. I don't see anything here, to be honest. I would be all the way down here for the neckline. That means that it can do a lot of things in between and not break any structure. So to me, this tells me, the possibility of price going higher is still higher, is still high, still quite present. This is quite possibly in the cards, and it has to actually break this low before we can expect price to be much higher. Okay.
Yeah, the market open.
I like big
That
That's
D
is
right.
guy. That's a very nice sense of humor. Blink twice if you need help. Um, let's see. When I touching, well, touching. I don't know what meaning you get behind the word touching, my friend. Big D guy 666. I mean, just plain simple touching. Price getting to the area and touching. I don't know what you're talking about. Let's just leave it like there. But it's just there. No other meaning other than just plain simple overlapping price getting into an area, and that's what I mean by touching. I don't see a quasi here, so there's nothing for me to look for a short. And even then, going short against this move is not a great idea, especially if the hourlies is not telling you that you should be shorting. The hourlies is, barcoding a little bit, but it's too early to say anything. But let's go to Pedro or Samir, who is getting ready for
Yeah.
some action.
all right.
Samir, did you
So
trade anything?
just seeing the US 30 rejected from that fair value gap that I was having. And now, if I would have entered aggressively here, it would have triggered my one to one. But we don't want to get FOMO here. Price is already at the trend line and VWAP. We are still away from VWAP. So I am thinking if we go to the 3 minute time frame, I am thinking, can we use this area and we reject from this area to maybe test the VWAP because we are already on the trend line. So that can be the analysis for the day. But I don't enter like this. I do need some kind of pattern. And what can be my pattern if we print just small consolidation here? That will confirm me, yes, we can test the VWAP, and that will be a selling trade for me. NAS 100, NAS is going to the downside, and let's see if we are respecting this fair value gap or not. Yeah, there is. If I extend it, there is also some kind of support and resistance areas. 15-minute way too impulsive. Euro USD. All right. Still, this was this trade that I was planning is still running. Gold. Okay, why I have this? Okay, this is some kind of area. Let's go to the daily time frame. Yeah, daily is still open. This is a fair value gap, but that doesn't confirm anything right now. We broke out of the structure. Right now, gold is in a very tricky area, as I mentioned. I think we should wait for today's close. If today's close happens somewhere close to that, tomorrow it will be a very beautiful buy if I draw my Fibonacci like this. If we can retest this area, that will be good. But let's focus on US 30. Let me delete everything. Okay. Um, I think I should not sell here. I should wait for that high to be gone. That will give me a more good area to sell from. Of course, if we come lower and do something like this, that can be a buying scenario for me. Yes, NAS 100. Okay, we are going lower. So I think US 30 also can go lower. But again, pattern is not there yet. Liquidity is gone. one push higher. We can even take this high out. That will be even better for me, and do something like this. That will be good. And I will like to sell this pair. Yeah.
What a breakdown. What a meltdown of the
What about
equities. Look at that.
NAS? Yes, NAS is going lower actually. If I draw my
Let it drop.
Fibonacci like this,
Let
It's a
it drop
huge
more.
drop.
No, actually, let S&P drop as well.
That's a gigantic move in
Let,
only what,
I don't know why it is frozen.
couple of minutes.
All right, this is good. Yeah, I know it is falling, but can this 70% area get respected? We will only know if we consolidate around this area. But if we impulse to the downside, then of course we can take this low out also, because the momentum is there. And yes, we can go lower. US 30, still nothing. Euro USD, the trade is on. Gold, I'm not interested in gold. I'll wait for today's daily candle to close. What if we close somewhere close to that? Rejection of this fair value gap. Then what can be the plan? Let's discuss about that. Okay, what if we close somewhere like this? Then it can be a selling scenario. You should know how to build the story. That's how I am building the story. Because if we printed like a wick rejection, tomorrow we may can go a little bit up, and then a rejection to maybe these areas. If I got the 4 hour time frame, the leg is still bearish. Okay, now it's a good sign for me. US 30 is trying to push to the upside. VWAP is way too away from the price, so that's why I don't want to take a risk here. Buying here will be aggressive. Already we have pushed higher. Selling here is also will be, I'll be selling at like without any confirmation. So we need some kind of liquidity that will fuel the price to go at least till this low. Maybe VWAP can be tested and then again going higher. So this is what I'm planning for US 30. 15 minutes. Yeah, there is a small wick which was never tested. If I can get cells around this area, that will be wonderful. All right.
Someone trolling in the chat. Big D guy.
Where is that
Trying his best to,
history teacher?
yeah, someone is not getting enough attention somewhere and needs our
Yeah.
attention. No problem, my friend. I'm happy to interact with you anytime. Let's see, but there was someone who actually had a question that I wanted to answer.
All right.
So you don't really use quasi. I know I'm going back from Samir.
Mm-hmm.
Um, Primal Light is asking quasi on 1 minute, 5 minute for entries. Yes, I do. But the thing is, I don't use them in isolation. I don't use them on their own. They need to be part of a much bigger picture for me to use the 1 minute and the 5 minute. Meaning, I need to have, in my case, you don't have to trade exactly like that. But what I use is H4 structures, H1 or H2, right, in alignment with that H4. And when that happens and we come back to that level, as the one that I showed on gold, where I said it needs to come down and touch it, that's the area when price reaches the area of interest. That's the moment I go with a quasi on the lower time frame, and not before that. I don't have, I your win rate, it will matter a lot whether or not you wait for the right moment, the right level, the right area, then to go to these smaller time frame like the 1 minute, the 5 minute. There's a lot of noise. You don't want to be getting into these lower time frame noise kind of patterns unless you have noisy time frame unless you have higher time frame, H4, H1, indicating that this is a great area to expect the reversal or the reaction. So hopefully that answers your question, Primal. Thank you for being here. Another question.
Abra.
Big D, we want to hear Big D. That we are happy you are with us, and thank you for your interaction. As as many people are in our chat, as that is as much individual sense of humor as there are, and we appreciate all of you. So don't you don't need to hit the like button, subscribe to the channel, Big D, if you haven't done so yet. But we have Abra here. What if there are multiple possible entries on the quasi factor? How do you choose the one? The reality is, Abra, you don't get to choose the one because you don't know which one it is. What you need to do is calibrate your criteria and your definitions of quasis. And I'll give you an example. I'll come back to you, Samir, just to
All right.
explain this. If you have this, as I explained, you have the quasi, price comes back, and you're looking for that possible reversal. When this happens, let me move this. When a price is going up, you don't know yet where it's going to reverse. You never know in advance. In trading, you nothing is certain. So there's nothing. You shouldn't think about the one reversal area. What you should do is, and this is what I do, and you could find other ways to approach this, but what I do is I only trade when there are a maximum of 3 areas above the 50% retracement, right? So if we have, in this case, that would be mean it only has 2, a maximum of 3 areas. If it has a maximum of 3, I will consider this to be the right time frame, and I will trade that time frame. And meaning I will look for the trigger on each one of these areas. So I'm willing to lose 3 times, if I happen to get 3 signals, which doesn't happen very often, on each level. And sometimes, it may, on the first time, the first area that it triggers, that's the reverse. But sometimes, a lot of the times it isn't. Sometimes it takes 2 times, 3 times. So I get multiple entries, and by definition, not all of them are gonna work. Because otherwise, you never know. It's not the first one, it's not the last one, it's not the middle one per se. It's one of them that triggers, right? So you have to take that into account in your risk management as well. If you're a one trade a day kind of a guy, you have to adapt this because you're gonna have multiple trades possibly on that day. And you should accommodate this. This is one thing. And if I have, let's say I have a pair or a pattern that has four areas, I will then consider that to be a too small of a time frame. I'll have to go a time frame larger, and I wouldn't trade in. Let's say this is the, I don't know, this is the 5 minute. I would say, well, that's too big of a pattern. I'll have to go either the 15 minute or just not trade anything and go to a bigger time frame that maybe only has, it has a maximum of 3, but maybe only has one area, let's say the 15, and that's the area that I trade. So I let, by the rules and the definitions of the pattern, and the limiting the number of areas of interest, automatically it will give me the right time frame to look for entries. But so I don't get to choose how many entries. It is the time frame that will let me. But the one is the rule is 3 maximum. You can use 2, 3. You can try 4, but I decided to keep it at 3. Hopefully that helps. Going back to Samir.
Yeah, if I look at that, there's a few examples in here on the chart. Okay.
Yes, definitely.
Pound dollar, for example. this is a Quasimodo. Okay, so basically, when you're looking at which levels to choose to trade from, usually I tend to choose between. It's not about like 3 levels, of course they can be, but usually price tends to react from 1, 2, or 3 levels, and you want to start considering them from the top of the top, okay, from the higher high. And that's why the left shoulder also quite matters in here, or at least the price action that is created after the break of this left shoulder. Okay, this top becomes the left shoulder, and then this becomes a head. Because usually when you do break this top, there's a specific decision point that makes price break this top. Okay, and that decision point is quite important in here. Okay, there is a reason why price maybe is trying to maybe respect this level as a double top, not really breaking it, but then there's a decision. That decision usually ends up creating an important demand zone that actually takes the top, or then another level that stays behind is this level of support resistance. So you want to see a little bit around the structure that creates or that breaks this top. That structure starts to matter. And then we eventually end up creating the top, and then price eventually starts creating potentially now supply levels or the blocks to the downside if price actually now has intention to go down instead of just continue to go higher. Why this level also matters? Because usually when price just breaks this level, one trade that many people try to trade is the breakout setup. Price broke this high. Many people are trying to trade this level reaction and continuation. But for the Quasimodo in this case, and a bearish Quasimodo, actually price will eventually end up breaking this level back into now this previous structure that was underneath. Okay, it's kind of a similar scenario in here. Price eventually just continues to move down. So the decision point also that price makes when it does decide not to respect this demand zone continuation to the upside, but to break it and come back into the structure, which usually tends to be somehow close to being aligned with this left shoulder, that level also is quite important. So usually there's going to be a decision point at the highs where it's actually one of the first decision points that, yes, the sellers are in control. Sellers want actually to push price to downside instead of going up. That tends to be one of the first levels. Another level can be around this demand zone that managed to break this level, and then usually in alignment with some maybe order block or supply that's going to be a decision point also now to break below this level. So that can be another one. And then there's maybe sometimes some in the middle in here. Now, the good thing with price is that price sometimes reacts from the levels as it moves, which means that the levels are not going to be left behind. So when you are actually then trying to decide in the future which level do you want to trade from, between maybe this one or the extreme one or this one, or sometimes there's a little bit of a decision in here and this level is a little bit higher than this one, is that actually you can try to see which levels are still fresh. For example, when price is creating the top and it moves down, maybe price already retested this level, so already removed the orders from here or committed or just took the orders already from there, and now it's moving down. And basically what I mean is price already is doing something like this. So price, instead of just breaking, computing, go, price maybe already reacted from here again, and eventually goes to the downside. Something that also tends to happen, and that's actually becomes a Quasimodo within a Quasimodo, and then the Quasimodo on the right side, which is price actually creates this level, leaves this level behind, reacts from here, goes down, reacts a little bit, maybe goes down again, comes up, reacts from here, and goes. And now we have a new Quasimodo created in here. We have these left shoulders. We have now price that reacted from that level. That is a tradable level in the lower time frame as price keeps moving, and now price moves to downside. And from here, when eventually price breaks now this level, you have a bigger Quasimodo. And I hope I'm making myself clear. This is the left shoulder. This is the move. This is the head. This is the break. And eventually you have this right shoulder from the red, basically the red Quasimodo, which is in alignment a little bit with the green one. And now you have a new entry point, which is this yellow line in here, which is basically the same one. But now within this level, we do have now this low, it's important. And now you have a little bit of the new structure that maybe price broke above, decided to break below. So it's in alignment with that level again. And it keeps going like this. And you have many examples like that. And you can now continue to check the pound dollar, the reality of what happened in here. So we have structure, this one in here. So we have structure. Okay, let me just go back to my green cover. I hope this is one. So we have this structure, we have this basically left shoulder. Something interesting also with left shoulders, okay? And you see, if you want to actually eventually be a little bit more certain on the potential reversal of a pattern, just wait maybe for the left shoulder to be created as a double top. That's really nice. Maybe even wait for price to break some structure just to start showing indication that price wants to go down, and then you have a final manipulation, and then you have this Quasimodo. Okay, this is actually a little bit more of a bigger Quasimodo in the higher time frame, or kind of a little bit more structured into a reversal, which then you can look at this almost as a week off model as well, which tends to be also a Quasimodo in itself. But there you go. So what two levels do we have in here? So we have the top, okay, so that's basically created, but this is the first supply level that is left behind, and then price compresses a little bit, and this is a new supply that's created when price breaks this low. And there you go. We have this Quasimodo. Now, two levels that we left behind. Basically, you have this one and you have this one. Price came here. It reacted initially from this level. Personally, I like to trade the extremes, which means I will be waiting for price to trade a little bit closer, and you can also look at them in alignment with the left shoulder. Okay, in this case, actually, you can even look sometimes to expect price to react from the pip of if you extend the line in here. But in this case, there are two levels. I tend to react to wait a little bit more, but this is totally tradable. And actually, this sometimes, as Vitor mentioned, both can actually work. In this case, both worked. In the case that price actually reacted from this level, so this was the fresh level that was still in here. Price reacted from it, start moving to downside, range a little bit, and then one of the confirmations that now I like to see in order to trade this level is actually a new low being created, which eventually happened. Okay. There you go. So now we have a new low being created, and this actually activates a little bit more of the potential move of trying to sell from that level. Now we have all this liquidity, okay, that can be collected in the future, and this is where you can actually eventually start anticipating that price may want to retrace, and this is where you start trading even along from this move. Eventually, price is reacting from something relevant to you on the left side. But there you go. Now you don't trade from this level anymore because this level was already traded. Oh, it should have been traded. Price already reacted from it. And now you have actually this level where price end up reacting. And there you go. And you have your trade again. So you actually could trade both scenarios in here. Okay. Sometimes price will just go there, doesn't or react a little bit from this level and then goes higher. Because when you actually want to trade Quasimodos as well, and even though price broke this level, yes, the ideal is for price to go all the way back to these lows and to target these lows, even maybe break these lows. But sometimes when price is moving, the only thing that price does is to react from the most recent zone. So basically price could react from here, but you have this demand zone, and maybe price could just react from here and just continue to go to the upside. Okay. So if you actually want to then eventually look for a little bit of a bigger reversal, just start to pay attention if price is breaking lows on the way up. That actually increases the likelihood that price is eventually ready to make a bigger move to the downside. Otherwise, price can just respect this previous level, this demand zone, and continue to squeeze a little bit higher. But there you go. We have a good example in here of two levels being respected, and actually one and price respecting this level and breaking this low, actually it increases the likelihood and the odds that actually this level is going to be respected as well, and eventually price would move to the downside. And again, it filled the range once again. You can look at Euro Yen. It's quite similar, the scenario that just I tried to trade as well. So I have exactly basically the same thing. We'll have eventually, you can try to look for it, the decision point that eventually price managed to break. So we have this strong level of support resistance at around this level. And then you have this decision point. Okay, this decision point is basically where price got this first reaction after this move down. You can see it's a proper Quasimodo. Price reacted from here. Price started to move to downside, and then you have this beautiful sign. Okay, this beautiful sign basically it opens the door for price to continue to go down. Now that it wants to go down after taking that low, and then price just went all the way, collected liquidity above this highs. We have really 1, 2, 3, 4 highs. Then price created a little bit more. You want to see also a good approach is if price is compressing. Okay, so if price is compressing, there's a high likelihood that price eventually can also turn. And there you go. Price now went a little bit closer to the extreme. And then we have the second move. So there you go. We have, again, two levels, two moves in here in the Quasimodo that you could have traded. And if you actually pay attention to it, there's actually a new Quasimodo. And this is the example that I gave before, where you have a Quasimodo on the right side of the move, which is this one. Just change the cover again. There you go. We have the move. we have price creating a left shoulder, we have price breaking below, we have price faking out the level, and you have price going. And if you do have this move on the right side of the head, okay, in the future, there's a high probability that this level actually is going to hold price. Okay, so if you don't have that move, as price is creating before it actually drops, in the future, there's a high probability that price actually is going to respect that level and move. And usually these levels, as I mentioned before, tends to be in alignment with the left shoulder. And then this becomes a new structure. Unfortunately for me, I tried to trade from there. Price just reacted from the base of it, and then it dropped. So it's dynamic. We can pay attention to the levels that have been already respected or not. And with that, it's going to give a little bit more confidence that the levels that you want to trade from in the future. But yes, so you can be as dynamic as you want when you're looking for these patterns. And don't just be curious in terms of the traditional move that we look for. Also pay attention to how price behaves when it's creating the bottom. So when you do have kind of that left shoulder and price breaks, what type of behavior does this low has? Where is this low also reacting on the left side? Is it a good level? Is it not a good level? Maybe price is reacting from a great level, and actually this is just a continuation to the upside. This Quasimodo, instead of being a short, eventually is going to create as a long. So how is price reacting from here? Where is price reacting from here? What kind of moves are somewhere around here that you want to trade from? And that's basically it.
I got a couple of things
Right.
before we finish. Someone asking about euro dollar, and I think it's although we are out of time, we are going to be explaining, or I'm going to be explaining a couple of things I think are important for those who are trading euro dollar, and actually this also holds true for the other majors, but especially euro dollar. What we're talking about is this. I'm going to try to do this as quick as possible since we are, we're out of time. This is on the daily time frame, right? That's the quasi left shoulder, neckline, head. Price breaks the neckline here, goes all the way down to some structure from the left, which is not relevant right now. But then comes back, and there are three areas, right? Personally, I only use maximum of three areas of interest. You have one, you don't see it here. That's number 2, and this is number 3. Price reacts to the first one. And on the price action, you can actually we get confirmation twice that the market at sellers took control here. The question then is, where is the market going to go next? Are we going to go, we talked about this in the Discord community yesterday, are we going to go all the way to the weekly structure we have below? That's why we have a target there. Or are we just going to need a demand zone on the daily to perhaps come back and retest something higher? We don't know that. That's the unknown, right? So that's the
I need to go.
that's the variable that we need to deal with. And so the question is, and because we don't know that, what I would do is I would look for both sides. If there are reversal structures to give me longs, I will take it because there is a daily structure here. As long as it's not on the daily time frame, it's not close below it, it's still valid as a demand zone to push higher. And I'll also take, if there are opportunities to go short, right? And my stops are very tight in comparison, and I will still trade the short as well. And it doesn't matter which one is going to be true. Chances are one of them I have a good chance of catching, and I will lose on the other one, and that's fine. That's price of that's the cost of doing business. But as you can see, the risk reward ratio is handsomely compensating, even if I lose 1 or 2 or 3 in the direction that turns not to be right, because the stop loss is I'm using the high time frame, and I understand that if the market is coming back, it's likely to go all the way to the daily structure above, and if it goes through this, it's going to, like, if this is not going to hold it, it's likely to push down to the next level, which makes sense. So I'm trying to get in the intersection in the beginning of the move to catch the whole move, which will take, in this case, these are swing trades, so it's going to take a couple of days to to come to fruition. But let me go, before we finish, let me show a couple of things that we are watching. One is the market is supposed, this is the bullish structure, right? So the thing is, on the daily time frame, I want to see that this doesn't close, that price doesn't close below it. Hasn't done that yet. It has a little squeeze. So I'm still thinking, all right, what is the possible pattern that the price is going to use if we're going to still have this move? So we go to the H4. Do we have a quasi? We don't have a quasi. This is the reaction that we have. Lower lows, lower highs, but we did not break the neckline, right? So we still are not there on the H4. There is, however, a fresh order block here, which we did tap into, but I didn't trigger, that didn't trigger me because there was nothing on overlapping the H1, H2. That could still happen in the future, right? So maybe later on we get back and then move out without creating a quasi on H4, but giving us a fresh order block to trade from. That's something I'm looking at. But if I would need something on the H1 as well, and there we can see that there are the H, actually let's use the H2, which is perhaps a little bit more clear to see, which is this. This is the quasi on the H2. At least that's my point that I have. And you see it broke the neckline. The H2 neckline is not the same as the H4. This is the H1 neckline, right? Each time frame has its own neckline, and price might come back. And if it does, I'm interested in seeing on the lower time frame what the market does, because I want to catch this kind of a move where you put your stop there. And this could be something for tomorrow. It doesn't have to be happen today, and target the daily structure above. See, that's one point, one idea for the where you have alignment on H4, H2, or H1, and targeting the daily, or in any case, a move for the completion of the bullish structure. But if you and I mentioned both of them, sell and buy, right? So if you go to the if you look for the sell probability here, if you look well, you see the fact that the market did not break this line yet, speaks to the possibility of, just a continuation lower. We're making lower lows, but we're not making higher lows. This is, marginally below, but fact is it did not take it out, meaning, this could be what we're going to be doing. If that's true, what I want to go to is I want to go to the H4 and see if we have reasons to go for a short. And what do you see here? If you put on your, seller's glasses, do you guys see anything? This is the pattern, right? Do you see anything here? I'm going to do it slowly. The established uptrend, the break of the neckline, the continuation. There wasn't anything here to trade. But this is the left shoulder, head, neckline, and price created between the head and the lowest point, created a fresh, not a fresh, an entry order block short. So to me, this is the area that I want to be taking the short from for the continuation. Both sides looking for longs and short, and at the same time. So I want to be going long here, put my short there, target there, and I want to be going short here, put my stop above that, and going for the daily structure below. You get the point? I'm not trying to predict where the market is. I'm just positioning myself, recognizing where's that extreme that the market could go to before it reverses and continues in the opposite direction. And I'm positioning myself strategically, tactically, with a tight stop, but I'm trying to catch the bigger move. And if it goes long, goes short, I have a plan, and you should too, because the market, can do anything. Hopefully that helps those who are wondering about EU. You got to be flexible, and not being, closed tunnel vision into only looking for longs, only looking for shorts. Entertain the opposite side, see if there's enough reason, enough arguments for you to look for a setup as well. Sometimes I see a lot of times there are trades on both sides that are valid to be taken, even while perhaps on the higher time frame there's only one direction clear, but on lower time frames, on let's say the daily and the weekly, it's long, but on the lower time frame on H4 there's perfectly an opposite trade or against that trend, higher time frame trend to be taken for a couple of hours, and they're perfectly fine. They should not disregard them just because they go against the higher time frame direction. All right, that's it for us for today. Samir will before we go, I will say a few things on Discord today. This is the last day of April, the month where we celebrate the awesome, great community we have. And today is the last day. You can get a free account, a 20K bootcamp account. We have been giving out one every call we've had this month. So a lot of winners have their free accounts, have one free account. Today is the last chance. So if you have one, if you want to win one, then join us on the Discord community. You got to have an account with us to be, get the link, the entry for the Discord. But be there. Let's have some fun, share some experience, spend time together, and you have a chance of winning, hub credits and also a free account. That's it for me. Hopefully, you guys, and also we'll talk about that later on Discord and tomorrow. But the today's the last day of the month, so look at that monthly chart. How is it closing? Is it giving you any signs of market going in one direction or the other? The monthly is a gigantic, it's a juggernaut. You want to be listening to it, even though you don't trade it as setup. It tells you something. It tells you something, and please do pay attention to it when it does give you some signals. All right, that's it, gentlemen. Last words before we uh, go close
Yeah, thank
our
you.
stream.
Yeah, thank you very much. I
Thank you
just
so
got,
much. Yes.
yeah, just got TP on the S&P, so finally. Uh, yeah, so another week, another month, to be honest. Yeah, the trade, I've been trading since actually since you moved my chart. Yeah, this was my initial target. I went short from there. I was already looking for a short yesterday. Price never went there to the extreme, and now finally it reacted from the level I
Nice.
wanted. Yeah, to be honest, I wanted to trade this two times already. One was here, price never reacted there. Yesterday, price never went there, and finally today, it went there. But yeah, guys, thank you very much. It's another month. Tomorrow is basically bank holiday in many countries in Europe. In the UK, it's going to be on Monday, so be careful with those trades. There's maybe less volatility than usual. Also, it's the first Friday of the month, but we are not going to have NFP, so NFP is going to be only next Friday, next week. So with that being said, it's time to review your trading performance of the month, start to prepare for May, and enjoy. If you live in a country where there's sun, just enjoy the outside as well. It's important to get some vitamin D, which is exactly what I'm going to try to do. So yeah, thank you very much, guys, and I will still see you later on for the Portuguese live stream. If you do want to join us, feel free to do it. Thank you, Samir.
Awesome, guys. So, yeah, today I'm just waiting for US 30. Didn't got anything consolidating. Maybe I can plan for shorts, as I mentioned. So, I will be looking for shorts. With that being said, guys, I will see you on Monday. And please, guys, don't break your plan. It is almost the end of the week. Friday is going to be the last trading session. Maybe you can lower down your risk so that you should not have that guilt. So, yeah, I'll see you on Monday, guys.
Yeah.
Perfect. That's a beautiful wrap up here from the Fifers. We want to thank you for watching and keep tuning in. You guys make this channel what it is today. We reached 100K subscribers not very long ago. We got that beautiful play button from the YouTube, and we are still, ready and eager to keep on growing, keep on giving you guys as much value as possible. So don't forget to like, subscribe, and joining us as many times as you can, as often as you can. So take care and see you guys tomorrow again. And for those who are asking about how to get into the Discord community, on the dashboard, so you have to be part of the Fivers family, get an account. That's where you get the entrance to the Discord, and that's how you can win the free accounts. So see you guys there. Take care. Bye bye.
Bye bye, guys.
Take care, guys.